एवरीवन गुड मॉर्निंग टू ऑल ऑफ यू वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल के देखो क्रूड ऑयल को एक गैप अप ओपन हुआ है हल्का सा। नेचुरल गैस भी एक हल्का सा गैप अप ओपन हुआ है। इंडियन मार्केट जस्ट ओपन ही होने वाला है। इंडियन मार्केट को भी एक बार नज़र में रखेंगे अभी फिलहाल के लिए। 12:30 लंदन सेशन ओपन, ओपनिंग इवनिंग पे 5:30 न्यूयॉर्क सेशन ओपन। एफओएमसी का डेटा आया था। दे मेड नो चेंज एंड आज एक्सपायरी भी है सेंसेक्स की और बैंकेक्स की। इवनिंग पे 6 PM पे जीडीपी का डेटा इंपॉर्टेंट डेटा है। 7 बजे यूएस मार्केट ओपन और फिर 8 बजे नेचुरल गैस की इन्वेंट्री। कल क्रूड ऑयल की इन्वेंट्री भी पॉजिटिव ही आई थी। टुमारो यस्टरडे क्रूड ऑयल इन्वेंट्री इज आल्सो पॉजिटिव। एज एक्सपेक्टेड इंडियन मार्केट गैप डाउन। निफ्टी गैप डाउन ओपन, ठीक ठाक गैप डाउन ओपन हुआ है। बैंक निफ्टी भी ऑल्सो गैप डाउन ओपन। यहाँ पर एक रेजिस्टेंस एरिया था, मार्केट ने काफी देर होल्ड किया इस एरिया को, फिर ब्रेकआउट ही कर दिया था। ठीक है, तो सुपर बुलिश बना हुआ है मार्केट फिलहाल के लिए। आसपास एक रेजिस्टेंस था, उसका ब्रेकआउट हो गया काफी देर होल्ड करने के बाद। क्रूड ऑयल तो सुपर बुलिश बना हुआ है, कहीं भी नहीं रुक रहा है किसी रेजिस्टेंस पे। इंडियन मार्केट कंटिन्यूसली फॉलिंग, मुझे लग रहा है थोड़ा सा शायद नीचे आके एक बॉटम बनाने की कोशिश करेगा। सेलिंग प्रेशर काफ़ी हाई है, कल जिस तरह से कॉल राइटिंग हुई थी। निफ्टी में ट्रेड करते हो तो निफ्टी में एक 24,250 का कॉल का ध्यान रखना। गैप डाउन ओपन हुआ है, अगर ये वापस आता है 111 110 से 120 के बीच में, वहां पर इसको शॉर्ट कर सकते हैं फॉर इंट्राडे। कैंडल ध्यान रखना ओपन इक्वल टू लो ना बने। 24,250 के कॉल में अगर और ऊपर आता है तो 200 से 180 के बीच में भी एक मेजर रेजिस्टेंस है, वहां पर भी एक शॉर्ट की पोजीशन बनाई जा सकती है वहां पर। Continuously Indian market down, currently almost 1% down, 279 point. Sensex almost 900 point down. भाई कल नेचुरल गैस में भी एक सेलिंग का टारगेट मिल गया था हमें, उसके बाद से फिर एक सडन मोमेंटम आया था, साइडवे चला गया था। देखते हैं आज फिर से कुछ होता है तो। बिटकॉइन में वही कल के लेवल बताए थे, वही है। 1 आवर टाइम फ्रेम पे कुछ चेंज नहीं हुआ है। सेलिंग आ गई वहां से, और 1 आवर टाइम फ्रेम पे रेजिस्टेंस और सपोर्ट कल बताए थे ना, सेम ही है। अभी कुछ खास चेंज हुआ नहीं उस रेंज के बाहर। जब तक निकलेगा नहीं तब तक कुछ नहीं है। मैं फिर से रिपीट कर देता हूँ, थोड़ा सा टाइम दो, एक बार क्रूड ऑयल के लेवल पहले मार्क कर लेते हैं। लग नहीं रहा क्रूड ऑयल पुल बैक देगा, कंटिन्यूएशन में चलने की कोशिश में है क्रूड ऑयल भी। Price rise on report of US considering military option to break Iran deadlock. रेजिस्टेंस तो है यहाँ पर, ये फिर भी रुक नहीं रहा है क्रूड ऑयल। लगता है सुपर बुलिश हुआ हुआ है। एक बार नीचे आता है 10,386 के नीचे तो फिर यहाँ पर एक सेलिंग का प्लान करेंगे। ओवरऑल तो बुलिश ही है, कहीं से भी नहीं लग रहा कि रिट्रीट करेगा प्राइस, बट लेट्स सी, कल का एक रेजिस्टेंस जोन और है। सेलिंग में ज़्यादा रिस्क नहीं उठाएंगे अब। कि कैंडल देखो कि क्रूड ऑयल में ओपन इक्वल टू लो बनी है, लुक्स लाइक कंटिन्यूएशन में है। शॉर्ट मत करना भी अननेसेसरी, देखेंगे और कितना मूव करता है, क्योंकि जब तक कोई रिजेक्शन कैंडल फॉर्म नहीं होती शॉर्ट करना रिस्की है बहुत ज़्यादा। Still market down, wow. Nifty almost 300 point down, spot crude almost 400% down, 400 point down, up. जितना ऊपर जाता रहेगा ये क्रूड ऑयल इक्विटी मार्केट पे सेलिंग प्रेशर उतना ही ज़्यादा इंक्रीज रहेगा। कल देखोगे ओपन इक्वल टू लो है क्रूड ऑयल में, ये ऊपर क्लोज होती है तो फिर ये लेवल भी नहीं रुकेगा इन द सेंस ऑफ, और वेट करना पड़ेगा, हमें लगता है मार्केट और ऊपर जा सकता है उस केस में। ऑल टाइम हाई लग रहा है वापस एक बार फिर आएगा, कोई रेजिस्टेंस भी नहीं है इसमें तो अननेसेसरी शॉर्ट नहीं कर सकते, जाने देते हैं प्राइस को। कल का एक मेजर रेजिस्टेंस था वो ब्रेकआउट जिस तरह से हुआ है, लग रहा है होल्ड करने के मूड में नहीं है मार्केट। कैंडल यहाँ क्लोज होती है तो फिर ये लेवल भी काम नहीं आएगा, याद रखना शॉर्ट तो अभी नहीं कर सकते जब तक कोई रेजिस्टेंस फॉर्म नहीं होता फ्रेश। ठीक है, देखो क्रूड ऑयल में भी लास्ट कैंडल ऊपर क्लोज हो गई है, थोड़ा रिजेक्शन कैंडल है बट अभी भी कंफर्मेशन चाहिए। कैंडल बड़ी इंपॉर्टेंट है क्रूड ऑयल में, क्लोज होती है लेवल के नीचे तो एक मोस्ट प्रॉब्ली सेलिंग का ट्रेड प्लान हो जाएगा। देखते हैं क्लोजिंग कहाँ पर आती है, इंपॉर्टेंट रहेगी। और कोई रेजिस्टेंस अब है नहीं, एक नीचे रेजिस्टेंस था उसके भी ऊपर निकल चुका है। सो आइदर इट मेक्स अ फ्रेश रेजिस्टेंस और नो अदर ऑप्शन वी हैव राइट नाउ। मिनट रह गए हैं, कैंडल क्लोज होती है तो एक थोड़ा सा रिस्क लेंगे, वैसे तो कुछ बन नहीं रहा खास क्रूड ऑयल में। क्रूड में बाइंग करें क्या, और कहीं अपसाइड लग रहा है क्या? मुझे लग रहा है शायद थोड़ा और ऊपर जा सकता है। अभी तो न्यूज़ बेसिस चल रहा है, पता नहीं क्या मूव आ जाए। कैंडल देखो अगेन क्रूड ऑयल में ओपन इक्वल टू हाई बनी हुई है। बाकी बाइंग का भी कोई सेटअप दिख नहीं रहा है फिलहाल के लिए। थोड़ा स्पेस है ऊपर और 10,880 10,960 तक जाने का। तो गैस में देखते हैं थोड़ा सा और नीचे आता है तो। इसमें देखो ऊपर एक रेजिस्टेंस है क्रूड ऑयल में, ये एक जो एरिया जहाँ पर अभी रुक रहा है दैट इज अ पॉइंट ऑफ इंटरेस्ट कह सकते हैं। एक तरह से ये भी रेजिस्टेंस क्रिएट हो सकता है, बन सकता है। एग्जैक्ट रेजिस्टेंस तो ऊपर है, इसमें कंफर्मेशन अगर मिल जाए तो दैट इज ऑल्सो बिकम अ रेजिस्टेंस। निफ्टी भी लग रहा है थोड़ा सा स्टेबलाइज हो रहा है, ऑलमोस्ट 1.5% डाउन है। 360 पॉइंट, सेंसेक्स ऑलरेडी 1100 पॉइंट, दैट इज ऑल्सो डाउन। एक्सपायरी है सेंसेक्स में।
quarter. As I say, you've beaten estimates when it comes to first quarter net income. Are you feeling positive as you look ahead with such an uncertain geopolitical backdrop?
Yeah, good morning, Lizzie. Good to be on the program again. Look, the first quarter of 2026 has been very special for Erste Group since we are for the first time consolidating our newly acquired Polish business. And beyond this exciting moment, we are very happy with the financial performance also of the formerly existing franchise. I think the numbers say everything. We are performing well on the operating side. I think we have very, very sound risk profile, and altogether this is very promising for the rest of the year, despite the very difficult environment that we are operating in.
You mentioned the Polish acquisition. You're clearly working on the integration of that Polish bank. You just put your own sign on the bank's office in central Warsaw a few days ago. What are the main challenges that you see for that integration in the next couple of months?
Yes, very well observed. We are moving ahead very quickly. Our Polish colleagues are doing a fantastic job. And just this last weekend, we've turned from formerly Santander Red to Erste Blue, and we are very happy about that. Of course, like always in such an integration, there are a couple of IT systems to be integrated, but we are progressing well, and we are absolutely confident that we will deliver on the project as planned.
And how would you characterize the difference between the Polish market and the rest of Central and Eastern Europe?
Well, there's many similarities. That's also why the Erste Bank Polska is such a perfect fit to Erste Group overall. However, of course, the sheer size of Erste Poland or the Polish market makes a big difference. It's by far the biggest single market in our overall group, and that definitely allows for us to learn a lot about how the market is operating, how the different centers within Poland are operating with each other. It's not only Warsaw, there are other very big and important economic centers like Wrocław, Krakow, and Poznan, and we have to learn a lot from our Polish colleagues how the similarities are fitting into Erste Group, but also how we have to deal with the Polish market differently. Overall, so far, everything is going very much as expected.
And how do you see the M&A market in Central and Eastern Europe? Of course, Austrian banks have been very active in this space. When do you think that Erste is going to be ready for more potential deals?
Yeah, very true. There were a couple of deals which were, of course, we were following closely. We are now fully concentrating on the integration in Poland. That's clear, given the size of the acquisition. Look, we have fantastic management teams on the ground in all our strong markets. Therefore, when it comes to, let's say, domestic consolidation, we are ready anytime, everywhere. However, when it comes to, let's say, bigger cross-border acquisitions, we are good where we are, and we are now really focusing on a full integration of the Polish business in the overall Erste Group.
Stefan, I have to ask you about Viktor Orban. Of course, Erste has had its fair share of conflicts with the man. It seems like the Orban era is ending. What do you expect from the new government, and what's going to change for banks in Hungary in the next few years?
Well, first of all, let's be very clear here. We have been operating in Hungary for many, many years, actually decades, and we have been very successfully doing so. We are not particularly commenting on one or the other government in any country, so that's just for the first point. For the second point, I think it's pretty clear that there seems to be, let me say, some kind of ease of the tension, obviously, under the new government between Budapest and Brussels, which means there should be a certain unlocking of the funds from European Union to Hungary. That, from a fundamental economic perspective, should be positive. Whether this will have a direct or indirect impact for the banking market overall and Erste, I think it's a little bit too early to see. The first negotiations between, if I saw it rightly, the Prime Minister and the European Commission have just been starting. So we are watching all of that closely, and while that, we try to do very good business in Hungary on the ground.
Stefan, always a pleasure to have you on the programme. Thank you for your time this morning. That's Stefan Dörfler, CFO of Erste Group. Well, plenty more coming up. Don't go anywhere. This is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
So Fed Chair Jay Powell staying on as governor when his term ends next month, and the politics of the Fed really dominating yesterday. But let's dive into the policy, because we did see that historic vote split yesterday, 8-4. We haven't seen anything like that since 1992, and it really just reflects how complex the economic situation is at the moment. Of course, you had Stephen Myron dissenting in favour of a cut. You also had 3 members of the FOMC objecting to language suggesting further cuts. And so if we take a look at that economic backdrop, first of all, we start.
ओके गाइस, ये क्रूड ऑयल में देखो, वैसे सेलिंग तो हम यहाँ से भी कर सकते हैं. कंफर्मेशन के लिए वेट करना पड़ेगा कि 10,275 के नीचे क्लोज कर दे. अगर 10,275 के नीचे क्लोज करता है तो एक सेलिंग का ट्रेड बन सकता है. यहाँ से करेंगे तो थोड़ा सा रिस्की हो जाएगा. एक बार एसएल देख लेते हैं, क्योंकि दूसरा लेवल काफ़ी दूर है, वो लग रहा है पास में, बट दैट इज़ फार अवे राइट नाउ. यहाँ से भी कोई एसएल छोटा तो नहीं है खैर, बट अगर 10,275 के नीचे क्लोज कर देता तो थोड़ा सा सेफ बन जाता ट्रेड. ठीक है, देखो यहाँ से रिस्क लेते हैं, फिर और कुछ कर नहीं सकते, या तो वेट करना पड़ेगा. क्वांटिटी थोड़ी कम रखते हैं, जाएगा तो देखेंगे एसएल. थोड़ा सा रिस्की समझ लो ट्रेड को, जब तक प्योर कंफर्मेशन नहीं मिलती. क्वांटिटी तभी ऐड करना जब प्राइस एक बार वापस से 10,270 मान लो, 10,270 के नीचे क्लोज कर दे. 10,270 के नीचे क्लोज करता है तब एक पॉसिबिलिटी बनती है कि सेलिंग आ सकती है हैविली. अदरवाइज तब तक, क्योंकि लेवल के ऊपर जा चुका है प्राइस कल के, नेक्स्ट लेवल का वेट करेंगे, दैट इज़ फार अवे. तो एक छोटे से एसएल के साथ ट्रेड करते हैं. अगर 10,270 के नीचे एक बार क्लोजिंग आ जाती है 15 मिनट में प्रॉपरली ब्रेकडाउन, फिर अगर पुल बैक करेगा देन ट्राइंग टू ऐड सम क्वांटिटी, अदरवाइज दैट इज इनफ. यहाँ पर ज़्यादा क्वांटिटी नहीं ले सकते, ध्यान रखना. तो ज़्यादा क्वांटिटी लेना मत, कम ही क्वांटिटी में एसएल के साथ ट्रेड होना. मार्केट बुलिश ही है, कोई बहुत ज़्यादा बेरिश नहीं हो रखा अभी भी. आगे देखते हैं अगर क्रूड गिरता है तो इक्विटी मार्केट क्या वापस रिबाउंड करता है या फिर नहीं। बाकी इंपॉर्टेंट रहेगा क्रूड ऑयल के लिए 10,270 के नीचे सस्टेन करता है या नहीं करता है। इसके नीचे सस्टेन करता है तो फिर ये लेवल ऊपर का स्ट्रॉन्ग ही हो जाएगा वापस से। दो तीन दिनों से क्रूड ऑयल में कुछ खास हो नहीं रहा है, ऐसे ही जा रहे हैं बस। नेचुरल गैस भी थोड़ा सा अगर डाउन आता है तो इसमें भी एक बाइंग प्लान हो सकती है। वैसे तो अभी आ भी नहीं रहा नीचे, स्टक हो गया वहीं पे। बट इफ इट स्मॉलली फॉल ना, तो एक पॉसिबिलिटी काफ़ी हाई है वापस बाइंग की। अभी बिल्कुल ही वॉल्यूम नहीं लग रहा है इसमें। क्रूड ऑयल में क्वांटिटी का ध्यान रखना, ज़्यादा रिस्क मत लेना। रिस्क की ट्रेड है जब तक प्राइस वापस 10,270 के नीचे ट्रेड करना शुरू नहीं करता है, तो ज़्यादा रिस्क में नहीं, कम ही क्वांटिटी ट्रेड होगी। बुलिश ही है, लेट्स सी रिवर्सल आता है तो। एक मच रिस्क इन क्रूड ऑयल। बाकी एक बार अगर ट्रेड करना शुरू करेगा 10,270 के नीचे, फिर ऐड करेंगे क्वांटिटी, अदरवाइज वेरी स्मॉल क्वांटिटी। क्रूड ऑयल का एंट्री पॉइंट है आपका 10,620 से 650 के बीच में। उसने देना प्राइस को 10,620 से 650 के बीच में कहीं पर। ये लेवल थोड़ा ज़्यादा बड़ा हो गया है, आई थिंक इसको सही कर दो। क्वांटिटी कम ही रखना, प्राइस जब तक नहीं आएगा नीचे लेवल के 10,620। 10,620 से 620 से 650। ठीक है। शायद कोई न्यूज़ आ गई सडनली ओपन इक्वल टू हाई कैंडल बनी है क्रूड में आया नहीं है लेवल पे पहले रिवर्स करने की कोशिश
inflationary terms. Prices are going higher of everything that impacts you, working capital, all kinds of stuff. At some point, do you worry that we get a growth story that starts to kind of is the opposite side of that? When you think forward as to what the business is going to look like, not in 6 months' time, 12 months' time, maybe in a year, 2 years' time, do you see that growth risk coming in terms of the demand picture that you're going to be looking at?
So this is a concern. So in the short term, very happy to see LME prices around 3,500 and building premiums coming on top of that. Gives good current earnings. But higher prices, raw material prices, combined with oil and gas prices, will have a demand impact at some point in time. Now, whether that happens in Q3 or Q4 or when it happens, that typically will have a dampening effect on GDP.
So there's some concern about demand destruction there then. So tell me a bit more about the working capital concerns, because that seems to be what was cited by analysts yesterday, talking about net debt coming in higher than expected, working capital in the first quarter being higher. What is driving that? That's your costs, is it, or what?
So I'm much less concerned about this than the analysts, I have to say. So typically in our business, there is a ramp up in industry activity in Q1 that drives up the payables or receivables we have from our customers. That's one thing. And don't forget, prices for aluminium has increased from 3,000 to 3,500. That also increases the value of what the customers is going to pay you. So this will normalize over a year. It's a pure reflection of increasing prices, increasing activity and increasing sales.
OK, Ivan, thank you very much. Thanks for joining us. Ivan Kallevik, the CEO of Norsk Hydro, thinking about inflation and where the inflation story takes us then, Guy.
So we have numbers out from France. We've had very mixed numbers out from Europe today. And the French number comes in terms of the CPI that we are seeing, a little hotter than anticipated. So this is preliminary data. I'm giving you the EU harmonised month-on-month number, first of all. That comes through at 1.2. That's up from 1.1. The survey was for 1, so we're definitely above what we are seeing there. The year-on-year number, therefore, goes to 2.5, up from 2. I could dig into it, and maybe I'll do that in just a moment, in terms of what the core readings, etc., are telling us below the surface. But we'll plug that data in a little bit later. But the initial read is slightly hotter than anticipated. So let's plug this into our conversation with Adam Linton from the MLive team to give us a take on what we are watching. So Christine Lagarde. I'm looking at these numbers. What do I think about what I'm seeing across the inflationary picture across Europe this morning? Because consumers are clearly worried about inflation, and inflation numbers broadly are ticking higher.
Yeah, there's clearly a cause for concern, but in terms of today's meeting, probably not too much read-through. Like you said, we're interested in what the core readings are doing, and we still don't quite have that information at the moment. So for the ECB today, probably won't be the most interesting of the two meetings. I think the market's pretty comfortable in its view that the ECB can retain optionality towards a potential June hike. And so there's probably not going to be too much pushback from the ECB on that front. I think when the market's that one-sided, it is worth exploring, where could the asymmetry be? And I think there is an argument to be made it could be in the dovish direction. Not necessarily my base case, but, the ECB has been all in on inflation. If they kind of acknowledge the growth implications or, longer-term inflation gauges, such as the five-year inflation forward, which is a guiding light for their policy settings, that could potentially put a bit of a dovish tilt on the release. Not my base case, but something to watch out for. I think when it comes to the euro, if we do see this hawkish optionality retained, what happens with the euro on a day we've got a bit of a haven bid in the dollar on Iran? What's that kind of push and pull effect, and where do we land?
Do we get a dovish tilt from the BOE, given the sell-off that we saw after their March meeting?
Yes, I think the BOE is a more interesting one by virtue of the fact we just get so much more information. We get the vote split, we get the individual accounts, which, yes, gives transparency, but also injects volatility. And we also have a projection meeting as well. There's definitely more of a push and pull between the market and the Bank of England. And like you said, some of that is obviously a clean-up job from the March meeting, which was, a disaster, to put it mildly. But, we'll see how we kind of get with that, because, do we get Bailey continuing to push back on the market, saying you getting ahead of itself? We're kind of in the vicinity of where market pricing was when he did do that.
3 hikes.
Exactly, yeah. So, are the Bank of England comfortable with that? Do we get pushback? Does the market even care about that? Is it still looking to run with it? But if you do get a dovish tilt and the ECB stays hawkish, that could potentially be upside in euro sterling. And, for the pounds, once the BOE's cleared, you've also got political risk on the docket next week. And UK yields, they continue to rise at the back end.
Busy UK political story as well, as you say. What about the oil price then? Up by another 3.8% this morning. 122 is the handle on Brent right now. Adam, euro Euro Stoxx 50 futures suggesting we'll be down by 1%. We have that is set to be the dominant theme. Of course, there's the sort of tech earnings theme in there as well, which could have an impact, but broadly it's the oil price that we're focused on.
Yeah, I think oil prices are clearly a concern. I mean, for June at above 120, that contract expires today. But if you look at July, we're still above 110. So, the market was comfortable when we're in that 90 to kind of 100 range. Clearly, that thesis is being tested today. We've seen that filter through into European equities. And concerningly, we've seen for the US that we did have those good earnings from Alphabet, Amazon. That's enabled to prop up the market. That's clearly a cause for concern. And when they move out of the way, how much of a negative follow through do we get into US stocks? That's what we're watching.
OK. Adam, thank you very much. Adam Linton from Bloomberg Markets Live. Remember, you can get up-to-date analysis and insight from Adam and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal. So European futures pointing lower because of the oil price. US futures less so, but NASDAQ futures are down a little, aren't they, on the back of quite a confused picture for big tech, I suppose.
Yeah, a very mixed picture. I mean, broadly, the tech companies all beat on the top line, but it's when you lift the hood and you start to see some of that nuance. That came through with Meta and challenges there, and that stock took a hit on the back of that. Alphabet, a very different picture. They're able to articulate their ROI much more cleanly, it seems, even as they ramp up CapEx as well. But Zuck is now looking at $145 billion of CapEx spend just at Meta this year.
You've got to spend a lot of money to make money. That seems to be the story. But Samsung's the story, isn't it, overnight? That's the real picture, that these guys are just making so much money in memory, and basically their customers are these big tech companies.
And their view on prices into the future.
And precisely. The cost of this stuff is going to get higher, not lower.
So we'll watch tech stocks at the start of trade, see what kind of read across, if any, there is into European names there. But of course, we've had so many corporate earnings this morning, that lots from the consumer-facing sector as well. We'll look out for those. The French banks in focus. The opening trade is next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Morning, Thursday morning. A couple of minutes to go until we start equity trading here in Europe. European equity markets and US markets feel like they're increasingly on different pages. Take a look at what the month has looked like in terms of the performance picture. Yesterday, Stoxx 600 down a little bit. We're expecting more of that today. I'll get to Tom in just a moment. This is the picture out of the US yesterday. Yesterday was a bit of a kind of sit-on-your-hands session. We had quite a lot of corporate news to digest, but we were waiting for the Fed, and we were also waiting for big tech to report earnings. Both of those stories hugely significant going forward from here. But the read across in terms of kind of where we were there and where we were over there, I'm not there sure there's that much I can really tell you, Tom. But in the meantime, oil prices have gone sharply higher. And that's maybe something that your board needs to digest.
That seems to be the clear factor weighing on European futures right now, with the Stoxx 50 futures pointing lower by more than 1%. So we look at the oil majors, we'll look at that sector, of course, taking focus on the back of the earnings that come through overnight from the US. And, of course, we look ahead to the central bank action of the BOE and the ECB. FTSE 100 futures currently flat, maybe being supported to some extent by what's happening in the energy sector. DAX futures, though, pointing lower by a full 1%, looking to drop almost 240 points. Anna, what are you looking at?
Yeah, let's have a look at some of the sectors in focus. We've got so many corporates reporting this morning on this Super Thursday. Lots of central banks, of course, to focus in on as well. But the banking sector fully reports in France today. We've had numbers out of BNP, out of Crédit Agricole. We spoke to the management of both of those banks. SocGen also reporting, so we'll watch those. Also, certainly in focus, I'm drawn to this line from VW saying, in this environment, the planned cost reductions are not enough. We have to fundamentally transform our business model. So the ongoing adjustment continues within that sector. Energy certainly in focus. That could cushion the London market then, as Tom's futures board guy was suggesting that London might outperform.
Yeah, it's going to be interesting what the higher oil price does today. It translates obviously into a lot of businesses negatively, but for the oil price and the oil stocks, a positive picture. So we see the FTSE 100 opening up, well, let's call it flat. I'm being kind of optimistic. I see some green, I call that up. But we're in and out of positive, negative territory. There is a real split there. Let's talk about where we see the Stoxx 600. So painting a more negative picture, that tells you that other markets are certainly going to see a more negative picture. What is the CAC going to do this morning? DAX, AEX, IBEX. They've got a lot to digest. There's an awful lot of corporate news that we need to fold into the picture. The IBEX is down a staggering 5%. When I see that kind of move, I do slightly question what is going on, and I'm wondering what is happening here, because that seems like an extraordinarily large number. But I'm sure that Tom and Anna are going to dig into why we are seeing that. The CAC is down by 1.3%. Tom, what's going on?
Well, let's start on the sector-by-sector basis. That is remarkable, that drop coming through from Spain. So the IBEX, to your point, down 5.8%. On a sector-by-basis, by the way, not a big surprise to see that energy is at the top of those. Just two sectors in positive territory. Energy gaining up 0.8%. Telecoms currently up 0.5%. On the downside, it's the auto sector taking the biggest hit, down more than 2%. As I open up the IBEX and trying to get a sense as to what the main drags are across that index, with that drop then of almost 6%.
Banks, yeah.
So banks.
But even then,
Santander, Banco Santander down 3.8%. CaixaBank down 2.2%. You've got a couple of the energy names in Spain in positive territory, Repsol. But it seems that Banco Santander down 4%. And we were speaking to them yesterday on the back of their earnings.
Yeah, so that's quite a stunning drop there. We'll dig further into that. I'm just looking at the banking sector overall, and this does seem to have gone down quite badly, what we've heard this morning from the French banking sector, and maybe there's some read across there. So SocGen is down by 4.4%. We see Crédit Agricole down by 5.7%. We see BNP Paribas down by 4%. So I suppose if you have some heavy weighting towards the banking sector, then that's not going to be great today. On the other side, as you said, Tom, we do see the energy names going higher. So Shell and BP are up by 1%, which helps to cushion London. I see we don't have an opening price on the DAX just yet, so we're waiting to see where that one opens. The CAC 40 down by 1.3% in the face of some of that weakness across the banking space.
I'm a little confused by what's happening in Spain, but we're going to figure it out and we're going to come back to it. I don't have a clear answer at this point because it does seem it seems a little odd. But anyway, let's park that one for now. We'll come back to it. Basically, the big picture is Europe is under pressure once again. We are looking at a European market that increasingly diverges from what we're seeing in the United States, Anna.
Yeah, absolutely. And part of that difference is the oil price and the impact that is having a negative impact overall, despite London's resilience. Let's dig deeper into the European equity market space right now. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen, joins us this morning. Laura, what's your big picture sort of thinking on European stocks right now and the vulnerability they still have to factor in more negativity from the oil price? I find it interesting that we got to almost where we've been before on oil prices, and we seem to have stopped there for now.
Right. Well, I think markets are recalibrating to the risk that we could see persistent energy prices come through. And given that Europe has more of that exposure to the energy shock, I think markets are kind of positioning accordingly. And certainly if we look at the earnings backdrop, the U.S. earnings have come in quite strong, surprising expectations relative to Europe, which doesn't have the breadth of that earnings support. And if anything, we are seeing a much more challenging quarter with likely further pressures to come in that space.
And I mean, the banking sector does seem to be responding quite weakly, and there's not so much of a link with the oil price there. We've heard a lot in terms of earnings, and some areas have done well. Equity trading has been an area of resilience for some of the banks across the European space, but there have been other areas of concern. Maybe provisioning is an area of concern. How are you thinking about the banking sector as we wait for the ECB and its rate decision?
So we still have had strong conviction in the banking sector, given the steepness of yield curves, given the healthy balance sheets, but perhaps some near-term pressure as it could become more vulnerable to the consumer in terms of their capacity to borrow in this space of potentially higher interest rates and a weaker growth dynamic. We are certainly seeing the earnings come through from energy and tech driving that. But I think to your point, it really is crucial around what is the future of policy path going to be? Will the ECB be forced to tighten policy against this backdrop of heightened uncertainty and potential persistent inflationary pressures?
What does the renewed forecast or at least renewed commitment around capex spending from the big tech names stateside, $740 billion US now, $750 billion approximately for this year? What does that mean in terms of your investment thesis around which players are best positioned, given the run-up that a lot of the hardware names have had so far?
I think the key question for investors is when will we start to see tangible returns on some of that investment in terms of revenue growth, whether we see an acceleration of cloud, whether we see more of that margin expansion as well. Some companies in that Mag 7 are being able to prove that they're already showing some of that revenue growth and they're being rewarded accordingly. So I think from a broader investment perspective, it suggests there is conviction in this long-term AI supercycle trade. These hyperscalers are still well positioned. I think the question is, if we start to see some signs of them pulling back on that capex, will that be a sign of greater capital discipline? So investors will see that as a positive sign, or whether we start to see maybe that's uncertainty around the future of that sustained investment. I think that's not so much a near-term story, but certainly something to watch for in coming quarters.
So from tech to the geopolitics, and what is the near-term function, or at least what is the near-term reaction if we do get this escalation that some are reporting out around Trump's options now, military options and a continued closure of the Strait? The blockade is not moving away from that. How defensive do you want to be? Where are you finding hedges if we once again see a step up? And we're looking at Brent $122, about close to demand destruction levels on some views.
Well, it's interesting that markets had essentially started really pricing out those tail risks, kind of taking on more of that optimistic scenario.
Was that complacency?
Perhaps to a certain extent, but against this backdrop when we're seeing the robust earnings come through in the U.S., it's very hard to be negative in that broad risk asset space, predominantly when we still have that resilience in the U.S. growth backdrop. I think the key factor to watch for from here is around time. The longer that this closure of the Strait of Hormuz persists, the greater the energy price pressures coming through, more supply chain disruptions, that will feed into what has been resilient consumer spending in the U.S. That will weigh on corporate earnings, compress margins, and if we see inflation expectations de-anchored on the back of that, central banks will be in a position to raise rates. That's going to tighten financial conditions, and all of those confluence of factors does suggest that risk assets could be on more fragile footing, but really time is the key variable to watch for.
In the meantime, just sell Europe, buy America. Is American exceptionalism back?
I think U.S. exceptionalism is back in the near term only because think about the profitability of kind of the tech heavyweights.
Yeah.
That's really where we are seeing them display the resilience. So investors wanting to take on that defensive posture are going to look for companies that have that pricing power, that have more of that inflationary hedge dynamic, and that is being displayed in the U.S. tech sector.
So I'm buying U.S. tech near term for defensive purposes. But a lot of the expectation is very long term in terms of kind of what these companies are expected to. It seems like there's a mismatch there.
I think we are still in this dynamic where there's going to be greater dispersion in this kind of AI space. We are going to be more discerning towards the winners and losers. That story hasn't gone away.
Sure.
But just in the near term, you want to have where there's greatest conviction that you will have more of those
tech defensive
properties. I would say in this current backdrop, yes, but very selectively. I mean, if you're a tech company that doesn't have a business model that's going to be resilient, it's more commoditized, then perhaps you're going to come under pressure. But in this backdrop, you can also look for inflation hedges around infrastructure, around real assets, upstream energy beneficiaries. And as well, if we think about the fixed income dynamic is quite important in this current juncture because we are in this higher for longer yield regime, perhaps taking more of that rates over credit exposure as well.
Let me just mention what's going on with Stellantis, because I think it's worth just mentioning. It was in a volatility halt for a moment, but it's now back opening, and it's down by 7%. Earnings turning positive in the first quarter. The car company benefiting from rising demand in North America for its Jeep and Ram models, but that didn't seem to be enough. So back into profit, but that was not enough, it seems, in the stock being sold off, it would seem, today. If we dig a little deeper then into your thinking across the different sectors, I mean, anything that's related to energy, I assume, is going to be quite challenged at this point, Laura. I mean, how are you thinking about resilience within the European equity market space? Is it just all about energy stocks?
I think there's a mix of what we call almost like banks and tanks, let's say, because we still have that conviction in banks. But as well, given this focus on energy security, we are going to see kind of that greater defense spending come through. We're already seeing backlogs in that space. That should provide some tailwind. But given where we currently are, I mean, the ECB has suggested they're somewhere between their base case and their adverse scenario, which in that kind of more adverse situation has a mild contraction. So some of those cyclical sectors around chemicals, consumer discretionary, we think will come under more pressure versus utilities perhaps maybe have a bit of more of an uplift. So this dispersion in the market overlaid with this heightened uncertainty suggests really being selective in this market is the prudent approach.
Laura, when you look at European central banks and what they're going to do today and into the future, are you more worried that they will be too slow on inflation, or are you more worried that they will hike into growth weakness?
I think that's a story that diverges across the different central banks. I think the European Central Bank, yes, the scars of 2022 are still quite there. They're worried that they don't want to see this potentially as transitory when it's not, but they are best positioned to start raising rates, even that insurance type of hike this summer, to keep inflation expectations anchored. Where if we contrast that with someone like the Bank of England, markets are pricing in more than 3 rate hikes this year, which given the current status of a policy rate that's already in restrictive, demand that's weakening, a challenging fiscal backdrop, we think that's where the greatest mispricing is currently in markets.
So that would be a policy mistake if the BOE aligned with market pricing, to be clear. Market pricing 3 hikes, that would be a pretty grave policy mistake from your view.
If they were to follow through on that, because that would raise the recession risks and then, if anything, amplify the need for rate cuts in the future. So it's almost like bringing forward, but then having to reverse that.
Pretty high inflation in the UK, though. They've got a mandate. So, yes. They've got a mandate to deal with that. Laura, lovely to see you. Thank you very much indeed. Laura Cooper, Global Investment Strategist, the head of Macro Credit, joining us from Nuveen. The Core 6 looks like this. Let me just show you this, and also just point out that we do seem to have a more reasonable price now being shown for the IBEX. I think it was to do with ex-dividends and pricing them in at an index level. Anyway, that's the picture across Europe. Quite a lot of weakness. Pharma maybe showing some strength, but elsewhere we do see weakness being priced in. Oil trade goes into the macro picture. Consumer, you can see how this gets priced in across Europe. But individual stocks, there's quite a significant amount of movement this morning. Charlie Wells has a lot to do. Let's start off with some French banks, shall we, Charlie?
Let's kick it off there, because this is one of those kind of industries that is really showing some of the confounding narratives in the market right now. Because from, a big picture standpoint across industries, earnings have been coming in pretty strong. We got a beat from BNP Paribas. Societe Generale, their equities traders did pretty well. We had a miss from Crédit Agricole. But again, you're seeing a lot of red on the screen. And that seems to indicate that traders are looking beyond earnings, or taking in a lot more than just the corporate news. We had that news coming from France that the economy failed to grow in the past 3 months. That could be some of the negative macro sentiment around here. We also had some misses, right? Crédit Agricole, they had a miss. Societe Generale, they had some negativity around their fixed income trading. So again, tough day to be a French bank, given all that's coming through. Let's look at Stellantis. We were talking about a little bit earlier, but down over 7%. Now, again, this gets back to that pattern I was talking about, where the earnings are positive, but the bigger picture is looking negative, and that's really filtering through to Stellantis. They had some really, really constructive earnings out this morning, but again, we're seeing this big drop. We saw some negativity coming from VW, so this could be the auto space really in a challenge moment. Again, this could also be the oil price, right, hitting those records on the bad news out of the Middle East. So again, spilling into Stellantis, these sort of conflicting narratives, but it's looking like that macro picture is more important right now for a lot of these companies, despite strong earnings. Schneider Electric also down. This is really, a little bit confounding too. I've been using that word today, confounding, because that AI trade, it was looking like it was pretty strong. Sometimes that can spill over into Schneider, right? Because they need electricity. Schneider sells a lot of this really crucial electric equipment, but they are down this morning. This again could just be sort of a risk-off sentiment given what we have been seeing out of the Middle East. Speaking of the Middle East, let's turn to energy, because no doubt this is going to be in focus today as traders parse those high oil prices. Well, what do high oil prices mean? They mean that these energy companies in Europe, they benefit. So we're seeing some benefit here. But again, not huge upticks, just, a little bit in the green, just north of about 1% for Shell, edging towards 1 for a number of these others. And again, is that broader sentiment, that shakiness that we're seeing across industries this morning?
Charlie Wells, I'm less confounded after your breakdown there. Thank you very much indeed, walking through some of the individual stocks and sectors on the move this Thursday. Charlie, thank you. Coming up, French banks, meanwhile, in the red this morning. To Charlie's point, we discuss what is fueling the moves lower. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Look at what we call a global market activity. It was strong, particularly given the volatility, and particularly in March, and that was a bit compensating what you saw in a rather wait and see on the corporate side.
We have corporates who in France are in fact very resilient, and so our corporate loan production is growing strongly. However, it's true that we can see in our customers a form of uncertainty that they're waiting to see what's going to happen.
The macroeconomic uncertainty, which is basically having the corporates have a bit of a wait and see. So the pipeline is there, the execution is maybe a bit delayed.
We've been talking to a few CFOs of a few French banks. BNP Paribas Agricole talking to us a little bit earlier on. The market reaction this morning is not particularly pretty if you are a French bank. Let me just show you some numbers to give you an idea of how the market is receiving what it is hearing this morning. And broadly, as you can see, quite negative. In particular, Agricole down by over 5% this morning. Let's get a sense of what is happening here. Tom Metcalf, our EMEA Finance Managing Editor, who's had a busy week. French banks, what's the takeaway?
Yeah, as you say, bad day for them if you're a shareholder. So I think the biggest thing for me is probably that BNP kind of decision on the provision in front. Basically, for me, it's the first big European lender to really kind of sort of change direction, really, and go, yes, look, we need to start providing for potentially the impact of Iran, at least in a way that was above market expectations. I think that's probably what's driving BNP shares down. And then across, SocGen, Crédit, I think SocGen numbers pretty disappointing again, follows on a kind of weak trade in fourth quarter. And then Crédit Agricole, has just heard from the CFO. They're saying it's resilient, but what they are seeing is, corporates not really going out there and making big moves. It's obviously then hits the banks on that. Wait and see. That's nice.
Wait and see was the theme this morning, wasn't it? So let's dig a little more into the outlook then for some of these banks then, Tom, because you mentioned that what they had to say on provisioning. And it's interesting because I suppose from provisioning, you can either provide for specific loans that you think are going to go bad, or you can say everything just looks a little bit more risky. And it seems to be the latter we're getting from certainly those lines out of BNP. This is a macro provision that they're taking.
Yeah, exactly. Sort of reflecting all the geopolitical uncertainty and, often, sometimes banks are too conservative on this front, right? And that, for me, is the interesting split. Like, we've seen banks report throughout the week, and broadly speaking, most have been sort of parroting the same line as previously of like, difficult macro picture, but everything we see suggests, we're resilient, we'll be able to cover this. So I think it's just an interesting shift from BNP. It'll be, curious to see if other banks have followed their lead. We're still to report.
So record earnings from Standard Chartered. Tom, what is driving that outperformance for that very Asia-focused business? Obviously?
Yeah, it's much more positive from Standard Chartered, so Bill wants to be pretty happy. One of the things I pulled out of that is just the wealth inflows. So they were pretty much record inflows. That's kind of all part of their big push into that recurring revenue type business. So it just looks like that overhaul of Standard Chartered doing pretty well. And as you say, quite a unique footprint, Asia-focused. Of course, interestingly, big Middle East presence. But yeah, maybe in contrast to BNP, just taking not really seeing any kind of impact on the bottom line yet.
You're nearly done? You've got NatWest, haven't you?
NatWest tomorrow. So big insight there into the UK economy. Lloyd's is pretty straightforward, so I would expect something similar. But yeah, again, it will be in, maybe what are they saying about that macro picture?
They'll Bank of England, but they'll have already had that to factor into maybe that changes.
Yeah, they'll be up late tonight, just sort of tinkering away, I'm sure, after that decision.
Yeah, we'll see whether the BOE pushes back against that market pricing of another 3 rate hikes. 3 rate hikes to come.
Tom Metcalf, thank you. Thank you very much indeed. With the wrap of the banks and looking ahead to NatWest tomorrow, of course, out of the UK. Let's turn to the auto sector right now. Stellantis shares plunging despite earnings turning positive in the first quarter, while Volkswagen is warning on margins and stepping up cost cuts amid rising competition from Chinese rivals. For more, we're joined by Elizabeth Berman, Bloomberg EMEA Autos team leader. Elizabeth, thank you for your time. Let's start with Stellantis. Why are we seeing this move? Why are investors reacting so negatively to these results, these numbers coming through from Stellantis?
Yeah, hi, good morning. And yeah, of course, Stellantis has been keeping us very busy with its turnaround plan and the work they've been doing on that. And it's fair to say that today's first quarter result really did not convince people that the company is on track to make the improvements necessary. One particular thing that what we're hearing about that analysts took issue with is that the company booked some expected refund from US tariff payments that will come later this year, they believe, for this quarter, so thereby improving their bottom line with this kind of a booking. But it doesn't really tell us much about improvements in the operating end of things, which is where Stellantis still has a lot of work to do. Analysts also commented on some of the measures in North America, which is the main market for Stellantis, taking a lot of time to pay off, and that we'll have a long road of recovery ahead of us. Meanwhile, in Europe, as VW is also telling us this morning, competition is intensifying to a great degree, led by Chinese competitors.
Yeah, let me ask you about the competitive threat then within the sector, and in particular Volkswagen. Elizabeth, I was drawn to this line from Volkswagen, the CFO saying in this environment the planned cost reductions are not enough. This is just a sector that keeps having to try to keep up with the real world developments.
Yeah, the CFO of VW really got on the front foot this morning in the statements, and I'm sure we'll hear more about this today, about needing to reap more savings from the business, which is pretty much a constant with VW, I'd say. However, I was surprised to read how he really emphasized the growing competition of Chinese car makers in Europe, who are not only grabbing market share by importing vehicles, they're also taking great strides in establishing manufacturing sites in lower cost areas of southern Europe and also Hungary. And that is really quite bad news for a lot of the underutilized plants that VW as well as Stellantis have to deal with, which is obviously a great drain on their bottom line.
Let's talk about what is happening at the high end. Porsche, kind of going from Volkswagen to Porsche. There was an expectation, because of the lack of manufacturing in the United States, that this would be a company that would get hit fairly hard by the tariff story. Why is that not happening in the way that we thought it might?
I do think Porsche is grappling with the tariffs. They have been outlining these struggles in a great way. They are working on a broader model lineup that will be hopefully turning things around for them. And what has been clear from what they told us last night is they are seeing signs of coming through the trough by adding more models that are improving their bottom line.
OK, Elizabeth, thank you very much. Thanks for the update. Elizabeth Berman, Bloomberg EMEA Automotive's team leader. And it is the automotive sector that stands out to the downside, or has been doing for much of this morning, but also the media sector. So autos and parts is one of the worst performing sectors this morning. Universal Music Group, though, is down by 6.3%, and that's weighing on the media sector today. So but not much is looking pretty this morning, is it, to the upside for European stocks, apart from energy?
Air France is actually having a fairly good morning. I thought that Air France would be battered by the news on what it's seeing in terms of the cost picture relating to fuel, but actually stock looks OK. So there are a few bright spots out there. Yes, you do wonder whether the ECB could make things worse a little bit later on. If it turns out to be quite a negative picture coming through from the ECB, if Christine Lagarde sort of paints a growth concern story, what happens there?
Yeah.
She talks about raising rates.
Is that the worst thing, or is
Yeah.
it worse to talk about raising rates?
Yeah.
In terms of risk appetite, I'm not sure which looks better or worse.
We're like nil point for French growth coming through today.
Yeah.
Spain's looking a little bit more robust. Interesting on the tech front, you're not getting a read across. So $275 billion is the new capex commitments for the big hyperscalers. ST Micro is up a bit. ASML is up just 0.3%. So not seeing a big read across, but again, the macro environment today may be the bigger drag there.
Yes, and on the macro environment, we'll talk about the ECB and the Bank of England, both expected to keep rates on hold later today. But what kind of narrative will we get along with those rate conversations? This is Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We are 30 minutes into today's sessions. The futures picture had looked far worse than what we're seeing right now. So we've paired some of the losses, but nonetheless, you are down 0.3%. And across different sectors and different companies, you're seeing some pretty sizable moves. So across the benchmark, you're seeing losses of 0.3%. Concerns, obviously, around the oil story and energy up once again, above $120 per barrel on Brent. DAX is currently down 0.3%. The auto sector is under pressure. Energy and tech are in positive territory, so you're seeing a bit of a lift for the FTSE 100, bit of support there, up 0.1%. When it comes to the CAC count on France, the worst performer across these indexes, at least down a full 1%, dropping 87 points so far. Guy, what are you seeing?
I'm seeing a market that's reasonably balanced, actually. As you say, slight bias towards the downside in terms of the performance we're seeing. So you've got 366 stocks down, 215 up. Volume's actually reasonably good today. It's an average, so at some point you need to get a more positive picture maybe emerging. But it has been weak of late, so it's interesting on such a big day you are seeing quite a lot of activity through the market, or a raised level of activity going through the market. Let's talk about some of the leaders and laggards that we are seeing. Unsurprisingly, with oil prices, what they are doing this morning, you are seeing names like Shell rising. So Shell is up by 0.7%. Rolls-Royce on a two-day basis is still negative, but after the numbers this morning, it is positive on today. So you just need to kind of look at maybe the two-day chart and maybe you get a more neutral picture. Capgemini is up by over 3.1%, but it's up 3.1% this morning. But the bias is definitely to the downside, and you've got some interesting themes emerging on the downside this morning. So let's talk about what we are seeing there. Stellantis down by 8%. Serious concerns emerging within the car sector this morning, not only from Stellantis, but also from Volkswagen as well. The French banks are starting to paint a picture of concern around what is happening with activity and what is happening potentially with the pricing in of higher energy prices as a result of what's happening in the Gulf. BNP Paribas in that camp, down by nearly 4% this morning. Agricole is down over 5.5% this morning. It is a tough day to be a French bank. Anna.
Let's get up to date then, Guy, on some of the other stories we're covering this morning. Shares of Bill Ackman's Pershing Square USA plunged 18% in their market debut after a combined IPO of the closed-end fund and his alternative asset manager. The deal raised $5 billion, just enough to keep early investors in, but far short of the $25 billion Pershing Square once targeted. Oil has spiked to a wartime high on reports the United States is considering new military options to attack Iran, with Brent briefly surging past $126 a barrel. Earlier, President Trump told Axios he won't lift a naval blockade on Iranian ports until he secures a deal on Tehran's nuclear program. And France's economy failed to grow while prices jumped more than expected to start the year. The data is a sign that Europe may be succumbing to stagflationary threats emanating from the Iran war. Guy.
OK, let's talk about how we factor that all into the central bank story here in Europe. The Bank of England and the European Central Bank, the ECB, are expected to keep rates on hold today. Policymakers playing for time as they assess the economic impact of the war in the Middle East and what that is going to do to the European economy broadly. Let's talk about how we've got this covered. Lizzie Burden is looking at what we are seeing with the Bank of England. Over in Frankfurt, we have our chief Europe correspondent, Oliver Crook. We've got it all covered today. Oliver, I'm going to start with you. What is the data telling the ECB? The ECB has a single mandate. What are we looking at today? What is the message going to be?
Yeah, the framework around which the ECB is using to try to think about the different scenarios that we're getting because as a result of the Iranian sort of energy shock within Europe are the sort of the good scenario, the bad scenario, the ugly scenario, the baseline scenario, the adverse scenario, and then the sort of very severe scenario. And these basically have different expectations of where inflation is going to peak. The most benign peaks just over 3%. The middle one is just over 4%, and the sort of severe one is over 6%. We are getting inflation data across the European continent over the last couple of days. Out of Spain, yesterday, 3.5%. That's way above the sort of baseline expectation and coming way ahead of schedule. Germany, 2.9%. And then today, looking at the data that we got out of France, I mean, it's telling one very clear story, at least out of France, and that is a story of stagflation. We're talking about inflation coming into France, 2.5%. That's the highest level in almost 2 years. That is above what the expectations was by 20 basis points. And when you look at GDP coming in at dead flat 0%, that is 20 basis points below what growth was expected. So for the ECB Governing Council today, we're not expecting any move on the rate decision. But the real question, I think, for the Governing Council is how to basically portray this sort of inflation. How much of this is just going to be headline energy inflation that they can kind of look through for a period of time? To what degree is this going to read through to other parts of the economy, whether it's food, whether it's wages, whether it's all kinds of things? That is the real question for policymakers today. So for Christine Lagarde and the Governing Council, the whole sort of project of today is to keep inflation expectations anchored without tanking the economy and try to describe to people what kind of inflation they're expecting here in the Eurozone.
Yeah, because frankly, there is a stagflation risk, isn't there, for the Eurozone economy, as there is one for the UK economy as well. We're going to get the guidance, Lizzie. Let's bring you in at this point, but also potentially a split across the MPC. We saw that split at the Fed. What are you going to be watching for when it comes to the BOE later?
Well, as we've said, it's going to be a hold most likely. Traders only pricing in a 10% chance of a hike today from the Bank of England. That's because it's the same quandary here that Ollie was describing in the Eurozone. Higher inflation because of the war, but also weaker economic growth, or a subdued backdrop at least. And the big question is exactly the same. Will there be second-round effects from this energy price shock? That's what's really concerning Chief Economist Hugh Pill here at the Bank of England. Others wondering, hoping whether you could see the weak labour market stopping that feedback loop when it comes to prices. So when it comes to the vote split, most economists see an 8-1 split, with Pill the most likely dissenter, but do watch out for the likes of Deputy Governor Claire Lombardelli or externals Catherine Mann and Megan Green joining that hawkish camp. Remember, those forecasts, updated forecasts that we get today, are the first complete set of forecasts that we've seen since the start of the war. Broadly, they're expected to show inflation above target for the rest of 2026, growth downgraded. But you could see the hawkish dissenters, if there are any, leaning on the more adverse scenarios here. Yes, the Bank of England is going to want to avoid the sharp market reaction we saw after the March meeting by trying to keep the guidance the same as the March meeting, where they said that they would stand ready to act if necessary. And remember, that guidance triggered that reaction. The gilt market so pronounced in the reaction to the Iran war, but you could still see those hawkish hints coming through when we get the individual comments from MPC members today.
Lizzie, thank you. Lizzie Burden here in London, Oliver Crook in Frankfurt, and we will bring you special coverage of the Bank of England rate decision and Governor Andrew Bailey's press conference. That's from midday today in the Bank of England decides, and the ECB rate decision is at 1:15 p.m. London time, followed by President Lagarde's news conference at 1:45. So plenty of coverage of those here on Bloomberg TV.
OK, let's get some more analysis now and bring in Janet Henry, Global Chief Economist at HSBC. Janet, good morning. Thank you for joining us this Thursday. How close is the Eurozone to recession right now?
Good morning. Well, as Ollie described, the ECB has got the good, the bad and the ugly scenario. And obviously we've just had the French release. We also had the Spanish release that wasn't quite as bad as the zero figure in France. But, you know, when you have a really low potential growth rate, it doesn't take too much to get to a stagnationary scenario, never mind a stagflationary one. So certainly as we move towards what was a good optimistic scenario whereby the strait would be open by now and things would be flowing, and go further into those bad and more ugly scenarios, that would certainly take you into a recessionary scenario.
What are the timeframes you're looking at then when it comes to those recession calls?
Well, I think a lot depends on whether we get any June rate rises, because at the moment the message that we're going to hear today from any central bank was don't panic. You know, we actually are going to wait and see. We don't need to rush into tightening. But all of the chairs are going to have a really difficult challenge, aren't they? It was a bit like Powell last night on the Federal Reserve. They have to speak for the whole committee. And when you've got three dissenters to an easing bias, and this could even be the issue for Governor Bailey today, Chair Bailey today, it's, you know, if there's maybe one vote, but if there's three or potentially even four votes, then he has to speak for the whole committee and say why he is potentially, you know, he's got this divergent move and what will have to happen. So on the time frame, if the strait is still closed through May, then absolutely the likelihood of a June rate rise goes right up there. In our bad scenario, they would be raising rates in June.
Do you need to cause a recession to get inflation under control in Europe?
No, you don't need to cause a recession to get inflation under control. You know, what Europe's shown in the course of the last couple of years is that weak growth is no guarantee to very, very low inflation, even when you've got China trade diversion and you've got a strong euro. What you need potentially, and only time will tell how much, is that you need to show that you are willing to do whatever is required to keep inflation expectations anchored. A stitch in time prevents you having to do a lot more later. And this is where I think everything is framed by that 2022 period when interest rates were on the floor, and by leaving it too late, when inflation had picked up a lot, you ended up having to raise rates a lot more. Policy is neutral. And actually, if they need to send a signal now by raising rates early and potentially cut them again by the end of the year, then that's what they would rather do than potentially leave it way too late and have to raise rates to 4 or 5%.
But these scenarios feel very different to me.
Yes.
Then you had strong demand.
Yeah.
You don't now. You've got a cost push story that is very different, and I don't know how central banks. You can't print more oil. How do you control inflation if you are the ECB? How do you get it other than basically demand destruction? There is no way of controlling inflation expectations or inflation. The picture's different.
The picture is very, very different, and it is an outright supply shock. And this is when the timing is obviously very, very important. At the moment, it's mainly about the price, certainly in the advanced economies, but in a lot of emerging economies around the world, it is an outright supply shock. You can't get some of these oil-related goods for any amount of money, and you are actually seeing a curtailment of supplies, whether it's gas supplies in India or other oil-related products in other countries. And so you're absolutely right. You can't, which is why for as long as they can, they will send the message that we don't need to rush into anything, but they'll be looking not just at financial market measures. There'll be a lot of attention on the ECB price expectation survey. We've seen it in the UK with the YouGov Citi Group Citi expectations. They've spiked up. Households are much more nervous about inflation. Companies have seen that inflation is an issue. They look to push through the price increases. They're not going to take a risk with their decades-earned inflation credibility by sitting on it for too long.
OK, so does that mean, so the ECB then, so that's why you're focused on June then, perhaps, and any guidance around June and whether we get a hike in rates in June? I mean, I guess I'm thinking about the ECB, but it could apply to other central banks here. Are central banks going to accept that? I mean, they'll get criticised whatever they do here, won't they? They're going to hike in the short term, not today, maybe June, hike and then have to cut later. And some people will call that a mistake and say that was a policy error, but they'll just have to accept that that's just what you have to do in this situation. Is that how things will play out?
That certainly is one scenario, and you're absolutely right. If they do have to raise rates once, maybe twice, and you get to the end of the year where they're cutting it, everyone will absolutely say that was a policy error. But you never know what would have happened in the absence of having raised rates in the near term. And they can't give us any clear guidance on June because they don't know whether the Strait is going to reopen in the next few days or at the end of May. So just what happens in terms of the reopening of the Strait, even if we know that it's going to take 2 months or so before everything gets back to any kind of normality, at least they've got some visibility. But if everything's still shut down at the end of May and inflation expectations are getting elevated and they are concerned that their credibility is questioned because none of these central banks have been back sustainably to their targets in the last 5 years, then yeah, they would have to react towards that.
The ECB got there, didn't it? But maybe not sustainably, to your
you're
point.
Right. The ECB did get there. The Fed hasn't and the Bank of England hasn't yet.
What about, so Eurozone inflation expectations then? They did jump, and I think you've been referencing this already, Janet, up to 4%. How long do they have to stay there before the ECB has to act? Or is it actually just a case of, well, as soon as the Strait of Hormuz opens, that will drop again, so they just wait another month and hope?
Well, all central banks look at a whole array of inflation expectations, and financial market measures obviously move to every dollar move in the oil price. Households, the surveys tend to be monthly. They look at the whole breadth of surveys, but then they look at other data that they've got, whether it's the survey data or the hard data of it feeding through, and they also look for any early indications that they've got on wage growth. So, for instance, on the Bank of England, the decision makers panel, it's roughly balanced in terms of the number of contributors to that survey that are saying wages will rise, but there's more people saying that wages will rise than will fall at this point, even though, to your point, the labour market is in a very different position to where it was in 2022. So they look at the whole jigsaw puzzle of the hard data and the soft data, but the early indicators they get will be from the inflation expectations and just looking at what's happening in the Strait of Hormuz.
Yeah. They're doing the jigsaw puzzle without the box, which makes life a lot more tricky. Janet, nice to see you. Always start with the corners.
Do they lose pieces?
Well, maybe.
As well?
Yes.
Haven't some pieces been lost already?
Yeah, I think so.
Yes.
The dog ate some.
I'm not sure we're going to end up with a full picture. OK. Talking Janet, nice to see you. Thank you very much indeed for joining us. Janet Henry joining us from HSBC. We've been talking about this all morning. It looks like we have a technical glitch at the IBEX. That is what the exchange is now talking about. You've got quite a big picture, a divergence between the futures and the headline price. There's a lot of ex-dividends going through that market this morning, and I just wonder whether there's a little bit of a calculation problem related to that. OK, from one angle on tech to another angle on tech, because a frenzied day of earnings reportings, of course, offer a glimpse at how some of the world's biggest tech companies are shaping up. We're going to break down the numbers from the mega-cap tech names stateside. That is next. This is Bloomberg.
cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Let's turn now to a raft of US big tech earnings literally crossing the line in just a couple of minutes yesterday. Amazon, Alphabet, Google seeing a clear payoff from their AI spending, while Meta is lagging behind. They are collectively now pledging to spend $275 billion just this year on CapEx. Let's bring in Matt Block, some senior analyst at Bloomberg Intelligence. What were the clear reads for you in terms of whether or not this spending is paying off? Who is winning, who is losing?
Yeah, I mean, I think we're still very much in the investment phase, and the payoff phase is still kind of somewhere in the future. You know, I mean, obviously Alphabet was the standout, delivering much better than expected revenue growth in their cloud services business. I think you have to put in some context that it is the number 3. It's a smaller business than either Amazon or Microsoft, so you would expect it to be growing. But I think overall, you know, people see that, you know, this is a business not so long ago. People were worried that, wow, that they're an ad-funded business, and yesterday's news in terms of search is going to change. These guys are going to be left behind. They've done a great job of integrating AI into their core products, and it's adding fresh momentum to it. And they have the cloud services, and they have the chip story, and they have YouTube. So I think overall, you know, there's a kind of lots of engines of growth there that people are feeling optimistic about. Compare that obviously to Meta, where it's a much more narrow focus. We were just talking about this primarily ads-focused business and lacking clarity in the monetization opportunity, increasing spending, bigger question marks about the payback.
And I was just laughing about this. Yes, there's a lot of going on the call.
There are.
From Zuckerberg.
Yeah.
That's got to be worrying, isn't it?
Yeah, I think people just don't see the clarity coming through in terms of how they're going to monetize the opportunity, and they put through some of the biggest spending increases, and the spending increases were more because their input costs for that capex are going up, not because they're necessarily chasing a bigger revenue opportunity. So there's inevitably a bit of a return on investment squeeze there.
Yeah, that seemed to be, and that wasn't just Meta though, that was elsewhere as well. In some cases, capex was going up because they were just having to cover the costs of higher components, higher memory chips and the like.
Yeah, we saw a big increase at Microsoft on the capex side. I think for the others, people are giving them a bit more the benefit of the doubt that there is clear end-user demand coming through, particularly from enterprise customers for cloud services, and that they're spending the money to kind of enable that revenue to come through. And I think that story is clearer in the businesses away from Meta.
What about Apple? It has not been following this cycle of capex spending around AI, and they report today.
Yeah, they do. Yeah, I think there's two or three things that we're really focused on. One is just the strength in the product revenue. I think it's going to be a great quarter for them. You think about they had the Neo, the 17E, and a bunch of other products.
These cheaper laptops, that really kind of taking a shot at the PC.
Exactly. Yeah, and they've been a huge success, and that kind of tied to one of the other things, which is the CEO transition. Very much the new CEO is kind of behind the success of the Neo product. I think so. There's going to be optimism from the market about a stronger edge to Apple's products going forward under the new CEO. The third thing is obviously coming back to chips and margins. Input costs are going up. How well is Apple managing those higher input costs, and can they pass that on to the end consumer? So do they have some kind of margin protection?
Matt Bloxham, thank you very much indeed. A great setup in terms of the preview around Apple and the wrap in terms of the numbers that we got out yesterday. Senior analyst at Bloomberg Intelligence. Let's look ahead at what else we are watching throughout the day. Then 9 a.m. UK time, we're going to get Italy and Germany GDP for the first quarter after France came in flat a little later on at 10 a.m. Euro area GDP, first quarter, CPI as well, so inflation out of Italy. And at 12 p.m., of course, it is the BOE rate decision. At 1:15 p.m., meanwhile, we're going to get the ECB rate decision. And at 1:30 p.m., we're going to get US first quarter GDP and jobless claims, the labour market in focus out of the US. And on the earnings front, as we mentioned, Apple.
Let's talk about what is still ahead then for today. As Tom's just been talking about, the ECB and the Bank of England rate decision loom large on the agenda. Skylar Montgomery-Koning from Bloomberg Markets Live team with us on set. So, Skylar, the market's thinking around what to expect from the Bank of England and the ECB has been evolving a lot this week, you say. Has the direction of travel just in the last 24 hours, though, just reflected the fact that we were up 5% on oil yesterday, another 3% higher on oil today? This just has to increase people's expectations of hikes, does it?
I mean, that's absolutely it. So at the start of the week, it was very clear to me that heading into these central bank meetings, the risks were skewed hawkishly and you'd likely see higher yields. Now we've had a week of price action, and if you look at the ECB and Bank of England pricing 12 months out, there's something like 20 basis points that have been added to both this week. And that's because, as you say, energy prices have risen quite considerably. They've just kind of surged higher today. Yes, we're having the contract roll, but we're at a level that we haven't seen in a very long time. And that just really tells you that's what matters for bond markets right now. It's feeding into your expectations for central banks. And so, from this meeting, because we've had that hawkish reevaluation, maybe risk are skewed a bit more dovishly on commentary. But that dovishness can't sustain any kind of upside in bonds if energy prices don't come down. So certainly if they keep rising, it can't.
Started to see some quite extreme numbers. Yen, 160. US 30-year, 5%. UK the 10-year at 5%. How extreme are these? There's a lot of chat about some of these levels and how kind of significant they are. Are they?
Yeah, I mean, let's talk about the UK, for example. The UK yield, if you assume in line with market pricing that they hike to 4.4%, somewhere around there, and then stay there, you compound those forwards and add a term premium in line with the ACM of around 110 basis points.
Wow.
That gets you to a 5.5% yield.
Yeah.
So it's not an unjustified level of yield that we are currently, and you can certainly go higher. Maybe if we get a little bit more hawkishness today, although that seems less likely given the shift in pricing we were talking about. But certainly if the vote split skews more hawkish, we're going to have inflation revised up. Growth is going to be revised up likely as well because the first quarter was quite strong, even if it's because of seasonals, even because of its front loading. And we have politics next week being an issue. So I don't think these extremes are necessarily the limit.
Politics is an issue in the US as well as we count down to the midterms. We've got data out later today. California gas prices, gasoline prices in some parts of California are $7 right now. And California has its own higher costs, obviously, versus other states. You're looking at the data out of the US later today. How much is inflation going to come through there?
I mean, quite significantly. You get the PCE price index, and your core measure for that was already at 3% and struggling to get sustainably below that, and it's going to rise to 3.2%. And so that's not even your headline component, which is where you really see that kind of gas and oil price move feed in, and that's really worrying for the Fed.
So core 3.2?
Yeah.
Yeah.
Like, that's quite worrying, right? And that tells you why you got that shift from the Fed last night. And I think it says a lot that the market is still only pricing a little bit of hike, as in we're still kind of counting on, or the market is counting on this dovishness to come in through Kevin Warsh, but you have Powell staying on. You have three members now thinking about hikes a lot, so it's worth considering.
We will be considering it, and you'll be writing about it, no doubt, giving you analysis on the M-Live. Skylar Montgomery-Koning, of course, with that analysis. Capgemini's CFO is coming up 9:15 a.m. UK time, so stay tuned for that. That is it for the opening trades. The Pulse is up next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Oil rallies to a wartime high after a report that President Trump is set to receive a briefing on new military options in Iran. A frenzy of big tech earnings, Alphabet jumps as Google delivers a clear payoff from its AI spending, but Meta tumbles on plans to increase capex up to $145 billion this year. Plus, the Fed holds rates in a split vote as Kevin Warsh moves closer to becoming the next chair. We're also expecting no change from the Bank of England and the ECB later today. So there is a lot going on. Overall, look, a lot of the focus, of course, is on oil, but stocks also falling as oil's jumped to the highest since the Iran war began. It's definitely adding to a lot of worries about inflation. The global benchmark, crude oil for Brent, actually climbed to $126 a barrel, hitting the highest intraday level in about 4 years before paring some of that advance. And it's also, of course, another busy day of corporate earnings. Traders also focusing on central banks. We're not expecting a big move today, but we're expecting them to guide us towards what they could do in the summer. Now, we also get some data out of Germany. Preliminary first quarter GDP rising some 0.3% quarter on quarter, a touch above estimates. And then in Japan, the Japanese finance minister is saying they're nearing timing to take bold action on FX. Again, if you look at the impact the price and the rise in oil has had, it's really a lot of the Asian economies that are taking most of the brunt. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil at a wartime high. The U.S. is reportedly eyeing new military operations in Iran. The Bank of England and the ECB decisions later today after the Fed held. Now, we break it all down in just a moment with Soren Rade from Point72 and Ian Steely from JP Morgan Asset Management. But first, we begin with U.S. big tech earnings as well. Amazon and Alphabet's Google are seeing a clear payoff from their AI spending, with Meta lagging behind.
We are increasing our infrastructure capex forecast for this year. Most of that is due to higher component costs, particularly memory pricing. But every sign that we're seeing in our own work and across the industry gives us confidence in this investment. That said, We are very focused on increasing the efficiency of our investments.
Our ability to invest in this moment and stay at the frontier, I think puts us in a strong position. And I think we are doing it based on tangible demand signals we are seeing.
Well, let's get more now from Bloomberg senior strategist Neil Campling. Neil, good morning. What have we actually learned about how much the Mag 7 investment in AI is actually paying off?
Good morning. I think if we have a look at the growth rates of the businesses, that gives us an indication of whether these investments pay off. And quite simply, Google Cloud grew 60% year on year in the latest quarter, and their backlog in terms of revenues that haven't even been posted yet grew 100%. So I think that is an evidence that they are getting good returns on those investments. In contrast to that, we have Meta sales that are half of that kind of growth rate, whereas their CapEx is growing at around 3 to 4 times the rate of growth of their actual sales. The other companies in this space, of course, with the big 4 hyperscalers, are enjoying accelerating growth. Azure grew 38% for Microsoft in the latest quarter, a very good number for a very large installed base. And AWS enjoyed its fastest growth in 4 years, growing 28%. So I think we've got 3 out of the 4 companies that are enjoying very good top-line results on the back of the investment, whereas really there are lots of questions being asked around Meta in particular, because the rate of growth that they have in terms of their CapEx is absolutely very significant.
Yeah.
We're looking at over 100% growth year on year for their CapEx.
So, Neil, what can we expect actually from Apple's results a little bit later?
Yeah, from Apple, of course, we've got some of the new products in terms of sort of the lower end, cheaper MacBooks coming out. We're going to have, I think one thing we're going to look at is what are the impacts of the increasing component costs. We've discussed before about memory pricing, and we've seen a 45-fold increase in Samsung's memory division profit this morning. So does that start to impact in terms of the profitability from Apple tonight or going forward in the guidance? It was the guidance last quarter that worried some people that component costs were going to start impacting whether consumer demand for raising pricing or whether it impacts those super normal margins that Apple really enjoys.
But thank you so much, Neil. As ever, Bloomberg senior strategist there, Neil Campling. Now, the Bank of England and the European Central Bank are expected to keep rates on hold today. Meanwhile, the latest data shows France's economy failed to grow while prices jumped more than expected. Now, with us now, Soren Rade, head of European Economic Research at Point72, and Ian Steely, International Chief Investment Officer for Fixed Income at JP Morgan Asset Management. So thank you both for joining us. Ian, let's start with you. When you look at, this is about military options, actually. We worry about the price of oil and therefore inflation. So I don't know how much central banks can actually guide us into what happens next. You have to be a military strategist to try and understand this.
Central banks are in a really tough spot at the moment, and ultimately they're looking at an environment where, yes, prices are going up, they're too high, particularly in Europe, where we know the ECB has the single mandate of price stability, and the Bank of England sort of has that same mandate, although maybe looks a little bit more at the economy as well, rather than more than the ECB does. But they're both very fixated on this, and they want to make sure that what they do is seen to be inflation hawks. They seem to be under control. Long-term inflation expectations can't become unanchored. So that has to be their priority. But I do think that they're going to be measured in their response, because ultimately this is also a tax on consumers and is likely to have a growth impact down the line.
Yeah, and Soren, again, the problem is with the headline saying, look, the U.S. is mulling some options, military options in Iran. Again, you don't know what happens to the price of oil. You don't know what kind of impact it has longer term, so you don't know whether central banks should look through it or not.
Absolutely, and I think that's precisely why the message that we got in the weeks leading up to the meeting today, especially from the ECB, was there's a high option value of waiting to ascertain which scenario among the ones they laid out we're in. Are we in a prolonged closure of the Strait of Hormuz scenario? Are we in a high oil spike scenario? Or are things settling down?
But so who can tell us? And again, if you look at fixed income investors or what the fixed income market is saying, it's a different story to what equities are looking at.
They are, and I think the problem we've had is a couple of Fridays ago, it did feel like we were heading in the right direction, and we'd described it as 2 steps forward, 1 step back is how the process would go. It feels like we're taking a few steps back at the moment, and it does feel like it's going to be a bit more drawn out than we'd expected. So, as you said, it's likely that we're moving from the ECB's base to sort of more the adverse scenario. Ultimately, that does mean that they're likely to have a hawkish bias. The question is, there's a lot already priced into the markets, and I think we have to, from a fixed income standpoint, look at that and say, OK, maybe we see a couple of hikes from, say, the ECB or the Bank of England. Are they really going to manage to do 3 or 4 consecutive meetings? That's the second half of this year. If this is continuing for a long period of time, we're going to see an impact on growth by that point.
Yeah, sorry, I mean, I guess you could also argue that if AI accelerates and it's kind of deflationary or disinflationary, and then you're in a situation where the war in the Middle East hurts growth and then they actually have to cut, is that possible? I mean, is anything possible at the moment, or is the next move definitely a hike?
I'm not going to go on the air and say something's not possible in this environment. I do think that, AI as a near-term driver, I doubt that is a big disinflationary force in Europe. So I think those inflationary risks really dominate. But as Ian was saying, there is a cost to be paid on the other side, right? This is a supply shock. So it is a trade-off. I do think that the balance of evidence at the moment weighs more heavily on the inflation side. And so therefore, central banks worried about inflation anchoring will respond to that, although I suggest ECB and BOE are in different starting positions.
Yeah, and then if you look at the Bank of Japan, I mean, they have a whole other set of issues. We just heard, Ian, from the finance minister warning about possible intervention in the currency market. And I have to say she was, pretty bold about that, saying that the timing for taking bold steps is nearing. The yen fell to the weakest level since mid-2024, again, after the Bank of Japan and the Fed held policy settings stable. But, do you worry about Japan? We're talking about FX intervention.
Well, I think, as you said, the currency's got very weak. They are effectively an energy importer. They're a food importer. They've got to be concerned about this level. Again, they're a very measured central bank. The reality is they probably should have rates higher than where they have it at the moment, looking at where their inflation profile is, but they don't really want to cause unnecessary market volatility. But if that's the case, then the currency's not going to like it. And as you said, we've seen the depreciation there. So I can understand what they're trying to do. Actually, they should be taking policy higher because it's just too low at the moment.
But how much? I mean, higher oil prices, again, because of the Middle East conflict, have undermined also, the yen because of the reliance on oil. Do we spend enough time really realizing how tricky it is for a lot of these Asian economies?
Yeah, it's a really tough spot, and we've already seen some of the headlines out of Asia and some of the restrictions that are being put on in place there. So it definitely feels like that is being the place that's impacted first. Then it's coming over to Europe, and then ultimately the US does seem to be a little bit more contained. Although you look at where gasoline prices in the US are, it's not completely immune to what's going on at the moment.
So, Soren, do you look at things regionally as well?
Absolutely. I think as Ian just described, that cadence is exactly right. Starting points are certainly different. I mentioned differences between the UK and Europe, with Europe essentially a target with inflation, the UK well above. US insulated in the first instance, but probably not down the line, and with, I would say, underlying inflation still not under control.
Do we have to talk a bit more about what China's doing in all of this? Because they also have an oil importing problem, but they don't seem to want to weigh in also from a geopolitical standpoint.
If you think about China, China's got huge reserves of oil. So in a sense, they do have something to fall back on. And you're hearing headlines that possibly they're going to release some reserves to help out other parts of Asia. So yes, I think China's actually going to be a big player, and I think ultimately they could become a big player in how this all gets resolved, because in the end they are a big user of oil, and they are going to need oil to appear at some point. But they've very strategically built up their reserves over the last few years.
Zoran, what are you expecting from the Bank of England today? Again, this is a small open economy. It's extremely impacted by the price of oil. And to start with, there was stickier inflation than elsewhere in Europe.
Absolutely right. For that reason, rates also haven't fallen as much. And I think that's, in a sense, what's bailing out the BOE at the moment. They are still at, I think, what most of them, the committee would agree, at restrictive rates. So the need to respond immediately is perhaps a bit, or the urgency is perhaps a bit less pressing than elsewhere. So we expect them to be on hold today.
What are you expecting in terms of the vote split? I mean, it's not. I feel like maybe the vote split is a bit like the lottery, but are there going to be more hawks?
I think that the reality is you're probably going to get a couple of dissenters. Hugh Pill looks like the obvious person, and then maybe you get Green, possibly Mann. Let's see on that. I think the most important thing for the way we've thought about it is the outcome from the last meeting probably wasn't what the Bank of England were hoping for. I'm sure they knew the direction of travel that the split or the shift in sentiment would have been, but maybe the extent of the move. They've obviously, and Bailey in particular, has spent the best part of the last few weeks trying to soothe that, trying to walk that back a bit. What they probably don't want is another repeat of that. And again, there's a lot priced in to the Bank of England. And again, particularly where the economy is, completely where the labour market is, I think they are going to be looking at the growth side. That said, the data hasn't really helped the Bank of England over the last couple of weeks or so. It hasn't sort of shown maybe the declines that we've seen in Europe.
But Ian, I mean, you talked about it, right? There was a little bit of an outsized, I guess, market reaction after that March meeting. Why do you think that is? Was it positioning in the markets, or were they looking at world events?
I think there was obviously a change in tone from the Bank of England. I mean, you've got Deputy Governor Ramsden saying he would have cut had this not been going on. I think there were maybe some people who were still expecting a couple of people to possibly even, still have a cut in the books, and that wasn't the case. And then obviously we knew that there was very heavy positioning in the front end of the UK. It was the place where it looked like the employment picture was slowing. It looked like inflation was going to be heading back to target later this year. There was only at the time a couple of cuts priced. People felt they could do more, and actually there was very big positioning because it wasn't going to be a big move, so you actually had to take size in that. Now a lot of that has unwound. I do still feel that there is quite heavy positioning in the front end of the UK, and there has been some re-engagement of that over the last couple of weeks or so.
Right, Soren, how difficult is it to model inflation? So I think we have a viewer question. I had my own question on, if you look at what we're expecting from the Bank of England, certainly Bloomberg Economics thinks we could get some kind of inflation forecast peaking around 3% at the end of the year, and then on the medium term, it comes down. And then this viewer, thank you for writing in questions because we love engaging with you. Do you model in Trump possibly putting export controls on oil? I mean, this is all about modeling. This is not about probabilities anymore. It's scenario planning.
Absolutely. And the BOE will very likely follow the example of the ECB, come up with scenarios. I am not so sure they lean very heavily on a baseline scenario and signal a great degree of confidence.
Yeah.
Like the ECB, they have a strong baseline and then they have scenarios on top of that. I expect the BOE to be a bit more open-minded to the adverse scenarios that they're likely going to show. I suspect they will be more price-driven than really driven by physical supply constraints.
I am getting a lot of questions, again, more questions from viewers on oil. Do you think it's possible, export controls on oil, from the US would be a big deal? Who would suffer most? Asia first and then Europe?
So Asia first. I think in Europe, one of the issues we have, there was, reporting out this morning, the EU Commission is making an effort to ascertain how much reserves do we have in Europe? And the answer is we don't know. We don't have visibility beyond a couple of months. So I think that is really a worrying scenario, and that is, I don't think, one that people are contending with. Like I said, it's treated like a price shock.
Yes, so what the markets aren't really pricing the downside risk, right? They're staying in this kind of optimistic middle ground. Is that fair?
So I think on the growth side, that's definitely fair. Yeah. I think the inflation side is probably well priced, and inflation pricing has moved up to reflect that. But on the growth side, that's where, yes, I see downside risk.
So given all of what we've talked about, what do you buy today in fixed income?
So I think we have seen a big repricing, and I do feel that you're in an environment where the front end of European yield curves are probably overpriced. If you take a sort of an average or a median of what should be occurring over different scenarios, I don't think we're going to get fork hikes coming out of Bank of England or the ECB if this continues. And I think that ultimately we'll focus on growth. So I do think there's an opportunity there. I do still feel that fundamentally corporates are in a really good spot. Now, of course, if we have a global recession, they're going to be challenged on that. But ultimately, if you look at where earnings are in the US, they're very strong at the moment. It's very rare that you actually see earnings get revised up as you sort of go through the quarter. So corporates in a good health. The repricing in yields, I do think it's a good environment to be owning some bonds at the moment. But we do need to be mindful that if this continues, if oil prices continue to go higher, then ultimately yields will go higher in the near term.
Okay, thank you both for joining us. Søren Rade, Head of European Economic Research at Point72, and Ian Steely, International Chief Investment Officer for Fixed Income at JP Morgan Asset Management. Now, coming up, we'll talk to Nive Bhagat, Capgemini Chief Financial Officer, about the IT company's latest sales numbers and challenges of conflict and AI. That's coming up next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts today at noon on Bloomberg. Context changes everything.
Well, despite economic uncertainty and the impact of AI and the IT industry, Capgemini's first quarter sales outperformed analyst expectations, particularly in North America and Asia. Well, Nive Bhagat, Capgemini's Chief Financial Officer, joins us now. Ms. Bhagat, thank you for being with us. When you look at geopolitical uncertainties and everything that we're actually living through with what's happening in the Middle East, are rising tensions actually driving spending in security services?
Well, we've had, of course, as you saw, Francine, a very good quarter. And of course, yes, the momentum came from a number of different geographies. We haven't necessarily seen any particular impact at this stage from the Middle East because it has not really impacted the group revenues. But as you can imagine, we are watching that very carefully and being very vigilant. But is there more spending in the area of security and defense? I'd say yes, and that happens particularly in Europe, where we're seeing quite a bit of it. And we're, of course, very well positioned to take that, considering, of course, we have a European heritage. We have a lot of scale and digital solutions to be able to do that.
So what does it mean for companies right now? Are they cautious about launching either something transformative or some of the innovative projects with you, or do they keep on spending and accelerate? What do you think is going through their minds right now?
Well, they are looking at a combination of things. So they're looking at both the cost takeout sort of initiatives, and they're also looking at transformation initiatives. And particularly when you look at AI, since that's the topic in everybody's conversation, they're looking at it from the perspective of, should they be looking at things which are beyond just cost efficiencies to business outcomes? And therefore, should they be preparing, if you like, their entire tech stack be prepared for that? So should they be working on their processes, on data, to be able to architect all of that better, to be able to prepare for it? So there is a mix of both. There is the cost takeout to be able to fund the transformations, and there is the start of transformations as well.
So what kind of transformations? Is there, if you look at the market, what's the most dynamic part of the market for you right now?
So there's a lot of spend on a few areas. So there's data, there's AI, and as I said, there's a lot of spend on defense as well, and there's spend on digital core. So let me explain this. So when you look at wanting to get into AI in a way that will really impact business outcomes, it's very important for clients to look at their tech stack, which has really not been touched for a very long time. So there's a lot of tech debt sitting there. So clients are looking at what can they do about processes? How do they hyper-automate these processes? How could people like us, for example, take them over, and automate them right down to the micro-task level and give them insights which will then help them make the business decisions in times like this, for example. It's also about how do they re-architect their data, because a lot of this data is old, hasn't been cleaned, etc. So what do you do with this data? And they're looking at that very carefully. So we see the transformation there as well. And there's a lot of back-end systems, if you like, on the digital core side of things, which they need to sort of reimagine, re-architect for them to be able to get the right insights. Because it's only then can you start to put the true agentic AI, if you like, as a harness across the organization. And from that perspective, therefore, there's a lot of, preparing readiness to be able to sort of seize, if you like, business outcomes as they go forward.
Because you're a big global company, by geography, is there part of the world that feels like they're ready to spend more or are embracing AI more? Is it the US, Asia, or Europe, or anywhere else?
Well, I'd like to say the Anglo-Saxon world is spending a little more on the AI than the rest. Not to say that the rest is not looking at it, but there are various stages to this. There are clients who are in the proof of concept stage. There are clients who are doing sort of AI factories, and there are clients who are looking at sort of what I call the real AI use cases that are going to impact business outcomes. You see a bit more of the last category across the Anglo-Saxon world, and you tend to see sort of the first two categories maybe outside of that in continental Europe and other parts of the world as well.
And going back to AI, I mean, you're saying that customers are they fully in AI, or are they waiting also for the next iterations? Do you think their CapEx is invest now and then think later, or are they going a little bit more slowly and so CapEx can increase in 12, 24 months?
Well, it's a combination, because, as I said, a lot of them are realizing that the real benefit of AI is in AI transformation, in true business outcomes and business cases. And in that context, they're preparing themselves for, that leap ahead. Some industries, of course, making that leap faster than some other industries in terms of what needs to happen. But everywhere we see clients now having conversations about how you prepare that tech stack, if you like, for the, for agents and agentic harness around that tech stack to be able to make that happen. So you're seeing quite a bit of that preparedness and getting ready for the, for what I call the big AI use cases, which then impact business outcomes in a client's business going forward, or essentially a game-changing aspect in their own industries.
Okay. I know Capgemini was also criticized a couple of months ago because of contracts that you had with ICE in the US. Where are you in the process of divesting that unit?
So as you know, we've put that company up for sale, and we wait for the process to conclude. So we've got, of course, expressions of interest, and we wait for the sale to go through.
Okay, thank you so much for the update, and thank you so much, as always, for coming on Bloomberg TV. That was Nivi Bhagat, Capgemini Chief Financial Officer. Again, a lot going on in the market today. The main focus is, of course, on oil, given everything that we've seen in the last 12 hours. Oil hitting a 4-year high. There are reports that the U.S. is mulling options in Iran, military options. Now, again, the U.S. and Iran have maintained their blockade of the Strait of Hormuz, with the conflict in the Middle East called the biggest supply shock in history by the International Energy Agency. Coming up, we talk more about oil, and of course, we'll have the latest on the Strait of Hormuz blockade. That's next, and this is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Oil rallies to a wartime high after a report that President Trump is set to receive a briefing on new military options in Iran. A frenzy of big tech earnings. Alphabet jumps as Google delivers a clear payoff from its AI spending, but Meta tumbles on plans to increase CapEx up to $145 billion this year. Plus, the Fed holds rates in a split vote as Kevin Warsh moves closer to becoming the next chair. We're also expecting no change from the Bank of England and the ECB later today. So oil has spiked to a wartime high on reports that the U.S. is considering new military options to attack Iran, with Brent briefly surging past $126 a barrel. Well, earlier, President Trump told Axios that he will not lift a naval blockade on Iranian ports until he secures a deal on Tehran's nuclear program. Let's get more with Bloomberg's Jumana Bersetchi in Dubai. Jumana, good morning. So what do we know about these potential new U.S. plans?
Yeah, well, Francine, what's become apparent in the last 24 hours is that President Trump has no intention of lifting the U.S. naval blockade. And actually, in an interview with Axios yesterday, he said that the blockade was more successful than bombing. And this, again, complemented by U.S. Central Command earlier this morning, saying that they had caused 41 commercial vessels to turn around on the back of this blockade. So remember, at the beginning of the week, there was perhaps some hope that there would be a Straits reopening. It's become apparent that that is not going to happen. And indeed, Axios also reporting overnight that later today, the head of the Central Command, this is Admiral Cooper, will be having a meeting with President Trump whereby he's going to present to him 3 potential military options. And according to this Axios report, those 3 options include short and powerful strikes on infrastructure targets, taking over part of the Strait of Hormuz to reopen it for commercial shipping. And then the third option would be a special forces operation on the ground in Iran, whereby troops would be deployed to go and extract that highly enriched uranium. Now, we don't know whether the U.S. is going to go down the military route, but of course it is within the realm of possibilities. But just to add to that as well, Francine, the U.S. Central Command have also requested for the first time ever for the Army to send this Dark Eagle hypersonic missile. This is a super missile, 5 times faster than the speed of sound, that has never been deployed in the region. And the rationale would be it would be used to target some of those ballistic missile launchers deeply embedded in the mountains of Iran, not used before, but just another sign that the U.S. are increasing their military assets in the region should they want to go down the path of hostilities once again.
Jumana, what's been the Iranian response?
Well, defiance, as ever. And overnight, one of the key military advisors to the supreme leader said that as long as the U.S. naval blockade persists, then they will have to respond somehow. Unclear what that type of response would entail. And then the Speaker of the Parliament, Mohammad Galimov, who was also the key negotiator from the Iranian side, has said that Trump is trying to force them to surrender through a combination of factors. One, economic pressure, and two, presenting the Iranian side as being internally divided. And actually, I would say that President Trump would probably agree with that, because he does think, and there is a view out there, that the U.S. naval blockade is working. It is actually sustaining a lot of damage to the Iranian economy, because they're not capable of physically exporting their oil out of the country, or at least if they are doing so, it's in a diminished capacity. And at the same time, it is unclear from even our own reporting who is actually calling the shots right now in Iran. President Trump has described leadership as being fragmented, coming under pressure. He's saying that they can't get their act together, and very close to a state of collapse. So time will tell whether that actually is the case on the ground. But once again, the messaging coming through from Iran is one of defiance as opposed to capitulation. And so what you're seeing today in markets is accounting for the fact that as we head into a weekend, and this tends to happen over the course of the weekend, there could be once again a resumption of military action.
Jumana, thank you so much. We'll, of course, keep on top of this. Jumana Bersachi there in Dubai. Now, Spanish GDP was higher than expected in the first quarter, but the country's inflation has unexpectedly jumped further beyond the ECB's 2% target. Carlos Cuerpo, the Spanish economy and deputy prime minister, says the country is more resilient to higher fossil fuel prices because of its bet on renewables. But he also warned that as the Iran war drags on, it may start impacting the tourism sector heading into peak holiday season. Well, I spoke exclusively to him on the sidelines of Bloomberg's City Lab event in Madrid.
Since the very beginning of the war, we've been very attentive to the first line of impact, which was energy prices, fertilizers as well. And 20 days after the war started, on the 20th of March, we already had a pack of measures in place, 5 billion to help households, firms, energy-intensive sectors deal with the increase in prices, and also the agricultural sector, because these 2 months are key for the next season crop. So we knew that we had to help them with fertilizers as well. And this is helping us navigate through these initial phase of the war. For example, today we had the data on inflation for April, which was 3.2 for Spain. Basically, we've made the estimation, it would have been without our measures in place, 4.4. So that's by how much our measures are helping households and firms in our country. But in any case, big question mark is, of course, the duration. And that's what's keeping us, also, of course, very worried, because it's not just about prices, but potential additional issues, like, for example, jet fuel, which for Spain is a key element for our tourism sector. So we don't have a specific issue in Spain, because we have 8 refineries. We only import 20% of our jet fuel. But tourists will come from other countries with other companies. So we need to deal with this with a coordinated approach.
But how do you see, first of all, the war with Iran ending? Spain has taken a very different stance to other countries in Europe and in the world.
Well, you know, since the very beginning, we've had a very clear position against this illegal war in Iran that was started unilaterally. And what we're demanding at this point is to put an end to it and do it via diplomatic channels, as we hope will be the case with the conversations that are ongoing. Although let's see in the next few days, in the next few weeks, whether this is the case or not. In any case, even in the best case scenario of putting an end to it right now, it will take months for the situation to go back to normal.
Carlos Cuerpo there, the Spanish economy and deputy prime minister of Spain. Now, major French banks have been reporting this morning was a beat from BNP Paribas and Société Générale, but a miss from Crédit Agricole. Now, the CFOs of BNP and Crédit Agricole told Bloomberg that they've increased provisions in the first quarter to combat macro uncertainty.
So it's possible that there's going to be a couple of rate hikes. It could be that is because there is inflation, so GDP growth could shrink a bit. But GDP overall would remain, in our view, would remain positive, yeah? But there is this uncertainty, and we haven't seen it with our clients. We haven't seen it in the results. Nevertheless, we took a macroeconomic provision in the cost of risk in anticipation if the situation could be continued.
Our corporate loan production is growing strongly in France. In Italy, you know, Italy is our second domestic market. Corporate loan production increase was multiplied by 2 quarter on quarter. So we do have today a resilience of our SME corporate customers. However, it's true that we can see in our customers a form of uncertainty that they're waiting to see what's going to happen in terms of the macroeconomy worldwide.
Well, let's get straight to our EMEA finance team leader, Tom Metcalfe, who's here with me. Tom, always great to speak to you because we can have a full roundup of some of the European banks. Look, Crédit Agricole first. How big of a miss was it?
Yeah, there's certainly, of all the banks reported today, looks like, you know, their shares are taking the biggest beating. And I think that's probably reflecting that while a lot of banks are maybe warning about macro uncertainty, at least in the numbers of Crédit Agricole, you're seeing a little bit of softness in the lending. And, you know, frankly, in this kind of market, if you're missing your estimates, then, you know, you're going to get punished.
So, you know, if you look at BNP Paribas and Société Générale, they were a little bit more optimistic.
Yeah, broadly speaking, you can, you know, make a case, hey, well, equities trading really strong across those, both those banks. And then BNP is interesting. It seems like the narrative there has been driven by what we just heard from the CFO about, you know, this idea there is macro uncertainty, we're just being very protective. But again, I think people are very sensitive to that, rightly so. And it's interesting to me that BNP Paribas, at least for me, is probably the most high-profile statement of that kind of outlook among some lenders.
Tom, what about Standard Chartered? So actually, you know, profits hit a record, and they tried to downplay some of the risks in the Middle East.
Yeah, because there's a good set of results for them. I'm sure Bill Winter's pretty happy with how the market's reacted. You know, the biggest thing there, I look at those wealth inflows. That really does sort of seem to suggest that, you know, that push into that business unit is paying off. It's doing well. Of course, like all lenders, they're faced by this, you know, extraordinary geopolitical backdrop. But a bit like UBS, which also obviously has a huge wealth business, it seems that maybe that kind of footprint is better placed, or even benefiting from the kind of volatility we're seeing, perhaps with clients looking for sort of, you know, stable places to stash their money.
So is there a danger that actually shareholders expect, you know, this to me feels like a delicate moment for a lot of the banks because of AI, and you don't really know if their business model holds, and they just need to spend more, I guess, on AI, whether internally or they go through another service. But at the same time, are shareholders expecting them to give back in terms of dividends or share buybacks?
Yeah, it's tricky. You look at how much, you know, these firms need to be spending on CapEx, you know, everyone investing in AI. And the question is, what's largely drove their share prices, you know, over the last couple of years was this big share buyback program. Yeah. Obviously, they're not going to pull back on that, but is there any more kind of juice to squeeze from that? And then, of course, it comes, you know, you see these provisions rising. You know, does that again take away a bit of that sort of capacity to sort of continue to reward shareholders on that front?
And broadly speaking, I mean, the impact, of course, from the conflict in the Middle East, one could be on, you know, households and therefore lending and maybe non-performing loans or something like that, and then trading. Because if you're on the bad side of trading, then it's going to be a problem. Yeah,
exactly. I think whatever your bank footprint is, so in the UK we've got something like a Lloyds or a NatWest, which is very UK-centric. It doesn't matter. Everyone is exposed to Iran because it's going to hit the whole global economy until there's a clear resolution, and, you know, there's going to be a lag, right? You're not seeing it in the first quarter, but I wouldn't be surprised if come second quarter you start to see a few more pain points. And then, yeah, trading, and that is the hardest thing to do in banking, right? Like, make sure you're on the right side of these things, and if you are, suddenly that investment bank, that trading unit is a positive. But when you're on the downside, you know, shareholders really punish you for that.
Tom, thank you so much. As ever, Tom Metcalfe there in charge of finance for Europe. Now, coming up, the Mayor of Manchester tells us why he's not ruling out a return to the UK Parliament. Our exclusive interview with Andy Burnham is next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
Well, that was the Fed Chair, Jay Powell, on staying on as governor when his term ends next month. Now, Japan's top currency official is saying this is my final warning before action. Now, Japan's finance minister is saying they are nearing the time to take bold action on FX. We broke that story at the beginning, of course, of the show. The yen extending some of the losses, dropping some 0.5% to 159.61, and that's a day low. Now, the mayor of Greater Manchester has warned that next week's local elections will be a challenging test for the Prime Minister, Keir Starmer. In an exclusive interview, Andy Burnham, widely tipped as a future successor to the Prime Minister, is calling for a radical change in strategy to restore faith in a fractured political system, as Labour faces a double-edged squeeze from both the left and the right.
Well, they both present a challenge, and you know that's a different challenge in different parts of the country. So Reform stronger in some places, Green Party stronger elsewhere. I'm honest in saying I think we've got to recognise that politics has changed. You know, the two-party system I think is no more, and we've got to start thinking differently about politics. But it's why I've said what we've pioneered in Greater Manchester needs to be what goes national, more collaborative, more place first, not party first, long term, not short term, problem solving, not point scoring. The UK needs a lot of change in politics at the national level.
What does that mean economically? Do you get rid of, do you spend more fiscally? Do you get rid of some of the budget rules?
Well, I think a new politics lays the ground for a new economy, because I think there's long-term work to be done. You know, we need a 10-year approach to repairing public housing, transport, energy, crucially. That affects individual households, but businesses as well. The cost of energy in the UK is far too high. So a 10-year reform programme there. 10-year reform of the care and health system as well. That's what I think the UK needs, and I think it's better done on a collaborative basis, so that Britain is more of an investable proposition, you know. We need to get rid of the turbulence from our politics, because that then doesn't give the markets confidence to invest. And I think we change politics to change the country.
But do you think the budget rules currently are too restrictive?
Well, there's certainly a case when we look at the pressure on defence spending to consider that exceptionally. outside of the rules. But the rules are there for a very important purpose, to give confidence to investors. And obviously the rules will stay in any context. But the world is changing. We all have to accept the need to spend more on security, resilience and defence, and the rules can't stand in the way of that.
Will you try and run for Parliament again this year?
Well, I've tried once this year, and it didn't go so well, or didn't go as I wanted. I actually love my job as the Mayor of Greater Manchester, and I'm kind of really glad to be back here at City Lab, because Michael Bloomberg introduced myself and the Mayor of Liverpool to this network when we left the UK Parliament, and it's really kind of taught us that this is actually the future. But actually, I do think, as I've said in this interview, the politics we've pioneered as mayors, place first, not party first, that needs to go national. And so we do need to reform Westminster. So I'm not going to, I can't remove the kind of feeling that someday I will try and go back.
So you're not ruling it out?
Not ruling it out.
Well, that was the Mayor of Greater Manchester, Andy Burnham. Now, the Bank of England and the European Central Bank are expected to keep rates on hold today. Policymakers playing for time as they assess the economic impact of the war in the Middle East. Now, joining us now is Bloomberg Daybreak anchor Lizzie Burden, and from the ECB in Frankfurt is our Chief Europe correspondent Oliver Crook. So, Ollie, let's start with you. What's the data telling ECB policymakers?
Yeah, so the important thing here for the ECB policymakers is that they set up basically three broad scenarios under which the war in Iran is going to impact the outlook for inflation and also for growth in a number of different sort of areas. There's the baseline, the adverse, and the severe scenarios, the sort of the good, the bad, and the ugly. The good is inflation peaking just over 3%. The kind of middle one is just over 4%, and the bad scenario is over 6%. Now we've been getting GDP data, we've been getting inflation data over the last couple of days from a number of European nations. Overall, the picture has been pretty clear. Inflation is rising, currently segregated just to the energy sector, which is sort of encouraging news for the ECB. But I think what they're very, very concerned about is some of the things we've been seeing out of, say, France, for example, where you see the dynamic in France, which has been very clearly a stagflationary situation, where GDP came in 20 basis points under the expectation, coming in dead flat, whereas inflation came at 2.5%, well above the sort of 20 basis points above the expectation. So that is the kind of dynamic that is really going to worry the ECB. And for the ECB today and the Governing Council is to try to express to people what kind of inflation they're expecting within the Eurozone and where they are on that spectrum of that scenario from the good, the bad, and the ugly. I think right now we're sort of centered around the bad, but we'll hear from Christine Lagarde in a little while.
Ollie, what can we expect from Lagarde's press conference after today's decision?
Yeah, exactly. So what we're going to be pressing her is the kind of the nature of this inflation. If it is inflation that is sort of segregated into the world of sort of just the energy sector, potentially the ECB can kind of look through that level of inflation for a little bit of period of time. If they start to get the indication that this is reading through to other things, let's say to services, let's say to wages, let's say to food prices, that is something that is going to severely concern the ECB. And the other question for them is the duration. How long is this going to last? And for the European Central Bank, like so many policymakers in the European Union, you're in this situation where you're basically in the driver's seat of a car that you're not controlling. It is being driven right now by Donald Trump. There is no clarity at all on when this energy crisis will end. And it's sort of happening in real time, where you wake up this morning on the day of an ECB rate decision, oil hits $126 a barrel. It's going to be very difficult for the European Union, for the European Central Bank to give an assessment. I think it'd be a very difficult press conference for Christine Lagarde. I think they know all of the questions that they're going to get later from journalists. I don't know that they have the answers.
Yeah, that's probably right. Lizzie, what should investors be looking for in the BOE's guidance and MPC vote split?
Well, as you suggest, it's not the decision itself that's going to be the exciting part today, Francine. A hold expected, just like at the ECB, only a 10% chance of a hike priced into markets at this point, because it's the same dilemma faced here as in the Eurozone. You've got high inflation, but also subdued economic growth. And that same question, are there going to be second round effects from the energy price shock? That is what is worrying the chief economist, Hugh Pill. He's likely to be the dissenter in an 8-1 vote split, which is what economists expect we'll get today. Others on the committee are hoping that the weakness in the labour market, excuse the road noise here, will be able to control that feedback loop when it comes to prices. But do watch out for other potential dissenters. Could be Claire Lombardelli, one of the deputy governors, external members, Catherine Mann and Megan Green. And if there are dissenters to the hawkish side, they're likely to really emphasise the adverse scenarios in this first set of forecasts that we get today from the Bank of England since the war started.
And Lizzie, under what conditions would the Bank of England hike rates, and how close are we to that threshold?
Well, it's if we get evidence of those second-round effects. And if you look at the latest Bank of England survey data, they actually suggest that you're not seeing that energy price shock fueling wage demands just yet. So most of the MPC likely to want to wait for more evidence to be gathered. At the moment, traders are pricing in 3 hikes before the end of the year. They see them in June, July or September and November. But we'll listen to the governor in his press conference today. How much uncertainty does he want to emphasise around these scenarios? Remember, at the last meeting, well, in March, you had them seeing quite a sharp market reaction in response. Do they stick to that guidance that they stand ready to act? Do they give more hawkish hints on top of that?
Lizzie, thank you so much, Lizzie and Ollie there. Lizzie Burden in London, Oliver Crook in Frankfurt. Now, we'll have, of course, a special coverage of the BOE decision and Governor Andrew Bailey's press conference. That's at midday UK time. A little bit later, we'll also be speaking with Governor Bailey, so you can catch that interview from 4 p.m. Plus, the ECB rate decision, that's at 1:15 p.m. London time, followed by President Lagarde's news conference at 1:45. Now, we also have had a frenzy of big tech earnings, some key takeaways. Alphabet seeing a clear payoff from its AI spending, while Meta is lagging behind. A couple of other things we're watching out for. Look, pre-market, you can see Amazon is gaining, as is Alphabet. We're seeing a bit of pressure on Meta, down 7.8%, and then Microsoft down 1.8%. Also pre-market. Now, the other big story is definitely Japan. Now, Japan's finance minister has warned about possible intervention in the currency market, saying the timing for taking bold steps is now nearing. So again, the finance minister definitely not mincing her words. The yen jumped after Katayama spoke, trading as strong as 159.81, and that is near a level where authorities intervened in support of Japan's currency on several occasions back in 2024. Again, Katayama saying that ministry officials will be monitoring the currency market even when much of Japan shuts for the prolonged Golden Week holidays that stretch through Wednesday next week, during a period when trading volumes in the markets are expected to be a little bit thin. The other big story, of course, is what's happening with the oil market. Now, Brent oil rallying to a 4-year high after Axios reported that the U.S. President Donald Trump will receive a briefing on new military options for actions in Iran. Again, the U.S. and Iran have actually maintained their blockade of the Strait of Hormuz, with the conflict in the Middle East called the biggest supply shock in history by the International Energy Agency. So plenty more to come on Bloomberg. Up next, it's Bloomberg Brief with Vonnie Quing, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are. where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A potential escalation in the war with Iran, pushing oil to a 4-year high. The U.S. said to be weighing new military options. Alphabet leading the way with a solid payoff from its AI spending. Meta lagging. Apple is up next. And Treasury steady now after a divided Fed sends the 30-year yield above 5%. PCE and spending data on deck. But it's been fireworks around the world with aggressive verbal intervention out of Japan in the last hour. Let's get over to Tokyo to Alice French for the latest from Asia. Alice.
Good morning. Yes, look, we've had a down day here in Asia with the benchmarks mostly ending lower. I think partly the rise in oil that we saw overnight has not been helping sentiment, particularly also what we had from the Fed yesterday with the dissenters. The Kospi, though, actually closing out April with its strongest monthly performance since 1998. Samsung had some pretty strong earnings this afternoon, but actually ended up lower, I think, partly on concerns around AI spending, which we know is big. And then sticking with Japan here, we've had mixed earnings too, but the yen has really been in focus. We saw it weakening beyond 160 to the dollar yesterday after the Fed decision. That's its weakest since mid-2024. But just here in the past hour, we've had 2 verbal interventions from authorities. We can see it coming back up around that 159 level. But really some worries around, aggressive intervention and what we could see potentially in thin trading for the Golden Week period. So people are definitely on high alert.
Yeah, we're going to ask Jordan Rochester his thoughts in just a few minutes about this verbal intervention. But let's get over to Europe now. It's going to be a big day there as well. 2 hours into the European Open. Here's Justina Lee in London. Justina.
Good morning, Vonnie. Here in Europe, we're seeing a 5th straight day of declines for the Stoxx Europe 600 as oil continues to climb higher. Now, speaking of oil, the focus today is all about what the European Central Bank and Bank of England are going to do about those rising inflation expectations. And ahead of those decisions today, we're seeing kind of a pretty flat euro against the dollar and also the German kind of short end bond yield falling a little bit. Now, we think about the trajectory for the ECB here. They've been on hold for a while, and markets are still expecting a hold decision for today. Same with the Fed, same with the BOE, but all eyes will be what they're projecting ahead because expectations are for like 3 more rate hikes later this year on the back of those higher oil prices.
Justina, thank you. Justina Lee there. And yes, we saw that a divided Fed yesterday, taking away the easing bias language in some senses with 3 dissents on that particular issue alone. 4 dissents, obviously, in total, if you include Governor Myron, who will no longer be governor because Fed Chair Jerome Powell is going to take that position now that his Fed chairmanship is up. We finally got clarity on a few agenda items, let's say, yesterday. But central banks around the world obviously grappling with this, and it's not easing today, at least. We had Brent crude trading above 126 earlier. Now, the June contract is expiring today, but we're seeing it in the July contract and in contracts several months out that this wartime high is being reached today. Is it going to cause secondary price effects? Well, no doubt it is. The 30-year yield just below 5% now. It was above 5% earlier in the session. After the Fed yesterday, we saw those yields rise. But basically, if you look at the 2-year yield, we're up at least 12 basis points now just since Monday alone. Let's take a look at futures because we had some, I don't want to call it mixed earnings. I mean, mostly it was good, but more capex, right? And even that is barely keeping NASDAQ 100 futures in the green. Obviously, investors weighing the potential for AI revenue versus the amount of capex these companies are spending and coming to their own conclusions, all with this war percolating in the background. S&P futures are flat right now, and the dollar index is down more than 0.1%. That yen story, a truly amazing story today. India's rupee is also at a record week mark. All right, let's get to some individual movers now. Over to London again and Chloe Melly. Chloe.
Good morning, Bonnie. Big tech has organized itself very neatly in between winners and losers. On the losing side, we've got Meta and Microsoft falling because of concerns around this AI spending and the pace of growth. And then on the winning side, we've got Alphabet and Amazon, which seem to actually be seeing tangible benefits, a tangible payoff from the AI investment and therefore moving higher. Moving on to another tech story, and Qualcomm is also moving higher today after the chip maker said that it expects to make a lot of progress in the data center market, which will be really a key source of growth going forward, and also said it sees some recovery in the Chinese phone industry. And so we are up more than 10% for that company. And finally, Stellantis is down after investors question the sustainability of its supposed turnaround in North America, because a lot of the performance in that market was actually driven by price cuts and one-time gains as well. And so we're seeing a lot of weakness there, down almost 7%.
Chloe Melly, thank you so much. Chloe there in London. And coming up this hour, more on the Fed and a drumbeat to the BOE and the ECB with Jordan Rochester of Mizuho. And later in the hour, we'll dig into those tech results with Angelo Zeno of CFRA. But first, oil hitting a wartime high with Brent touching above $126 a barrel earlier. President Trump reportedly will be receiving a briefing on new military options for action in Iran. That's according to Axios. Joining us now is Bloomberg's Onur Ant in Dubai. Onur, is there anything to suggest that military action will be any more effective if Trump does decide to take some action again?
I think the reasoning behind the possible military action that is clearly being considered in the U.S. Right now at the White House is that it could do the trick in terms of breaking the deadlock. As you know, Hormuz remains shut, and both sides want the other one to reopen or lift their restrictions around the waterway first. And so far, there has been no movement, although the ceasefire is now almost a month or 3 weeks old. So it looks like the Trump administration is considering a possible military operation to sort of break the deadlock and force Iran back into negotiation table. But there is no indication that a renewed fighting would do the trick after weeks of bombing across Iran by US and Israel failed to do so.
Yeah, Onur, if the U.S. does start bombing or, making strikes again, is Iran capable of starting up strikes for its part again? Because that would be considered a breach of the ceasefire.
Well, it would be a breach of ceasefire no matter who started it, and I don't think the Islamic Republic would be reluctant to resume fighting. We have seen that both the U.S. and Israeli attacks on Iran degrade their capabilities to a large extent, but that didn't stop Iran from being able to launch retaliatory attacks, especially on U.S. bases in the Persian Gulf, as well as infrastructure assets in the region, wreaking havoc on energy assets and forcing many OPEC producers to curb their oil output. So there is no reason why Iran wouldn't be able to or wouldn't be willing to restart those attacks in the event of a renewed U.S. military operation against that country.
Onur, we're essentially at a stalemate, right? So Iran responded to the U.S.'s proposal with its proposal, and I guess President Trump has decided that its proposal is not workable. So we have two proposals and various people willing to be mediators from Turkey to Russia and everywhere else. But what exactly is the situation? Is there any prospect for any more talks face to face?
Well, It really depends on what happened in Hormuz. That lies at the heart of the current impasse. As you mentioned before, Iran wants the U.S. to lift its naval blockade, and Washington, in turn, wants Iran to stop its blockade first. And neither wants to compromise on who gets to open first. The problem here is that the U.S. does not want just a reopening of Hormuz, but it wants that to be part of a larger peace deal, including Iran's nuclear activities. And that is why this resumption of negotiations, direct negotiations, wherever that may be, is such a tricky situation. And there is no indication since the last round of talks about 3 weeks ago failed in Pakistan that there would be, or there could be, a new round of talks, simply because neither side wants to sort of compromise on their red lines, with that red line on the side of Washington being the issue of nuclear enrichment.
Yeah, and that hasn't budged since the beginning of the war. Onur, thank you so much. Bloomberg's Onur Ant. Big tech results showing clear winners and losers in pre-market trading. Alphabet and Amazon saw more spending pay off, while Meta lagged its peers. Let's bring in the host of Bloomberg Tech Europe, Tom McKenzie. Tom, we were at something like $650 billion in terms of a capex spend forecast, and that's up to something like 725 now. Is that right?
That's right, $725 billion US dollars at the top end on these renewed and revived capex plans from these four big names that reported yesterday. You get the likes of Alphabet committing another $10 billion in terms of spending. You get the Metas of the world as well committing another $10 billion. You put it all together, $725 billion on top of the $640, instead of the $640 billion, to your point, that had been forecast for this year. So just another significant ramp-up in those capex spending plans for these companies. And to some extent, and you touched on this is a tale of two tech companies right now. We can talk about Microsoft and we can talk about Amazon, but really, where you get the real divide, the real distinction, this is a Meta versus Alphabet story. Alphabet being rewarded by investors despite ramping up capex, and that's because it's showing real growth in its cloud unit, where it saw an increase of 20% in terms of revenues year on year. That was a beat in terms of the forecast. They have a backlog. They have a backlog of more than $400 billion US dollars, and in terms of their AI consumer services part of the business, that saw the best quarter on record. So on all of those measures, and that includes the Gemini app, by the way, on all of those measures, Alphabet and Google are firing on all fronts, and so investors are relaxed, in fact, rewarding them for the capex spend. Meta, very different story. What they're seeing there in terms of the traction they're getting through, a little bit of the traction is coming through on the advertising side of the business. Top line, it was actually a beat for Meta, but the ramp-up capex they were putting down to the costs of inputs, the costs of chips, the cost of that data center build-out, and a failure really to articulate clearly from Mark Zuckerberg, the CEO, of course, of Meta, what the end plan is for their AI ambitions and for that spending. Their models still lag at the cutting edge. Yes, they have the advertising business. Yes, they're gearing some of that AI towards advertising revenues, but it's the longer-term strategy around AI coupled with that increase in capex spend that seems to be causing investors in Meta to question what the prospects are in the quarters ahead.
Yeah, and even Mark Zuckerberg saying he doesn't have a very precise plan for how each AI product will be cultivated. So let's move to Apple. What can we expect to see from Apple earnings?
Well, Apple has not committed the spend around AI and the capex spend around AI compared to its counterparts we just talked about. And it lags, frankly, in terms of building out its own AI solutions. It's had to rely largely on Google and on Gemini. So the focus for Apple is going to be on the hardware side. And here is where things are looking pretty bright, particularly in terms of the relatively new product lineup when it comes to the laptops, the Neo laptops. They're really a segment play to try and undermine the cheaper PC laptop market. Some of these laptops are priced at around $500 US. There seems to be a lot of traction there. The question marks for Apple will be to what extent that very sophisticated supply chain they have is resilient to the global shocks that we're seeing, particularly when it comes to memory prices. So anything they say about memory, anything they say about that supply chain resiliency, and if that's holding up, along with that demand picture, of course, not just in the US, but in China, is going to be very significant for Apple as we look to those results later today.
Yes, we will. Bloomberg Tech's Tom McKenzie, thank you so much for that roundup in context. Now to other top stories trending on the terminal this morning. The White House is opposing Anthropic's plan to expand access to its Mythos AI model. According to the Wall Street Journal, officials are worried Anthropic doesn't have the computing power to serve more Mythos users without affecting the government's ability to use it effectively. BNP Paribas lower after disclosing first quarter credit provisions that were higher than estimates. BNP says it set aside $1.1 billion for the quarter. Meantime, net income beat forecasts, up 9%. And Glencore shares rising as its traders reap bumper profits from disruption in global commodity markets due to the Iran war. The rise in metals prices boosted its mining business. The rally in copper, zinc and coal helped offset the impact of higher fuel costs. Coming up, we'll be pushing ahead to the BOE and ECB rate decisions with Jordan Rochester of Mizuho Bank. That's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The three dissenters and others who could have supported that, and others who were, who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing?
A deeper division at the Fed. 3 officials going against the easing bias language amid increased uncertainty fueled by the war in Iran. Joining us now is Jordan Rochester. He is head of FICC strategy for the EMEA region at Mizuho Bank. And Jordan, thank you so much for joining. And we're seeing repercussions across the world today. I think that we can talk about this verbal intervention from the Bank of Japan, really aggressive intervention, as being partially an impact as well of the Fed decision, right?
A little bit. So what you've seen is a triple whammy of factors for why the yen should be weaker during this war. You've got higher oil prices. This is a massive problem for Japan's terms of trade. They are massive energy importers. So that should lead to a weaker yen on its own. You've got higher global yields, especially in Europe and the UK, weighing on the sort of carry trade that usually harms the yen. And then you've also got equities near the record highs. So a triple whammy of good reasons for why the yen should be weaker, yet the market hasn't really chased it as much as what the Japanese or government is suggesting. The models I have, sort of short-term fair valuation models, if you plug all of those inputs in, it suggests that dollar yen should be at 167, and we're not. We've been trading around 158, 159 for several weeks now because of the threat of foreign exchange intervention from the finance minister Katayama and the FX chief Mamura-san, and we're currently just below 160.
Yeah, I mean, Katayama saying literally the timing for taking bold steps is nearing. I mean, the market definitely seemed to listen to that with this weakening, but we're still, in the 159 handle area, right? Is there going to be a time in the next few days where the Bank of Japan will have to intervene?
They've essentially said they're going to. In all of the sort of verbal interventions we've heard over the decades from Japan, this is probably the most strongest. I think Nomura-san said something essentially saying, you will regret not listening to me. In other words, this is my last warning. So if intervention doesn't follow, if dollar yen goes back above 160, that would be very surprising. And so all we can say is a matter of time and wait. But I would just say for anyone considering trades out there, this is, because of the FX intervention risk, a very low Sharpe ratio trade. If you're trying to sell the yen based on the macro fundamentals like I just talked about, 167 being where we could be trading to, it's just probably not going to get there because the market's reluctant to chase it, because when you get FX intervention, that's 3 to 4% against you usually in the history of interventions on a single day. It's just not a good trade. And so we're going to be hovering around these levels for a while, I think.
Jordan, I want to ask you about the Fed because we have a lot more clarity since yesterday, right? We know that Kevin Warsh is going to be chairman now, and we also know that Fed Chair Jerome Powell is going to move to a governor position, and that there's more unease on the FOMC about the potentially persistent secondary effects of this oil price shock. What does it mean for yields and the US dollar?
Well, I think it's quite interesting timing. His Majesty the King visiting the US, and now the FOMC looks to be more like the Bank of England. You're getting much more dissents on the votes now, thanks to Myron, but also because of these 3 other members arguing there shouldn't be a bias to easing in there. Well, I think what you're going to see with a Warsh Fed is more of the same in terms of this sort of vote split being something that's much more common. The years of unity under Powell, Yellen, and Bernanke are long over, it seems. And I think that it could be the case that when Warsh arrived, you've got Myron and himself pushing the case for rate cuts, but you could see the FOMC regional governors and others arguing the opposite. And so you could have, for the first time, a Fed chair who's outvoted by the rest of the FOMC, first time since 1982 with Volcker.
So what would you be doing in terms of positioning? Because between the war actually ongoing, oil prices skyrocketing, nationally pump prices are at $4.30 yesterday, and in California they actually topped $6. There's real pressure here, and it's getting to be more persistent. Would you, be buying bonds, for example, here with yields this high, or are they going to go even higher?
Yeah, absolutely not. I would not be receiving rates here and buying fixed income, but we have to acknowledge that we have sold off quite a lot quite quickly. And the hardest part of this war is not really predicting the ebb and flow of diplomacy between the US and Iran or the probability of military action. That is hard to predict. The hardest part is the ability of the White House to jawbone the market with essentially false optimism via Axios reports and various others. That could slam the oil market lower with just one headline, as we saw over the past month or so, and that would see rates rally back. So I'm paid rates here. I do think that we could price in the idea of one hike for the Fed by the end of 2027. We're getting close to that idea being in the market pricing now. But I am aware that it all could tumble on one headline. So we have to adjust our positions and trade it from a smaller size.
All right, Jordan, we have to leave it there, but we'll be watching out for the ECB and BOE this morning as well. That is Jordan Rochester of Mizuho Bank, and our thanks. Coming up, Amazon considering a reboot of The Apprentice. A look at what's making headlines in your front page news. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, Defense Secretary Pete Hegseth's first public appearance on Capitol Hill since the war began. Hegseth castigated members of Congress for questioning the war in Iran, which the Pentagon estimates has cost $25 billion and 14 American lives so far. The hearing came just before a 60-day milestone that some in the GOP have said could become a pivot point for their so far unconditional support of the war. Next up, the Washington Post reporting on the Supreme Court sharply weakening a key provision of the Voting Rights Act. The Post says the ruling limits the consideration of race in drawing voting maps and potentially ushers in Republican gains in the House. And the Wall Street Journal reporting Amazon is discussing a potential reboot of The Apprentice, with executives considering casting Donald Trump Jr. as the host. The Journal says Amazon hasn't approached the Trump family, but its deliberations are part of its push to appeal to conservative supporters and broader audiences. That's your front page headlines, and this is your macro picture as we head into the Thursday session. S&P futures lower, the dollar lower, and the 10-year yield all the way up to 441 after that Fed meeting and as oil prices just skyrocket. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A potential escalation in the war with Iran, pushing oil to a 4-year high. The U.S. said to be weighing new military options. Alphabet leading the way with a solid payoff from its AI spending. Meta lagging. Apple is up next. And Treasuries now steady after a divided Fed sent the 30-year yield above 5%. PCE and spending data are on deck. Let's take a look at these markets, because look at Brent crude. Now, that is the current contract and it is expiring today, but it's above 118. We got to 126 and change earlier. WTI above $107 a barrel. And this all as the war continues and President Trump may be weighing more military options. We also had that hawkish hold at the Fed. 3 dissents over language that points to future cuts. And then this morning we had aggressive verbal intervention in Japan. Asian currencies really feeling the pain from these oil prices at records. Look at the 30-year yield. It topped 5% earlier. If we take a look at futures, even with mostly fine earnings yesterday, we're seeing futures just barely in the green. The S&P and NASDAQ 100 futures now pointing to higher opens. Earlier, the S&P was looking to open lower. The dollar index down about 0.2%. Asian currencies really across the board are weaker today. We saw the yen top 160, and both finance minister and the currency chief come out with aggressive verbal intervention. Let's get to some individual movers now with Chloe Melly in London. Chloe.
Good morning, Vonnie. It's a tale of winners and losers in big tech this morning. We're seeing Microsoft, but in particular Meta, falling because of those growing concerns over AI spending, while on the other hand, we're seeing Alphabet and Amazon move higher because it seems that their AI investments are actually paying off with some tangible benefits. Moving on to another name in that tech sector, which is the chip maker Qualcomm, which is moving higher, up more than 11% this morning after saying it is making inroads in the data center market that will become a key source of growth going forward. And it's also benefiting from a recovery in the phone industry in China. And so we are up quite strongly there. And finally, Stellantis is down after investors question the sustainability of this expected turnaround in the very important North American market, because the performance in that market was driven primarily by price cuts and by one-time gains from tariff refunds as well. So there are some questions there, and therefore we are down quite a bit, down almost 7% for Stellantis this morning.
All right, Chloe, thank you so much. Last trading day in April, and here's where we are. That's Chloe Melly. Let's get to Washington now, where President Trump is set to receive a briefing on new military options for action in Iran. That's according to Axios. The report sending oil to a wartime high. Brent crude currently trading just below 117, coming off just a little bit, that contract expiring today. Bloomberg Kasia Klimashinska joins us now. So what's the word in Washington, Kasia? What kind of military options does the president have? And, you know, is there anybody saying that this might actually bring Iran back to any kind of negotiating table?
Vonnie, hello. So the bottom line is that this ceasefire between the U.S. and Iran is now at risk because President Trump, according to Axios, is going to get a briefing today outlining some potential military options, one of which would be a brief that powerful attack that the U.S. would be hoping that it would bring Iran back to the table to discuss its nuclear enrichment plans. But there are also other possibilities that President Trump might look at today. One of them would be an attempt to reopen at least part of this key waterway, Strait of Hormuz. And finally, another one, a special operation in which the U.S. would try to get a hold of Iran's nuclear stockpile. So this is the briefing that the U.S. Central Command Admiral Brad Cooper will bring to Trump today. He did talk to President before in the last days of February, and some sources told Axios that that briefing encouraged Trump back then to go ahead with the military operation. So that's perhaps why we see those dramatic movements, especially in the oil market today, out of concern that we will see more military action in the Middle East, not only from the U.S., but perhaps also from Iran retaliating.
Right, and no clear strategy really to bring Iran back to the table either. It's not clear that more force rather than persuasion will do anything other than further entrench Iran. Now, moving to domestic issues, it seems like the DHS shutdown is nearing its end. Bring us up to speed on this.
So that's after 75 days of shutdown of the Department of Homeland Security. That's the department that is enforcing immigration, anti-immigration policies of the Trump administration, but also is responsible for verifying the safety of our luggage at the airports. So finally here we see some movement. Republicans in the House have passed part of the plan that would finance the department yesterday, and they are likely to act again today. It's mostly just Republicans because, remember, 75 days ago, Democrats said that they won't fund the department anymore after the tragic violence in Minnesota that led to shooting of 2 Americans there.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska. Turning to markets now, a lot to digest today. Treasuries a little steadier after a slump driven by the Fed's hawkish hold and anticipation of that, I should say. 30-year yields now back just below 5%, having topped that level a little earlier. Joining us is Bloomberg's Ven Ram. So, Ven, has the market repriced? Is that the move over at this point, repricing for an FOMC that's maybe a little more concerned about persistent inflation?
Well, I think that, the path of least resistance for rates is definitely higher from here. Because, as you mentioned, there was this massive dissent within the Fed, within the FOMC. And I think that, the Fed has projected a core PCE of 2.7% for this year. We can almost disappear, we can almost banish any thoughts of inflation dissipating at any point soon to 2.7%. I think that we are going to get a much higher read on inflation in the coming months thanks to the energy shock. So I think that, the markets are still not pricing a hawkish Fed, because if you look at the VERP action, if you look at the action on SOFR rates, I think it's a pretty flat curve still. So I think that, the markets are underpricing the risk that the Fed may have to increase rates. But, it's clear why the markets are positioning the way they are because of Warsh's previous pronouncement that the interest rates can go lower with a new paradigm. But I don't know how he could do that, particularly considering the dissent. So I think that the path for rates is higher from here.
Yeah, the Warsh impact may be cushioning the blow a little bit, as you say, at least for now. Let's move to the Bank of England and the ECB, because we're going to get, rate decisions there too, and they're also grappling with the same issues, Ven. I mean, what happens to currencies when those decisions come out if they don't sound any more united than the Fed?
Well, I think that the Bank of England has got an imperative to act because, they've been missing inflation. They're missing the inflation target for the better part of 5 years now. So the markets have already punished gilts severely this year. And I think that if the Bank of England says that there is no urgency to act, I think that the markets will punish the Bank of England by sending rates higher. That may be ironically supportive of the pound for the time being. And in the case of ECB, Bonnie, I think that, although the ECB has said that they won't hesitate to act, the markets are most keen to hear when the first rate hike will come. And if they say that, they're willing to raise rates as soon as in June, because given the oil price spiral and it's already close to the adverse scenario. So I think that if they suggest that, I think that the markets will get slightly calmer, ironically, because it shows that they are willing to stamp out second-round inflation.
Yeah, and then, it took some time, but the Japanese authorities finally came out with the big bazooka, if you like, of verbal intervention, at least today, right, Ven? Because we saw the yen above 160 for several hours. Will this work? We're trading now at, 159 and change, but that's, still pretty weak.
Exactly, as you said, Bonnie, 159 and change is exactly what it is. So what it shows is that the yen hasn't moved that much despite the jawboning. And the markets, frankly, have grown inured to the idea of jawboning from the Bank of Japan and Japanese currency officials because, they've been saying it for months now without actually following through on their actions. But even if they do act, I think that the upside for the yen is very tactical. It'll be about 3 to 4%, maybe 5% on a good day. So I think that's as much as you can expect. But the question is how long any gains in the yen will be sustainable. And that's not going to be sustainable simply because the Bank of Japan is behind the curve. It was already behind the curve before the war. And it is even more so now after the war because of the likely inflation overshoot. And of course, the BOJ themselves raised the inflation forecast for this year, next year. So I think that if they continue to drag their feet on raising rates, the markets will punish the JGBs, and that will mean higher yields, and that will also mean a weaker yen. There is no escaping the longer-term trajectory of the yen if the BOJ hesitates to act. It doesn't matter what the currency official says. It's what the BOJ does that matters for the currency.
All right, we'll see what the BOJ does next. Ven, thank you so much, Bloomberg's Ven Ram. And don't miss our interview with National Economic Council Director Kevin Hassett. That's at 9:30 a.m. New York time. Now to other top stories trending on the terminal this morning. The White House is opposing Anthropic's plan to expand access to its Mythos AI model. According to the Wall Street Journal, officials are worried Anthropic doesn't have the computing power to serve more Mythos users without affecting the government's ability to use it effectively. Saudi Arabia's Public Investment Fund plans to stop financial support for Live Golf after this season. An announcement is scheduled today that will detail Live Golf's next business steps. Live declined to comment. The demise of Live would leave the players who left the PGA Tour in a state of professional limbo. Bill Ackman's Pershing Square USA down 18% in its IPO debut. The combined closed-end fund and alternative asset manager raised $5 billion, short of the high end of $25 billion it was aiming for 2 years ago. Coming up, we'll dig into the report cards on AI spending with Angelo Zeno of CFRA next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The coding models have gotten so good that they are now contributing in a significant way to the rate of improvement of AI itself. And so the AI is really good, and it's getting better as a result of the quality of AI. And so kind of recursive self-improvement is this industry term here.
John Collison there, the president of mobile payment provider Stripe, on its AI strategy. So return on the AI spending be front and centre this earnings season. Alphabet a clear winner with a solid payoff. Meta, though, lagging, and you can see it in the pre-market moves. Let's bring in Angelo Zeno of CFRA, who's running on just a couple of hours sleep, I think, Angelo. Talk to us a little bit about the hyperscalers. We've got this massive amount of new spending, and we weren't really expecting it this quarter, were we?
No, I mean, not necessarily. I'd say it did play out largely how we thought, in the sense that you look at both Alphabet and Meta, they just really just tweaked the numbers higher. I mean, Alphabet went to 190 billion at the high end. They were looking at 185 billion previously. And then when you look at Meta, I think they boosted the high end by about 10 billion to 145 billion. So, you know, in our view, those are very modest increases, but I think very good the fact that they held those CapEx numbers and outlook for the year. And then on the Microsoft side of things, that was, you know, if there was one company that was going to significantly ratchet the numbers, it was going to be Microsoft, and that's exactly what they did, alluding to 190 billion. They did basically cite, you know, the supply constraints that are out there, which is probably also the reason the other two tweaked the numbers also higher. But at the end of the day, when you look at the trajectory of these three companies, I'd say largely kind of how we expected it to play out.
Yeah, I mean, it is interesting, though. Mark Zuckerberg really wasn't apologetic at all. In fact, he admitted that Meta doesn't have a very precise plan for how each AI product will be cultivated. Investors aren't taking it this morning, Angelo. Will they in general?
Yeah, I mean, I think as far as Meta is concerned, that was the one that had the most approved going into this quarter. And, you know, I'd also say they probably did the least, you know, they serve themselves the least in terms of the trajectory that they threw out there in terms of, you know, talking the AI story and monetization efforts. They didn't really give, I think, as many details about the potential ramp up in products that you can see in the monetization of those, you know, new LLMs and what have you over the next couple of quarters. So I think, you know, the negative reaction you're seeing in shares here this morning largely reflects that, as well as the need to continue to spend aggressively. I think investors really want, you know, a strong story and greater direction on how that AI spend is going to be monetized. And Zuckerberg just didn't do that on the call.
Is getting data centers online going to be a huge problem, Angelo? I mean, some of this increase in CapEx was because of, you know, component costs going up because of the Iran war and so on. It wasn't just new spending, let's say. But it does seem like there could be more of a block, let's say, to getting data centers online. And how much will that present problems going forward?
No, I think that's a fair point. And, you know, when we start thinking about data centers and data center installations going online, especially amid the higher expected CapEx spend, and not to mention as you go into 2027, I mean, we just heard Alphabet talk about sharply higher spend in 27. Again, the higher spend is justified in the sense that the demand is there. I think the issue is going to be is we are just running extremely tight across the supply chain, whether it be memory, whether it be CPUs, whether it be on the optics side of things. There are so many bottlenecks across the supply chain, and that doesn't even go into taking into account the energy concerns and need to find the energy to kind of run these data centers properly, which we think is going to be more of an issue by late 2027 into 2028. So there are concerns as far as getting these data centers connected and getting all that supply on in your hands. But that being said, at least over the next 2-3 quarters, at this point in time, we think most of these hyperscalers, they've got a good grasp on things.
Just in terms of each company's fundamentals, there's a broad spectrum, right? Are some of them more exposed to problems emanating from higher oil prices, persistent inflation potentially, and just the Iran war in general? Or, are others of them better able to hold up with these weaker macro fundamentals?
Yeah, no, it's a good question. So I think as far as Alphabet is concerned, they're probably best positioned right now just because of the backlog. I mean, they essentially talked about a nearly doubling of their backlog on the cloud side, quarter over quarter. The demand visibility is there for this company, not to mention what they're doing on the search side of things. Even with macro uncertainties out there, search is usually the last thing to get cut on the advertising side of things because of what they offer to advertisers. I would say, and the ROI there, I would say in terms of the risk, that the name getting hit right now in terms of Meta is the name that you would have to acknowledge is more prone to some of the macro uncertainties, some of the Middle East uncertainties. They cited it on the call as well in terms of missing their daily active user numbers. So that would be the one most at risk. I think Microsoft really did a good job in terms of talking up their story on the call. Obviously, it's not being rewarded here pre-market, but nonetheless, in terms of what they've done with Copilot and their cloud business, I think overall they're executing extremely well. But that's something else. That's another name you do have to watch out for in terms of where budgets go amid macro uncertainties.
Absolutely, Angelo. The hard part's done. Thank you so much, Angelo Zeno of CFRA. Staying with earnings and consumer names, including Hershey's and Molson Coors, reporting before the bell. Bloomberg's Jennifer Creary joins us now for more. Jennifer, we're just beginning to hear in earnings calls things about the Iran war and higher oil prices and how they're impacting business, essentially. What will we expect to hear today about the consumer?
Yeah, listen, I mean, with a lot of these companies are highlighting the impact of conflict in the Middle East on consumer sentiment, but also energy pricing. That's really eating into the amount of costs that these businesses can swallow. So on the consumer front, it seems like a fairly mixed bag. So we've got Hershey's on the one hand, the chocolate maker, expected to post fairly positive results. Analysts are citing an early Easter as giving them a bit of a boost in Q1. Now, Hershey's only recently, earlier this month, said that it expects organic net sales to grow 2 to 4% every year through to 2028 and beyond. So it's fairly bullish, but of course, investors will be looking out for further commentary on whether conflict in the Middle East or other macro factors will be affecting its outlook going forward. We've also got Wayfair, the home furnishings provider. Much of its growth is expected to come from overseas rather than the US. The US has really suffered from slow app downloads, but also weaker consumer sentiment. And on the other hand, there's also Molson Coors, the beer maker, expected to post another quarter of volume declines. Now, Molson Coors, it's not a great time to be a beer maker at the moment. Consumers are really pulling back on their drinking. But, it's made a couple of acquisitions as of late. Atomic Brands, for example, the cocktail provider, Molson Coors, essentially trying to diversify some of its holdings. So companies are trying to spread some of that risk across its portfolio.
Jennifer, we'll hear what they all have to say on the calls, and we'll also get some travel companies too to give us some insight, like Hyatt and Royal Caribbean. That's Bloomberg's Jennifer Creary. Coming up, rate decisions from the Bank of England and European Central Bank will get you set up for your trading day. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersetchi in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today, the final trading day of April. More earnings, of course. We have Hershey, Caterpillar, Eli Lilly, all before the bell, and then Apple, the big one after the bell. Also rate decisions from the Bank of England in just more than an hour, and then the ECB at 8:15 a.m. Eastern. Plus we get plenty of data today as well. US PCE at 8:30 a.m. Eastern, along with GDP data, personal income and spending, and jobless claims. Let's take a look at some movers pre-market. There are going to be a lot of very volatile stocks trading today. Alphabet extending post-earnings gains this morning after a strong return on AI spending really cheered Alphabet investors. A whole different story for Meta. Its spending plan offsetting solid results. Also, Mark Zuckerberg's unapologetic tone on the call. Qualcomm, another winner, up more than 10% in the pre-market from yesterday's slew of earnings after the firm said it's making headway in the data center market. And then this is your macro outlook for the day. It could be a tough one. April not going out like a lamb at all. Brent crude is lower now, but it topped $126 a barrel earlier. We have S&P futures barely higher, and the 10-year yield down 3 basis points after a phenomenal move this week. That's it for Bloomberg Brief.
The quarterfinals at the Mutua Madrid Open. Jannik Sinner ended local hero Rafael Hodar's dream run with a comfortable straight sets win to reach the semi-finals. The world number one continuing his excellent run of recent form, which included winning the Sunshine Double at Indian Wells and Miami. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's all about the tech sector within the equity market.
We might be a little bit overbought here.
You have very strong sort of earnings fundamentals underpinning things.
Everyone is looking to make sure that this growth is still as strong as it has been.
The outlook still is optimistic.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, division grows. A divided Federal Reserve just about holding on to an easing bias as failure to find a diplomatic solution with Iran is keeping crude elevated. Performance of some of the world's biggest companies beginning to splinter. Meta slides, Alphabet climbs.
Let's just put this into perspective. $725 billion. That is how much the four hyperscalers that announced earnings after the bell, the three with Meta, announced after the earnings for this particular year for CapEx. How much is this justified? And that's where the splintering comes into play. For Alphabet, they're crushing it in terms of the acceleration of their revenues. People say, great. For Meta, it's increasing because component costs are increasing. And what they're going to do with it, trust us, not exactly flying in markets right now.
Will this tech story keep this equity market supported with this developing in the commodity market? This from Axios this morning. And for once, the Axios story is not bullish. President Trump slated to receive a briefing on new plans for potential military action in Iran. Wartime highs on crude just off those levels this morning. Brent pulling back from 120. Brent this morning around 116.
So we really need to understand what options are going to be presented to the president and then what decision he makes. At the moment, what we've seen from this president is he's willing to keep the blockade, have this impasse, no need to escalate, no need to de-escalate. If leverage is what the Iranians hold in the Strait of Hormuz, potentially that is what the president could decide when it comes to an escalation. Maybe not striking targets in Iran, but maybe the Navy has to come through and start escorting tankers through, because can they live with these oil prices? Look at where gasoline is this morning in California, north of $6 a gallon.
Do we get some soothing words as we get closer to the opening bell? Maybe, but bear in mind this. April 17th. The president came out and said the Strait of Hormuz was reopening. Over the weekend, it didn't. Ever since, we have not had a down day for crude. Ever since then. This market has really snapped into show-me mode. The hopium no longer bites in quite the same way.
Exactly. Verbal intervention doesn't hold the same kind of punch. And right now, this is coming at a time where economies are not yet breaking. So you've got fiscal and corporate stimulus, if you will. At the same time, the oil prices are going higher. And suddenly, we're talking about a new kind of tightening of financial conditions, a 40% chance of a rate hike by next March by the Federal Reserve. All of this comes together with this real tension. How long can risk assets keep rallying?
Let's go through some of the levels we're at this morning in the bond market. Country to country, starting with the US. Near the highs of the year on a 10-year yield. In Germany, back to the 2011 highs. In the UK, numbers we haven't seen since around 2008. Over in Japan, the 1990s. We're back to March again. We're hitting those kind of levels once more.
We're above 2.5% in Japan. Just a couple of years ago, we were at 0. The idea of 2.5% in Japan is like getting 10% in a lot of other places, considering that they own the bond market, and this has not been a market for a very long time. Does this reset expectations? And again, I go back to what is the exit strategy? If we have higher oil prices, but we don't have an economy that is torpedoing, and if anything, governments are saying, we'll support you, consumer, because politically it is going to be disastrous for us not to do this. That is why you're getting a real hesitance from buyers of the long end, exactly what levels they're going to accept.
And now Japan's finance ministry threatening to intervene in the FX market because of the moves we've seen in the Japanese yen. Later this morning, programme note for you, 9:30 Eastern Time. We'll extend the programme. We'll bring you the news conference with Christine Lagarde over at the ECB. After that, we'll catch up with this guy right here, the NEC director, Kevin Hassett, following quite the announcement from the chairman of the Federal Reserve just yesterday in the news conference. He's stepping aside for Kevin Warsh, but, and it's a big but, he's sticking around. He's staying on the board.
He wants to see the process concluded with full transparency, the process of legal challenges. And he said that that has been an attack on the institution of the Federal Reserve. I'm sure there'll be some harsh words. We heard from Treasury Secretary Scott Bessent yesterday talking about how this was an insult with respect to his staying on. A real question about what the administration's response is going to be.
Well, Jay Powell yesterday, and great job, guys. I watched the whole Fed programming. He said he's going to keep a low profile, but at the same time, he had this stature of Fed chair. So how do you keep a low profile? We didn't just hear from the Treasury Secretary. We also heard from the President of the United States. A brief truth for the president, but he said he wants to stay at the Fed because he can't get a job anywhere else.
I thought that was a lightweight truth. A lightweight social media post. I
also
thought it was
think
nothing
it's false.
compared to what I was expecting to see from the president after that.
Are you considering relocating NASA's headquarters out of D.C. once the lease is up? States like Texas, Ohio, and Florida.
Well, the best man to tell you that is the man standing right over here. You heard that question with those beautiful ears of yours? He's got great hearing, you know, he's got super hearing.
Trick of the trade, sir.
Are you considering relocating?
oil is going to cause the economy to slow and is going to cause earnings to slow with it. We just, our work has said the 4-month window is really, really sort of the time looking at past spikes. Where that comes into play, we're getting close.
Except for tech. Because ultimately, that's what everyone's been saying, except for AI spending. And that would be the one thing that ultimately keeps going, because ultimately, as my son told me last night, AI beats humans, and we can all just rely on our chatbots more than we can our mothers.
You had a good evening.
I was fantastic. I'm really existential this morning. Please watch out. But I am curious about, from your perspective, at what point is this CapEx plan unsustainable if it's just to pay for higher and higher commodity costs that are the inputs to what they're trying to build?
Well, that is a challenge, disaggregating, and that's why, one of the companies that reported last night is softer, because you can't disaggregate, what is higher input costs and what is, organically higher CapEx intentions. And that is, an issue. But look, again, all of this is predicated on the fact that you can have a continuation of this build-out, provided two things. Number one, that conditions in the economy and the credit markets remain benign, which they clearly are, despite triple-digit oil right now. And this idea that there is an eventual payback window for the AI build-out. And again, the evidence is that there is adoption going on. The evidence is that it is driving revenues and it is saving costs. Is it as fast as the market would have expected it to be? No. But because the economy is as benign as it is away from oil, there is patience.
So I want to come up with another expression than boiling the frog, because Pete is coming after me. But I'm curious also about at what point you hit a tipping point, in terms of you have CapEx that keeps increasing because it feels existential and independent. You have yields that are going up because people can keep spending, which allows inflation to keep going through the system. You have enough resilience to keep those yields high. At what point do the yields become the breaker to this entire cycle?
Well, and that's why this is a challenging environment, because as we've seen over the last several months, yields are moving higher in lockstep with the price of crude oil. And so that it really points to the fact that this is a time optionality to all of this. My answer to that would be is that, until the economy shows signs of cracking, this is sustainable, okay? There are no signs of cracking right now. Remember, a couple months ago, we had credit angst all swept aside. It was an issue that we know now has been contained. But essentially, what you're looking for is signs of stress, and there aren't any at the moment.
How many months can we live with triple-digit crude?
Our work has shown that sort of month 4 is where things get dicey. Again, it's also the amplitude. In our mind, if you break the prior March, the beginning of the cycle high, around 120 on WTI in a material way, that will accelerate the timeline. But otherwise, we're looking at sort of Independence Day, July 4th, as kind of a line in the sand.
It's $99 in the futures curve for July. That's triple digits, basically.
It is. You are essentially at that, which is why it's incumbent for the prices to find a way, whatever that way is, to moderate between now and then.
Julian, it's good to see you're going to stick with us on Pleased to Say to break down some of these tech earnings just a little bit more. Julian Emanuel there of Evercore. For your equity market this morning, and good morning to you, just about positive by 0.2% on the S&P. With an update on stories worldwide with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. President Trump defending the U.S. blockade of Iranian ports, saying it's more effective than bombing the country. Trump rejecting the latest Iranian proposal to open the Strait of Hormuz and lift the blockade until concerns about its nuclear program are addressed. Axios reporting the president will receive a new briefing on the situation today. Mag 7 earnings in full swing. Shares of Alphabet are rising after the tech giant reported solid growth at its cloud computing unit. Amazon also beating on key metrics. Meta, though, falling after issuing a CapEx forecast that was higher than investors expected. The Federal Reserve holding rates steady in Jay Powell's final rate decision as chair. 4 policymakers dissenting against the decision, with 3 opposing in particular, the language suggesting the Fed will eventually resume rate cuts. One, Governor Stephen Miron, preferring a quarter-point rate cut this time. And that is your Bloomberg Brief. John.
Ivani, thank you. Good to have you. More Vonnie Quinn a little bit later this hour. Up next on the programme, wrapping up a monster day of tech earnings.
The 3 critical data center businesses, the hyperscaler businesses, exceeded expectations. They're all still accelerating. Meta's not even in the top 10, I would say, in terms of its frontier model.
We'll talk more about Meta in just a moment. Stefan Slavinsky of BNP Paribas joins us next, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheets.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Coming up a little bit later, 2 central bank decisions, 7 a.m. Eastern Time. We'll hear from the Bank of England. Later at 8:15, we'll hear from the ECB. Then we've got economic data at 8:30 Eastern Time. Jobless claims and a whole lot more. Then after the close, the other big tech titan, Apple, reporting after the close a little bit later.
Does it matter? I guess this is the real question. How much does the backward-looking data for Apple matter, and how much is it going to be the show of who's taking over and what they're planning to do? Is there going to be some sort of CapEx plan that's going to be announced to talk about exactly how they're going to bring AI into the iPhone?
You brought up the really important question for Meta. Meta's increased CapEx. Are they doing that because there's more things to buy? Or the things to buy just got more expensive?
We don't know. And ultimately, we heard this tone also from Microsoft. Others also increased their CapEx plan, partly because the cost is just going up, and we've heard this from everyone. So at what point are they actually getting more for their increased costs, or are they just simply having to pay more? And is that something that's digestible for people? AI at what cost?
Nasdaq futures this morning positive by 0.2% on the S&P 500, up a little more than 0.1%. Under surveillance this morning, wrapping up a monster day of tech earnings.
The 3 critical data center businesses, the hyperscaler businesses, exceeded expectations. They're all still accelerating. That's a very good sign in terms of the progress of AI. Meta's not even in the top 10, I would say, in terms of its frontier model. Investors are going to expect them to either calm down on the CapEx or reduce enough OpEx to allow margins not to be degraded.
So here's the latest this morning. Big tech earnings kicking off with Alphabet surging on high demand for its cloud and AI platforms, while Meta's capex forecast is fueling investor doubts. Joining us now to discuss is Stefan Slavitsky of BNP Paribas Exane. Stefan, welcome to the programme. I want to talk about Meta exclusively. Just first off, they've raised their capex. Lisa and I were just talking about it. Are they doing that because there's more things to buy, or the things they wanted to buy just got more expensive?
Yeah, good morning. I think it's mostly inflation. So you see Meta raising capex by $10 billion and talking about the component price inflation. Microsoft talking about close to $200 billion of capex this calendar year, and they're highlighting that $25 billion of that is just coming from that component price inflation. So I think that is one of the flies in the ointment today. Those were four great set of numbers yesterday, especially on the top line, but also margins expanding for all four by 125 basis points on average. But capex keeps going up, and increasingly that's being driven by inflation.
And some companies are being punished for it, others aren't. Meta's being punished for it. It's down by 8% in the pre-market. Do you think, Stefan, that's something they just continue to stomach?
I think when you look at the reactions today, what you're seeing from Google and Amazon is they're chip companies now. And so one of the big trades of the past year and the past 3 years has really been hardware over software. And so when you look at Amazon, when you look at Google and their proprietary semiconductors, Inferentia and Trainium, they're going to be increasingly selling those to enterprises and to third parties. So they're in a way a beneficiary of that. Microsoft and Meta are behind on their proprietary silicon, and so they have to stomach those costs a bit more than the other two.
How much, Stefan, do we see the market starting to say we're going to go with the promises of Amazon and Alphabet, because they do go beyond just the chip production, obviously, and they're direct competitors with Microsoft in particular? Is Microsoft truly falling behind?
I think when you look at the results last night for Microsoft, Amazon, Google, the big hyperscalers, they did all see growth accelerate in the quarter. Interestingly, when you look at the quarter, Google added the most incremental revenue, even more than Amazon and Microsoft. So they're officially kind of neck and neck now with the big two. But what I think you're also seeing is not only are all three of them benefiting from enterprise cloud demand, but their core businesses are benefiting as well. So Google search going from 17 to 19% growth. It was 10% just a year ago. Microsoft, the big concern was Microsoft 365 commercial cloud, the kind of office business that would be disrupted by Anthropic, but growth actually accelerated to 15%, and we're seeing Copilot demand finally boom. And even Amazon's core business is still doing low double-digit growth. So that's reassuring for all of them that they're monetizing AI, not just in enterprise cloud demand, but in their core businesses. And finally, I think the other thing that's really positive is it's not just renting out GPU infrastructure to model companies. We're starting to see that cloud monetization broaden out to other products, especially software products, databases, data platforms. And that's important because those are higher margin businesses. That's what drove high margins in Cloud 1.0. And the companies are increasingly saying they're seeing signs that that will help drive returns in Cloud 2.0 in this GPU cloud build out.
Stefan, how long before CapEx becomes a nice to have versus a need to have?
Well, right now it's still a need to have. As you pointed out, we were at probably $725 billion now between the big four and CapEx this year. Last night, Google said next year, 27 will be up significantly or meaningfully. So we're going to blow through $1 trillion probably next year. Thankfully, we are seeing the uses increase. Thankfully, we are seeing the monetization. But as we're seeing in Microsoft a bit today, and certainly Meta, if you don't have a clear path to monetizing that CapEx via multiple routes, via new AI businesses, via your core business, maybe via hardware and other capabilities, the market's going to increasingly scrutinize that CapEx spend, even if your core business is doing very well, as it is in Meta's case, growing 33%.
Stefan, it's good to see you. Thank you, sir. Meta down by close to 9%. The story of Alphabet, the turnaround there in the last 12 months, absolutely phenomenal. Meaningful acceleration of growth, crushing guesstimates. CapEx, $185 billion for this year. That's double last year. The turnaround here. Imagine me saying to you last year when people thought they were in some kind of existential moment, they'd come out with numbers like this. 12 months later.
Yeah, and they're winning on search. They're beating, actually, ChatGPT. They're beating the OpenAI product in a material way and saying not only does it not replace search, it enhances it and brings more viewers in. Their earnings per share was $5.11 versus the estimate of $2.62. That gives you a sense of the scope of this beat.
Gillian, still with us. Gillian, let's go through some of these numbers, these results. Things can move really quickly in this sector. The last year's demonstrated that. But are we beginning to expose the winners and the losers of this sector?
I think there's two lessons here. Number one, we have to adjust our thinking. It used to be that billions impressed us. Now it's trillions, okay? Because cumulatively, and our semis analyst expects the CapEx number to be 1.1 trillion in 2027. And the other thing is that the laws of size are just so evident. Because if you heard your last guest, basically the spoils are accruing to the companies that now do other things well away from their original mandates, so that they are total enclosed ecosystems of AI, and you only do that with size that is evocative of the concept of trillions.
Are any of these going to become the next AOL? I mean, are any of them going to become rendered obsolete on some capacity as the world moves on and some of the behemoths win share?
It will happen at some point, but frankly, I'd prefer that doesn't happen. As a very young trader, I was sitting in the proprietary trading room when the AOL-Time Warner merger was announced in the beginning of 2000, and all the gray-haired vets looked at each other and said, uh-oh, I think this is over now. And of course, that was the top of the Y2K bubble. So let's hope it doesn't happen in AOL style.
You gave the sense that this feels a little bit like 1999. Are we in February? Are we in December? Are we December 31st? I mean, kind of where are we in 1999?
So the swing factor...
Pick a day, Julian. Be precise.
My son's AI would. No,
well, I will tell you, I had a number of clients last night email me asking me to pick a day. It goes back to the economy's strength, which is inextricably linked to the amount of stress that's going to be caused by the elevated oil price. You remember, 1999, the Fed hiked 175 basis points to stop the bubble, which they did ultimately in Y2K. The question is oil going to have the same influence? The Fed, I don't care what the implied probabilities are, the Fed is not hiking this year, okay? That's, again, we said that a number of weeks ago. We'll say that now. They may not cut. And frankly, at this point, you'd rather not see them cut, because if you're going to get a cut right now, it's because the economy is weakening. But the point here is that we are in a time where if oil is the handicapping feature, you could have a sudden rollover. But again, we're not there.
Julian, it's good to see you. Thanks for joining us this morning. What a 24 hours in financial markets. Julian Emanuel there of Evercore. The latest out of Iran, according to State TV. We're waiting for a statement from the supreme leader, someone we've not seen or heard much from over the past 2 months. That from State TV just moments ago. When we get that statement, those headlines, we'll bring it to you. Up next, Victoria Coates of the Heritage Foundation as President Trump reportedly weighs new options in Iran.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Q1 felt like a lifetime. April, blink and you missed it. Final trading day of April, up on the month on the S&P 500, higher by more than 9%, potentially on the S&P. The biggest monthly gain going back to November 2020, and we saw some big monthly gains back in that year. Equity futures this morning up by 0.2 on the S&P 500, on the Nasdaq up by 0.3. The S&P totally unchanged just yesterday in the face of these moves in the commodity market, which is crazy. 8 days of gains for Brent into today. We'll see if we make it day 9. We're pulling back this morning to 116.50. Over those 8 days, higher by 30% over that period.
And you have seen it bite in certain areas. At the same time, the technology trade has just overwhelmed some of the oil concerns. Semis with the best month, as you were mentioning, since 2000. Going forward, though, I think that what Julian Emanuel was just talking about is the key point. We're going to hit a breaking point. Stuart Kaiser was talking about this as well. And when you start seeing prices stay at these levels for even just a couple of more weeks, we might hit that point.
Getting closer. We're not there yet. We're pulling back on crude just for now. Let's turn to the bond market. There we've seen some pretty interesting moves. On 10s and 30s, the highest close of the year so far in yesterday's session, pulling back from those levels. 497 on 30s after having a little look at 5%. The 10-year was through 440, now back down to 439.47.
We hit 5% on the 30-year, and this came as global bond yields crept higher in the face of the oil price shock and potentially central banks led by the Federal Reserve that are not thinking of rate cuts anymore and, frankly, seeing actually a chance potentially of a rate hike, even though Julian Emanuel just said there's no chance in hell. And we also are getting that sense that they're not even willing to move to a neutral position. Nonetheless, this clearly is a quagmire for the central banks, and clearly it's being reflected among the bond traders.
And these are obvious headwinds for markets, but the earnings story has been so powerful in certain parts of the stock market in America. Take this one, just dropped. Caterpillar, first quarter adjusted EPS, 554, the estimate 463.
This is the industrial renaissance. You need this equipment in order to build stuff. And guess what? Everyone's building stuff. You also saw Ford beat expectations yesterday. People are buying cars. Every cylinder of the economy was set to actually outperform. And so suddenly you're seeing these earnings come through in a bold way. You're talking about how the earnings came in better than expected. Machinery, power, and energy revenue came in at $16.5 billion. That is more than $1 billion more than expected, to give you a sense of where some of these gains are coming from.
A few headlines I want to work through here, just away from Caterpillar and the earnings story. I mentioned we were waiting for a statement from the supreme leader in Iran. Those headlines just slowly crossing the Bloomberg terminal. AMH, what do you see?
So he's saying that there's a new chapter taking shape in the Gulf when it comes to the Strait of Hormuz. And that new chapter, obviously, is that the Iranians have full control over it. They're charging tolls and they're going after Western vessels. Still waiting to hear from him more. He says he's giving this statement on Persian Gulf Day, which they do every year. But Persian Gulf Day is to commemorate the Iranians pushing out the Portuguese in the 1600s from the Strait of Hormuz.
We'll come back to that story in just a moment when we have more. As we count you down to the opening bell, we're about 3 hours away. Lots of single names, some morning movers for you. Yahara has more. Hey, Yahara.
Hi, John. We start with big tech, of course, and it all came down to who's seeing the payoff from AI. Alphabet clearly is. Shares are up 6.7% after a clear beat due to cloud growth accelerating, and Amazon shares also up after AWS posted its fastest growth in years, helping investors look past heavier spending. Now we get to the laggards. Microsoft down 1.5% after Azure just failed to impress investors, especially stacked up against Google and AWS. And at Meta, you're seeing a revolt from investors due to higher spending. So those shares down 8.7%. Turning to Qualcomm, those shares soaring 12% in the pre-market after CEO Cristiano Amon teased that they will be shipping custom AI chips to an undisclosed hyperscaler later this year, a sign they're getting into the red-hot AI data center market, that helping investors look past a softer outlook. due to higher memory costs. And turning to another chip maker, Intel, those shares are up 3% in the pre-market after a 12% surge yesterday that brought the stock to a record high and seemingly inspired President Trump to tout the government's stake in that company, posting on Truth Social that he's very proud for making that investment and making the U.S. over $30 billion in the last 90 days because of this rally. John?
Yahara, thank you. Thank you very much. On our radar this morning, crude hovering near wartime highs on fears the U.S. is considering new military options in Iran. Axios reporting this morning that the president will receive a briefing from the CENTCOM commander after rejecting Tehran's latest deal. Elsewhere, the White House opposing a plan by Anthropic to expand access to its Mythos AI model. Sources telling us here at Bloomberg that U.S. officials are concerned the company lacks the computing power to guarantee security. And finally, the Trump administration blasting Jay Powell's decision to stay on at the Fed after his term as chair is complete.
It's highly unusual what Chair Powell did. This is a violation of all Federal Reserve norms, and it is an insult to Kevin Warsh, Mickey Bowman, and Chris Waller to think that these other Republican nominees do not care about the institution of the Fed.
The president writing on Truth Social, quote, Powell wants to stay at the Fed because he can't get a job anywhere else.
I love that he mentions the Republican nominees. Guess who else is a Republican nominee? Jay Powell, who actually was nominated by President Trump. So, I mean, in fairness, okay. On the other hand, the fact that President Trump didn't come out more severely against Jay Powell was interesting. I was expecting lawsuits. I was expecting a standoff. I was expecting potentially something further. Maybe people are saying this is going to give Kevin Warsh a bit of a reprieve, actually, in terms of his next steps.
We're going to spend some more time on this. We've got the whole morning to go through this. I think we've all got thoughts on what took place in the last 24 hours. Stay tuned for that. We'll also catch up with Neil Dutta a little bit later as well, I believe. Let's get to crude, hovering near 4-year highs with President Trump reportedly gearing up for a military briefing on Iran that could open the door for fresh escalations. Jonathan Tamari of Bloomberg Government joins us from Washington for more. Jonathan, welcome to the programme. What do we know so far this morning?
So far, as we know, the president is supposed to receive a briefing today from CENTCOM commanders. Joint Chiefs of Staff Chairman General Dan Kane is also supposed to be there. He's going to get a range of options, according to Axios, from bombing, from more direct action to try to take control of the Strait of Hormuz, to potentially sending in special forces to grab the enriched uranium that Iran has. All at the same time, the president yesterday also told Axios that he saw the blockade as somewhat more effective than the military action that he's taken. So he's laying out a range of options, and you never know with the president what he's willing to actually do and what he's doing to build leverage in potential negotiations.
I'm not sure these headlines just crossing will help the diplomatic effort. Jonathan, thank you. We appreciate it. I just want to read some of the headlines coming from Iran's supreme leader. This statement brought to us by Iranian state TV that Iran will dismantle U.S. exploitation of Hormuz, that new management of Hormuz will benefit the region. I'm not sure if Gulf partners in the region right now would see it the same way.
Absolutely not. This is not acceptable to the UAE or Saudi Arabia or any of the Gulf partners that use the Strait of Hormuz. And also, some of them are also right there as well, like Oman, in that body of water. But of course, this is Iran's one piece of leverage. So what Jonathan is talking about in that Axios report, if the president wants to potentially use military assets, it might be just at the Strait of Hormuz. Maybe that means naval escorts like we saw in the 1980s. Unclear, but this is the piece of leverage that's starting to really hit the oil market.
Here's the take from Victoria Coates of the Heritage Foundation writing the following. We're going to have a tipping point in the coming weeks where Iran just can't sustain itself anymore. That's when the president will have the most leverage. Victoria joins us now for more. Victoria, welcome to the programme. This is a high-stakes blinking contest. With that, there is no doubt. Which side do you think is better positioned to wait it out?
Well, Jonathan, good to be with you. I think that for all the reasons you've been discussing this morning, the United States is best positioned to wait this out, if you will. And we have to look at what's actually happening to the Iranian economy. We had some really important reporting yesterday on the first metrics we've gotten out. And bear in mind, I mean, they haven't had a stock market for more than 2 months. It's been shut down. Nobody knows what their equities are worth, if anything. Their currency is down. If you look at it over the last 10 years, it's down 98%. And so you just have a lack of value in that country that is catastrophic. And Secretary Bessent was talking about this yesterday as well. The economic fury, the economic front of this war is what is sort of causing the devastating consequences to Iran. They can't go on that much longer. We're not happy about our oil prices. I think Julian was absolutely correct. This is putting a lot of pressure on what should be a very successful time for the economy. But at the same time, it's apples and oranges what's happening in the United States and Iran, and they're going to have to blink.
Victoria, no doubt that the Iranian economy is in dire straits right now. But how long can this administration deal with $107 and going north when it comes to WTI?
No, I mean, this obviously is something they're going to have to bring down. And I think that's why the president's getting that briefing today. And there are a range of options on the table. There always are. General Kane, the chairman of the Joint Chiefs, is someone in whom the president has enormous confidence. He's performed extraordinarily well over the course of really the last year and months, but very much over the course of the last 2 months. So they can look at the kind of military action that would
और गाइस ये क्रूड ऑयल का ध्यान रखना मॉर्निंग पे ऐसा बताया था एक बार अगर 10,370 के नीचे आ जाता है तो फिर बढ़िया रहेगा आ चुका है 10,370 के नीचे तो एक्सपेक्टेड है सेलिंग कोई न्यूज़ नहीं आती है तो एक्सपेक्ट करेंगे प्राइस विल फॉल टुवर्ड्स 9,275 बाकी नेचुरल गैस में देखते हैं कुछ खास हो नहीं रहा है नीचे एक सपोर्ट काफ़ी दूर है वहाँ तक शायद ही जाएगा 237 के अराउंड बीच में कोई रेजिस्टेंस दिख नहीं रहा है ना सपोर्ट है गैप ही ऐसा मुझे लग रहा है मार्केट मोस्टली उसी को होल्ड करने की कोशिश में है बाकी आज एक्सपायरी थी अच्छा मूव आया मॉर्निंग पे गैप डाउन हुआ था रिकवर आया नीचे से ऑलमोस्ट मैक्सिमम जो पुट साइड के प्रीमियम थे 300-400 के आसपास चल रहे थे ऑलमोस्ट 50 एंड उससे नीचे ही क्लोज हुए कम्प्लीटली कुछ बनता है क्रूड में कुछ लग ही नहीं रहा मुझे कुछ खास 15 मिनट टाइम फ्रेम नीचे आया तो बढ़िया है वैसे मुझे लगता नहीं है कहाँ कंसोलिडेशन कर सकता है मोस्ट प्रॉब्ली ठीक है, तो कुछ खास नहीं है नेचुरल गैस में करने लायक 15 मिनट में एटलीस्ट। तो नीचे एक बॉटम सपोर्ट है 237 के अराउंड, वहाँ तक आ जाए तो बढ़िया, नहीं तो कुछ खास लग नहीं रहा है करने लायक अभी। ऊपर एक मेजर रेजिस्टेंस, वो भी काफ़ी डिस्टेंस पर ही है, बीच में और कोई रेजिस्टेंस क्रिएट ही नहीं हुआ है।
Inflation has been strengthening. There's reasons to expect additional pass-through from higher energy prices into core inflation. And, you know, the economy is bruised, but not yet really battered. I mean, you know, this is a resilient economy, and I mean, it's kind of defied my expectations.
Can we just check the line quick and make sure this is Neil Dutta?
I honestly don't know if this is Neil Dutta. I was expecting a discussion about labor.
It's Neil?
I don't know.
It's actually Neil?
Maybe it's just simply a hologram.
Neil, this feels like a change. Is that fair?
Well, I mean, I'm a sell-side analyst, John. When the data changes, you have to change your view, or you start losing clients because no one wants to listen to you. So you have to kind of adjust with the times. And I think you've seen that. Look, I'm not the only one. You know who the other person is? Christopher Waller has changed his views. He's been kind of a little bit more, I guess you can say, sanguine It doesn't mean that there aren't risks out there. In fact, I continue to see them. But I think for right now, you have to kind of tip your hat to the economy and say things are stable. We'll see where we stand at the end of the year. We will have fiscal policy transitioning from a tailwind to a headwind. The Fed is on hold. Labor market conditions, I think particularly wages, are still probably cooling somewhat. Right now, we're kind of in the throes of this spectacular AI kind of CapEx boom. But we see what the risks are, particularly overseas. But right now, I think if you're a Fed watcher, you kind of have to just watch and wait.
Well, Neil, Julian Emanuel, who was on earlier, basically said that we only have 2 more months where this economy could sustain triple-digit crude. And if you look out into July 4th, in the futures market, it's actually at $100. That's what they're pricing. Where do you see a breaking point?
Well, I think the important thing is right now the break is very linear in nature. I mean, I think over time, as people feel higher gasoline prices, I mean, remember, income growth going into this wasn't any great shakes to begin with. So we are going to see weaker real income growth. And that in turn, I think will, gravity will prevail and pull down real consumer spending. But that's still very much a forecast, not a present day reality. And given where inflation is, the economy breaking has to be a present-day reality. I mean, that to me is the primary tension right now. I mean, the Fed doesn't really have your back if you're an equity market investor. The Fed is basically waiting for the unemployment rate to rise before doing anything. So that's kind of where we are right now. But we kind of need to see it before they move.
A data-dependent Neil Dutta. Neil, good to see you, as always. Neil Dutta there of RunMac. To Neil's point, Governor Waller has changed his view somewhat. Neil's changed his view. Secretary Bessent has seemed to have changed his view as well, saying that he's more understanding of a Federal Reserve if they keep interest rates on hold for the time being, at least for now.
That's what the market is coming around to. I mean, Bob Michael yesterday, similar kind of move. We were talking about rate cuts to start the year. Now he's saying, actually, it doesn't seem that likely. It does feel like this is a sea change, and it does feel like people have been surprised by the strength in the economy. At what point does the corporate spending from the big hyperscalers potentially triumph over the weakness that we would have been getting because oil prices are this high?
The bar for hiking is still high. Most people would agree that the bar for hiking is still high, but the bar got a little bit lower. And that's the development of the last 24 hours.
It's actually getting priced into the market. There's a 40% chance of a rate hike coming up through March of next year. Look, will they do it? Julian Emanuel says no way. At the same time, the fact that it's getting introduced in price action gives you a sense of what's going on.
And at the same time, oil prices just keep going up. Gasoline prices in America are going up. And what did Kevin Warsh say at the start of his hearing? Inflation is a choice. Well, if it's a choice, then he is going to be at the head of the Fed who could potentially work to bring that inflation down.
Do you know what else keeps going up? Stocks. Equities up again this morning on the S&P by 0.2%, staring down one of the biggest monthly gains we've seen on the S&P 500 since 2020, higher this month by close to 10%.
What did we get? Yes, we got the hyperscalers that beat expectations or met. You get some modeled performance just based on the CapEx plans, but you have Ford outperforming, Caterpillar coming out. I do think it's important to reiterate what we just heard. You talked about the headlines, John, the idea of the beat on earnings per share. Their machinery, power, and energy revenue is $16.5 billion. This is directly tied to the build-out of energy infrastructure and AI. That was versus an estimate of $15.4 billion. I mean, this is just massive stuff.
Some interesting moves this morning. Looking at dollar yen as well, 2% move, 157, some yen strength. We're on the brink of intervention, real threats coming from the Japanese Finance Ministry. We'll spend some time on that in the next hour. Up next on the programme, we'll catch up with Sharmin Mossavar-Rahmani of Goldman Sachs, Clayton Siegel of CSIS, Mike Wilson of Morgan Stanley, the former Boston Fed President, Eric Rosengren.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
A cidade estava sitiada.
Isso é o começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final,
tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Our policy stance is in a very good place for us to wait and see.
I just don't see any need for the Fed to really change its bias or react in meaningful ways.
Odds of cuts later this year certainly should go down.
The market already took the easing bias out.
Don't expect any changes in rates this year. That's cuts or hikes.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures bounced by 0.2% on the S&P 500 on the final trading day of April, looking for a gain this month of more than 9%. On the Nasdaq 100, up by 0.2%. In the commodity market, some stress building for 8 consecutive days coming into Thursday. A 30% move over that period on Brent crude. We pulled back by close to 2%. Brent crude this morning at 116, WTI at 106. Heading into this, central bank decisions galore in the next 60 minutes. The Bank of England decision just dropping. Interest rates unchanged. Up next, the ECB at 8:15 Eastern Time. Later, some economic data and Apple after the close.
Oil is doing a lot of heavy lifting in the wrong direction for these central banks. And one thing that Andrew Bailey said of the Bank of England was that there is a risk of material second-round effects. This is the fear percolating through markets. And all these people who believe that the Fed could previously cut rates significantly and other central banks as well are now coming around to the idea that maybe not, because right now we're dealing with an economy that can handle oil prices where they are. And potentially you could start seeing the trickle through in places like, hey, CapEx spending, but the likes of Meta that has to go up because of how high commodity prices.
We've priced in hikes at the Bank of England. We've priced in hikes at the ECB. We've priced out the easing at the Federal Reserve. And this bond market has responded accordingly in the past few weeks.
You're seeing yields at the highest levels, at least in Japan, going back to the late 1990s. If you take a look at Europe, you're looking at the highest levels going back to 2011, 2008 for the Bank of for gilts. At this point, when does that torpedo growth? When does that torpedo capital markets activity? Not yet. And that is where the second round effects could come into play if this tightening doesn't work as a lot of people expect.
We'll head over to Lizzie Burden outside the Bank of England in just a moment. Need to work through the latest in the Middle East as well. The latest reporting from Axios suggesting the president is slated to receive a briefing on new plans for potential, and I stress potential, military action in Iran. The latest from Axios this morning.
What was interesting, too, about the report is one option would be to try to open up the Strait of Hormuz in a military fashion, and that would require, one individual said to Axios, that would require boots on the ground. We just heard from the Supreme Leader of Iran, an individual that we haven't seen, but we've seen a few statements from, and says a new chapter of the Persian Gulf and the Strait of Hormuz is being written, and they're talking about how it's basically under new management when it comes to the Strait of Hormuz. That's the tolls and the fact that they have absolute, complete control over it.
Let's set up the next 60 minutes, and then we'll get to the Bank of England decision for you. Coming up this hour, in just a moment, we'll catch up with Sharmin Mossavar-Rahmani of Goldman Sachs with more tech earnings on tap. Clayton Siegel of CSIS as crude climbs through 115, through 120 at one point. And the former Boston Fed President, Eric Rosengren, with Chair Powell planning to stay on at the FOMC. Let's get to that Bank of England decision then. Crossing just moments ago, Lizzie Burden has the headlines. Hey, Lizzie.
Hey, John. Well, as expected, the Bank of England has held rates at 3.75%, but it's really the commentary around this decision that is in focus here. 8-1 was the vote split, as expected. The chief economist of the Bank of England, Hugh Pill, dissenting to hike rates now. He's worried about the second round effects, and a lot of emphasis on the second round effects in these new scenarios that the Bank of England has put out. So this is the first set of forecasts that we've had from the bank, the first complete set of forecasts since the start of the Iran war. And indeed, if we just go into what they say, in all scenarios, rates would be going up. Now, the Bank of England has maintained its guidance that it stands ready to act as needed. That's what they said at the March meeting. Remember, there was no press conference that time, but it set off a massive market reaction that the governor had to walk back. This time, they've scrapped the central forecast in favour of these three scenarios. No second round effects in scenario A, some in B. In C, they'd be material. And so you've got different members of the Monetary Policy Committee putting different emphasis on these scenarios. But if you look at it, in C, CPI would peak at 6.2% in the first quarter of 2027, unemployment at 5.7%. As I say, rates rising in all three scenarios, and different members of the Monetary Policy Committee emphasising which is most likely. But for Pill, the dissenter here, he says the risks of second round effects are skewed to the upside, and that's really what matters here when you're listening to him. Look at the market reaction. Interesting to see that gilt yields on the 10-year have fallen. We're down 6 basis points at 5.01%. So compare that to before. We had higher gilt rates, yields. We were in a jittery market anyway. You'll note the reaction to the March decision. We're factoring the energy price shock. We're also factoring in the political risks here in the UK.
Are we on the edge of a policy mistake in Europe? Lizzie Burden, thank you. We'll hear more from the ECB a little bit later this morning. These are central banks, and the market is pricing in hikes for the year ahead at both the Bank of England and the ECB. And to some extent, I think the words of Hugh Pill this morning, the chief economist at the Bank of England, validating some of that market pricing.
Saying ultimately he thinks they should hike right now. Just to note that in scenario C that Lizzie was laying out, they would say forceful action would be warranted in terms of tightening. So that would come with an inflation rate above 6%.
Here's the view on Wall Street this morning. Stocks looking for some direction as big tech plans another massive AI spend in the face of what could be tightening central banks worldwide. Joining us, Sharmin Mossavar-Rahmani, the Wealth Management CIO and head of the Investment Strategy Group at Goldman Sachs. Sharmin, it's good to see you.
Hello, thank
you for being here. Are central banks about to become a headwind to this equity market rally?
We actually had a very good exhibit on one of our client calls. If you look at the 21 past strikes that the U.S. has had on the Middle East or North Africa, up to 8 weeks after the initial strike, the equity markets have been up on average 4%. And that's exactly where we are. So everybody's saying, oh, the equity market is going ahead. How can they ignore the price of oil, whether it's WTO or Brent? What is exactly going on? Growth is still robust. Obviously, we're going to get Q1 numbers, but I think nobody's thinking that we're in a recession is imminent. And if you look at the earnings we've gotten, they've been incredible, right? Substantially greater than consensus. And this is a pretty significant, in terms of exceeding expectations, it's a pretty significant number. It's not like, oh, we exceeded earnings by 2%, 3%, 5%. It's double digit. And if you look at the number of quarters where we've exceeded expectations, the number of consecutive quarters, it's just incredible. And so when people talk about the impact of the war, We have said the U.S. economy is unbelievably resilient, and people continue to underestimate that. So as we look at this, I don't think anybody knows exactly how long this will last. If it lasts a lot longer and oil prices stay at these levels, then the economy will be weaker. And so the idea that people can raise rates in the face of weakening economy, especially in the U.S. when you have a dual mandate, I think we need to factor in a lot of uncertainty.
Do you think that there is a lack of logic when people say, well, oil prices are at this level, and you see still that robust growth in the economy? So that means that the inflationary impacts can get passed through much more directly and easily because of the CapEx spend, because of how well these companies are doing. Do you see that as a logical connection, or do you think it just hasn't been long enough with oil prices at this level?
There are actually 2 points. You're right. It hasn't been long enough. So that's number one, because if this war were to last and we see oil prices here, eventually we will get to negative numbers in the equity market. But for now, the idea that we're up 4 or 5% is actually totally in line with history. And from our perspective, one of the pillars of our investment philosophy is history is a useful guide. So first we have that as the backdrop that we need to follow. The other thing that people need to think about is the energy intensity in terms of usage of oil is a lot different than the early 80s. So when we had the Arab oil embargo, then we had the Iran-Iraq war, we had the Iranian Revolution, prices skyrocketed. But at that time, the energy consumption in the US in terms of barrels per capita per year were substantially higher. In fact, it was around, let's say, 30 barrels a year. That number is down to around 23, 24 now. So there's also a view that energy, crude oil, will not impact as much. Obviously, it will. Fertilizers, we hear about all of these things, but it has to last a while.
It does affect the cost of components, and we saw this with some of the hyperscalers reporting earnings last night. Meta, for example, increased their expected CapEx in part because of higher component costs, maybe also because of some of the transportation issues that people are experiencing. At what point does that become a sticking point, maybe not for the biggest tech companies, but for some of the tech companies out there that are facing an existential threat but are having to pay that much more to even play ball?
I think there is a big question mark about the returns to the CapEx for AI companies. The hyperscalers obviously have so much cash flow from other factors that they can do quite well. And if you look at their earnings, whether it was the latest reports or last year's, they're just been phenomenal. But the rest of the economy is actually doing quite well, and people underestimate, again, the resilience. If you think about oil production in the US produces double the levels of Saudi Arabia. Right? It's just incredible. You think about natural gas. U.S. has become the largest exporter of natural gas literally in 10 years, far exceeding Qatar. So as we think about these factors, people need to think that the shock is not as great. And at the end of the day, both sides want to end this war. The question is, what is a respectable off-ramp for both sides? And I think the market is saying we will get there. Well, there'll be fits and starts, escalation, de-escalation, and we're going to have to go through that. And that's why we recommend our clients stay invested. Don't try to time this market. Nobody can do that consistently very well.
But in the beginning, conventional thinking was 4 to 6 weeks. We're now 8 to 9 weeks into this war. How much longer, with these kind of elevated prices, do you think the economy could withstand? Julian Emanuel says July, and then things might start to break down. Do you have a date where you're looking at?
Not really, because nobody really knows, right? If you look at the probabilities, it's not as if it's so obvious how long this will last. I think we know both sides don't want it to last July and August.
Not the conflict. How long the economy could withstand triple-digit crude?
Well, in the U.S., we're just around triple-digit, right? And we've been here before, and prices lasted at these levels for a while. I don't think the economy is going to break. We had initially expected GDP to be around 2.3 when we started, then momentum 2.4%. Now, because of the war and oil prices, we've lowered it to 2.1%. But we have a very low probability of recession, even at these levels, if prices were to stay here. I think to say exactly, is it July? Again, if you believe the resilience of the economy and adjustments, and we're talking about the U.S. that has ample crude and natural gas, right? It's really the rest of the world. And if the U.S. is a big importer and less of an exporter, then not in terms of hydrocarbons and things like that, but in aggregate, the damage to the economy is going to be much less than it is, for example, to Europe or to China.
Do you think we're moving into a phase where the offset to equity risk is increasingly gold and commodities and not developed market bonds, which increasingly are subject to potentially spending issues, deficit issues, as well as just the natural inflation in the system?
That's a very good question, because all our clients are asking us, how can they hedge against the risk of war? And we tell clients that at the end of the day, the best hedge against inflation has been historically U.S. equities in aggregate. So in fact, that's why, again, we say stay invested. Gold is not a good inflation hedge and not a good deflation hedge. So the idea that gold is something you need to have in your portfolio is something we totally disagree with. We don't think it's really part of a client's strategic asset allocation. And tactically, we've actually said that when you see these kinds of price increases driven by central banks, especially initially by China and then countries like Turkey, Poland, clients shouldn't be caught up in the euphoria and the momentum of gold. And obviously, we've seen a pretty significant decline from peak levels.
Seen a big turnaround. Shamin, it's great to catch up with you. Thanks for being here.
Thank you.
Thank you. Shamin Mossavar-Rahmani there. Equity futures this morning, positive by 1/3% on the S&P 500. A bounce back here. A Bank of England decision just moments ago, falling short of some of the hawkish expectations. Very, very hawkish pricing in this market ahead of this decision. An 8-to-1 vote, to some extent falling short of that. That one vote, though, that one vote is that endorsement this market was looking for of a central bank that might be getting closer to hiking interest rates. But that's all we've got.
And frankly, the 8-1 decision highlights how difficult this really is for England. Right now, the fact that they're talking about north of 6% inflation, at the same time 5.7% unemployment, that is uncomfortable.
Some of the hawks just in a holding pattern at the moment. Yields pulling back on gilts so far this morning. Let's give you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump defending the U.S. blockade of Iranian ports, saying it's more effective than bombing the country. Trump rejecting the latest Iranian proposal to open the Strait of Hormuz and lift the blockade until concerns about Iran's nuclear program are addressed. Axios reporting the president will receive a new briefing on the situation today. In his final meeting as Fed chair, Jerome Powell announced he will remain on as governor after his term ends next month. Powell saying he felt he had no choice but to stay amid a series of legal attacks.
I'm literally staying because of the actions that have been taken. I had long planned to be retiring, the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere.
The president blasting Powell's decision, posting, quote, Powell wants to stay at the Fed because he can't get a job anywhere else. Shares of Bill Ackman's Pershing Square down 18% in its market debut. The fund raised $5 billion in its IPO, falling short of the $25 billion it had originally sought to bring in. Ackman aims to build a long-term diversified holdings company such as Warren Buffett's Berkshire Hathaway. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. More from Vonnie later this hour. Up next on the programme, curbing the crude surge.
Nobody likes, of course, high prices in the short term, but they understand increased American energy exports, increased energy addition policies, lean into more energy production. That's what President Trump is all about.
Up next, we'll catch up with Clayton Siegel of CSIS, live from New York City this morning. Good morning.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
So here's the bounce. A little bit of a turnaround cross-asset. Let's start with equities. We're positive. Didn't do much yesterday. Positive by 1/3 on the Nasdaq, up by 0.4. Lots of tech results we need to talk about. Let's turn to commodities. A turnaround there. 8-day streak of higher oil prices broken this morning. That's the longest daily streak going back to May 22. We're down by 2.7%. 115. Even with the threat, and I stress potential threat of military action in the Middle East, given the latest reporting from Axios, crude pulling back. That's notable. That's helping yields drop, just opening up some space for yields to pull back. 2s, 10s and 30s. 2s down 5 basis points, 10s down 4. And then this move in dollar-yen. Let's bring up the chart. Brutal stuff. If you're on the wrong side of this. Dollar-yen, negative 2% in the yen's favour. The Japanese Finance Ministry with a range of headlines this morning. Tell you what, verbal intervention takes on a new twist from Japan. This is your final warning. Get ready. We're close.
Yeah, stay close to your phones because ultimately we might take action at any time. So I can just imagine the alarms people have set.
Yeah, that's not the trade you want to be on the other side of. This morning at least, dollar-yen, 157. Under surveillance this morning, curbing the crude surge.
The critical outcome here is that we end the ability for Iran to have a nuclear weapon. So look, we're going through a period of discomfort to solve a 47-year crisis. Nobody likes, of course, high prices in the short term, but they understand increased American energy exports, increased energy addition policies, lean into more energy production. That's what President Trump is all about.
Here's the latest this morning. Crude hovering near 4-year highs as the US weighs new military options in Iran. Axios reporting President Donald Trump is preparing for a briefing with the head of US Central Command later on today. Clayton Siegel of CSIS writing global balances are heading for a 1 billion barrel shortfall, with fuel prices increasingly likely to hit corporate earnings, consumer wallets and GDP growth. Clayton joins us now for more. Clayton, and yet the blockade continues. How much storage do you believe Iran has left?
Hey, good morning. You know, it probably has several weeks worth of storage left, but I think that the market and observers are maybe over-indexing on how much pressure a potential shut-in of production is going to play in Tehran. I mean, they've had to pare back production and shut in wells in previous episodes when sanctions were really hitting hard, and they have had the ability to scale back up after that. So I think this kind of the story du jour that's making its way through markets, that it's going to result in some kind of permanent damage that they need to scramble to avoid, it might be a little bit exaggerated. But instead, we could really look at the effectiveness of the blockade in keeping those ballasting tankers, the empty tankers, from getting into the Gulf in order to serve as floating storage. So all of these things kind of go together in terms of their storage capacity.
But Clayton, if they're using these empty vessels to store some of these barrels, when they hit tank tops, what happens next?
So if they can't get more empty tankers in order to keep loading at places like Harg Island, then they will have to organize a program of turning down production in the fields. But remember, that's also what the other Gulf Arab producers have been faced with in the last couple of months. So Saudi Arabia, UAE, Iraq, Kuwait, they've all had to turn down production because there's nowhere to physically put the oil at the earlier production limits because it's just not getting out of the Gulf. So, of course, Iran is in the same boat as the rest of them. But the question is, can a production downturn be organized by the engineers, by the geologists to avoid any kind of lasting damage? That's question number one. And I think the answer is probably yes, because they have experience and track record of doing that in the past. But then the second question is, do the decision makers, do the powers that be in Tehran really care that much? I mean, these are the same people that went against their own population with a very severe crackdown recently. And so I'm not sure that they're going to be motivated necessarily by the long-term vision for Iran's upstream industry.
Right. We have seen Iran deal with that in the past. What about Gulf partners that are also dealing with potential shut-ins at wells?
And we've had more than 13 million barrels per day of oil production downturn during this crisis. And this is all because the Strait remains closed. So when I was looking at the blockade proposal a month or so ago, I think the idea there was it could really be a force for good just to temporarily level the playing field and to send the message to Tehran, hey, look, if everyone else's vital energy exports can't get to market, you're going to have a hard time getting yours out too. But then immediately use that opening to resume diplomatic negotiations and find a mutually acceptable off-ramp to this crisis so that the exports can resume and so that the global economy can rebound and be protected. But the Trump administration's handled it a little bit differently. They announced at the same time of the blockade being imposed earlier this month that it's going to stay in force until a final agreement is reached. So that's not really a temporary bridge. That's kind of keeping the chokehold on Tehran unless and until we have a final settlement, and apparently that hasn't played very well there.
Clayton, what does a mutually acceptable agreement look like that really removes the risk that Iran could do this again?
I think that the key point is that both sides are going to have to climb down from maximal positions. I mean, it can't be that Tehran has a complete chokehold over the world economy going forward. Exporters and their customers don't want to hear about a permanent tolling arrangement. So I think that they should make compromises on that front. From here in Washington, to try to architect a deal related to uranium enrichment that is even stronger than the previous arrangement, the so-called JCPOA that was negotiated under the Obama years, that's a high hurdle. So if both sides can just get their must-haves out of a diplomatic agreement instead of the nice-to-haves, I think that there's room for progress.
Clayton, appreciate your time. Thank you. Clayton Siegel there of CSIS down in the nation's capital in Washington, D.C. It's difficult to please everyone because so many parties are involved. And it's not just the U.S. and Iran. It's nations across the Gulf as well.
Even if you get to a place where suddenly people can go through the Strait of Hormuz, but Iran has the ability to potentially reverse course, what kind of premium starts getting baked into oil prices? And you're going to get a lot of those pipelines that are being diverted in other directions from the other Gulf regions just as quickly.
Are shipping companies going to have the confidence to go through the Strait of Hormuz, even if the United States says we feel like it's safe and it's open? It took about 6 months for the Red Sea to get a little bit back to a normal cadence. And that was when the Houthis, this is on a totally different level when it comes to Shahadi drones and the IRGC on speedboats.
I remember when it opened 2 weeks ago. Do you remember that? 2 Fridays ago, Strait of Hormuz is reopening.
Verbally opened, not physically opened.
Of course. And then it didn't at all.
People are brilliant because if you go online, there are all these people. There's actually a Google review for the Strait of Hormuz, and it has 1 star.
Seen that.
And it has, it has
pretty
the
high,
dates.
1 star.
Well, it's because you can't get lower than that. And it's Monday, maybe open from 8 a.m. to 8 p.m., Tuesday close, Wednesday close, etc. And now I can just imagine it has a big banner over it saying...
It's farcical, isn't it? Yet it's really, really serious.
But that's the whole thing, exactly.
And you've got countries across Asia getting crushed by this because they haven't got access to the energy. It's not just a price story, as we've said repeatedly. It's a shortage story.
We're seeing this come through in the economy and the economic performance. Europe underperforming today, and we see that consistently as a result of this.
Underperforming, and yet some central banks still at least discussing the potential for rate hikes, which just seems crazy.
One mandate, not dual mandate, and is that going to change?
The potential for second-round effects when your economy's not that strong, though. That's my struggle.
Great question.
It's my struggle. Mike Wilson,
John for ECB
of Morgan Stanley, up next.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The Bank of England decision just behind us, the ECB decision ahead of us at 8:15 Eastern Time. 30 minutes later, a news conference with Christine Lagarde. We'll take some of that right here on Bloomberg TV. After that, we'll get some economic data. Jobless claims coming at 8:30 Eastern Time, a host of other data points as well. Then after the close, we get numbers from Apple to wrap up a big week for tech results. Equity futures so far this morning, your scores look like this. Higher by 0.4% on the S&P 500, up nicely on the NASDAQ, up by 0.6% to add to a pretty impressive monthly gain so far. I think of more than 14%. Which would be the biggest monthly gain going back to, I believe, April 2020. And we saw some big gains back then.
Yeah, if you take a look at some of the performance over the past month, April is poised to be the best month for the NASDAQ 100 since 2020. The S&P tech sector is poised for the best month since 2002. And if you look at semis, you got to go back to 2000 to get to these levels.
Crazy.
So it's, driven by a particular area, let's be honest. You've been pointing this out, though. Energy stocks, the worst performers.
They've done nothing.
I don't understand this. I mean, we've been talking about
Chevron,
this.
done nothing for 2 months.
They've actually lost. I mean, this is sort of the question. What are we looking at here?
Crazy, isn't it?
Yeah.
Even with these moves in crude, close to 115 this morning, pulling back to 113, briefly through 120. We had an 8-day run of higher crude prices on Brent, up over the period by 30%. Declining this morning on WTI, we're down by 2 to 3 percentage points. That's unlocking this move in the bond market because yields yesterday, 10s and 30s, closed at the highs of the year, pulling back from those levels, down 4 basis points on 10s, 439, down 5 on 2s to 389.
At what point does it start to bite into some of the enthusiasm that we're seeing in markets? I feel like a Debbie Downer this morning when I mention that because when we talk about it to analysts, they say, we're managing just fine and it's not going to stay here. But right now it does feel like we keep creeping higher in the developed markets. And at some point, when does that start to put a crimp on some of the capital markets?
Just the chorus in the control room. Only this morning. Just this morning.
Normally I'm really optimistic. I mean, come on.
So
we're talking,
upbeat on a daily basis.
Well,
it's overwhelming.
Normally? You should listen to my conversations at home.
I imagine.
They sound
What was it about last night at the dinner table?
Human versus AI and
humans just won't have a role, it's over.
The offspring
computers
are
taking over.
Long AI, short humans.
The Terminator is happening at our house.
Does the mood get better through the day and then decline again at night? Is that how things work?
It depends. Again, do me, but with a smile.
Okay. As we count you down to the opening bell, I love it. 2 hours away from the cash open. Let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We're getting a wave of earnings this morning, and we start with some standouts in the pharma sector. Take a look at shares of Eli Lilly, up more than 7% in the pre-market after it raised its guidance due to booming demand for those weight loss drugs. Lilly's saying that its latest one, that pill, is off to a great start. Merck also, it was a beat there due to strong demand for its newer drugs as its older ones face expiring patents. Moving on to Royal Caribbean, those shares also rising 7% in the pre-market. Investors looking past weaker guidance due to higher fuel costs tied to the war, and they're clinging on to this Royal saying that after a dip in March and April, bookings have recovered and are even running ahead of last year. And we end on Caterpillar. Those shares also rising in the pre-market, up nearly 5% after a massive beat as this legacy industrial name becomes part of the AI build-out. Caterpillar seeing huge demand for its generators and gas turbines, of course, part of the AI data center build-out. John?
Yahara, thank you. Thanks for the latest. That stock higher by close to 5%. On our radar this morning, Alphabet surging as AI demand fuels a cloud computing boom. Meta lagging behind after a massive budget hike weighs on the stock. The four companies, including Amazon and Microsoft, are expected to spend more than $725 billion in 2026. Elsewhere, crude hovering near wartime highs. On reports, the U.S. is weighing new military options in Iran. Axios reporting this morning that the president will receive a briefing from the CENTCOM commander later on today after rejecting Tehran's latest deal. And finally, the president blasting Jay Powell's decision to remain with the Fed after his term as chair ends, writing on Truth Social, quote, Powell wants to stay at the Fed because he can't get a job anywhere else.
And we've been talking about how that's really tame. I mean, ultimately, we were talking about potential war in the court system. Does this matter? And ultimately, what is the best strategy for everyone moving forward? What does it mean for him to take a low profile and to stick around?
To just move forward and move on, I hope. I think that is the best strategy.
Well, that's what a lot of people would suggest, but what is he waiting for? Is it the Lisa Cook or is it something else? And when can we move past the Bachelor?
It could be the Fed Inspector General report. It could be what's going on with the Supreme Court and Lisa Cook's seat. I think Neil Dutta hit the nail on the head when he said the White House hasn't handled this process normally, so why should Powell be expected to handle this process normally? I do think it's interesting, though. Powell's a dove. Does anyone think he's a hawk? Maybe the White House is actually like, whatever, at least he's going to vote in our favor.
He had rates at zero at multi-decade lows when inflation was at multi-decade highs. It's hard to call him hawkish.
My favorite part is that talking about Republicans and how this undermines the Republican-appointed nominees to the Fed. Well, guess what? Chair Powell is a Republican nominee. In fact, it is President Trump's own nominee. So, you know, let's really park this. And by the way, Kevin Warsh is an inner hawk, so let's be clear about that.
I was hoping for that follow-up question. But, sir, isn't Jay Powell the president's own nominee, but we didn't get it?
Well, obviously, you watched the channel that interview took place on, so you expected the follow-up? I mean, come on, it's very predictable stuff.
It was an easy follow-up. I just wanted to hear what Bethan had to say to it.
Follows a script on the hyper-partisan news networks in America. You know this. We'll catch up with the NEC director a little bit later to talk about some of these issues. Kevin Hassett joining us at 9:30 Eastern Time. Let's talk about tech. Four of the Mag 7 beating expectations and planning a more than $700 billion AI spend. Mike Wilson, Morgan Stanley CIO and Chief Equity Strategist, writing, our factor work shows the market is broadly rewarding higher capital spending as cyclical and structural forces encourage capex. Mike joins us now for more. Mike, good morning.
Good morning.
Can you build on that a little bit more? Because we got some pushback to the likes of Meta. How universal is that take?
Yeah, I mean, this has been a call we've had for quite a while. This is part of the rebalancing thesis. I mean, the administration is encouraging more capex, and the good news is that the market is rewarding more capex, not just with the hyperscalers, but more broadly. And I think this is an interesting question to think about. First of all, 4 weeks ago, we did step in pretty aggressively on the hyperscalers. We thought they sold off way too much, and people were kind of punishing those stocks in a way that they got very, very cheap. And now they've rallied quite a bit. Now, if you look at the other stocks, that benefit from capex, they're also working. Some of the industrial names, some of the parts of the economy that are going to see this. That's part of the big beautiful bill. That is the story, right? More investment, less consumption to get higher productivity. So this is a broader thesis than just AI capex. I think it's really important that companies continue to allocate capital in a way that leads to higher productivity. That's the strategy. That's what we're trying to achieve.
That's kept you bullish throughout all of this over the last 2 months. We've all been following your research. How insulated are we in this equity market, not the economy, the stock market, from what's happening elsewhere abroad in the Middle East?
Well, look, it comes down to earnings. I mean, if companies are growing earnings 15, 20%, and the forward earnings expectation is 25%, they're not going to be laying people off or restricting themselves on capital spending or doing things to make their businesses grow. One other thing, that theme that we've been talking about for years is this inflationary regime, okay? So if you're in an inflationary regime and the Fed now has real rates close to 2%, which is, kind of restrictive in some ways, okay, we got to find a way to grow, like organically. And so this is a real change over the last 15 years when it was all about financial repression, buying back stock, borrowing at negative rates. Companies got to invest real capital, take real risk to generate real returns. So who do you want to bet on? You want to bet on the companies that are high quality, that have done that in the past, have generated high returns on capital in the past.
Does this still support the idea of a broadening out trade, given the fact that it is the biggest companies, and a lot of the big earners have been the hyperscalers that have the ability to invest, but the consumer on the margins, I hate saying this, but is being more choiceful, choosier, pickier, because they don't have as much discretionary spending. That's right. And so, I mean, the consumer statements have not performed well in the last month or so. So, in other words, the market, everybody says, oh, the market's ignoring these high oil prices. I don't think so. I mean, you look at some of the consumer retail names, you look at the airline stocks, things tied to higher oil prices have underperformed. So the market has just moved away from that for areas that are somewhat insulated, to John's question. All right, so we still think the broadening story is happening. And the reason we're saying that is because the earnings story is telling us that. Earnings growth for the median stock in the Russell 3000 is now well into the double digits. That's the first time we've seen this since 2021. That's why we had the broadening call for this year. So that, to me, that's the opportunity now. Everybody's crammed back into sort of the same name, saying it's only a handful of stocks. No, there's a lot of companies, businesses that are doing quite well in this environment. When would the bond yield backdrop start to worry you, given the fact that we have seen the long end of the yield curve creep higher? Right here. It's 440 has been, we've kind of rejected that a couple of times in the last few months, and we've seen the Fed and the Treasury intervene in both cases, right? Jay Powell with a little bit of dovish rhetoric on the 30th, the Treasury doing bigger buybacks, more bill issuance. They have these games. We've written about this extensively. What I'm watching is two things. 450 on a 10-year. We've established that in the last couple of years. We're not quite there. But more importantly, bond volatility. Okay, so the MOVE index, was up around 115 back at the end of March, related to oil prices and the Fed getting a bit more hawkish. And then sure enough, the Treasury and Fed stepped in, and now that's down to like 70. That's totally cool. So I'm watching bond volatility. If that starts to pick up with rates at 440, 450, we could have a decent correction of, say, 4 or 5%.
We're looking at corporate credit as well this morning. This headline just crossed in, Lisa. One for you. Meta kicking off a 6-part U.S. high-grade debt sale following earnings. And this is to be expected, considering the fact that they're hiking the costs. Will debt investors like the fact that that spending will be going into not just more capacity, but higher prices because the commodity costs are increasing? Are people getting the bang for the buck? So, Mike, you talked a lot about earnings. Let's talk about the P, the price, and the multiple. What's the multiple that these companies deserve now, given how different they are this morning to how they were 10 years ago? Well, I mean, they're spending more money, to your point. So the multiple has come down. One of the calls we had this year, which I think kind of got lost in the shuffle, everybody was sort of saying, oh, I can't believe the stock market's only down 6 or 7%. This is ridiculous. The market's wrong. Well, first of all, the market's never wrong. Okay, you're wrong. Okay, and what was going on is that the PE multiple was down 18%. Okay, 18%. A lot of compression. I mean, think about that. 18% PE. That's as bad as last year going into Liberation Day. That's what we typically get in a recession, and earnings were growing 15% year over year. So we think the market, once again, fooled a lot of folks. It had its correction under the surface. It did a lot of good work, and that's why we got more aggressive towards the end of March, saying 18% is enough. I didn't expect us to rally like this, by the way. I'm not taking credit for that. But the entry point, I think, was pretty easy to kind of see back in late March. Can we finish on energy? Yeah. We were mentioning that Chevron, Exxon, they've done nothing over the last 2 months. Since the end of February, that's right, pretty much flat. What's the story there, and what would you do with that sector at the moment? Well, just change your start date. Since January 1st, I mean... Big Exxon, first quarter. They're up huge. And so, I mean, once again, equity market, is really smart. So the oil stocks started really working the day that we did the Venezuela extraction of Maduro, okay? And it was right. And oil services stocks. And they had a massive move, 30% relative outperformance. And they literally topped the day that, we attacked Iran. Okay, that was the day they topped on a relative basis. We wrote about that. So it's one of the reasons we got bullish on the market was we said, okay, market's telling us that oil prices are going to be lower in the future, right? The spread between Brent and WTI, we wrote about that, and then the relative underperformance of energy stocks. That's the leading indicator that tells, and I'm still confident about it. That's why if energy stocks started really outperforming, I'd get worried that maybe oil prices are going to be higher in the second half. So, look, I have an easy job. I just let the market tell me what's going to happen. I feel like you're having a good year. You feel like you're in the groove? Yeah, I feel I'm in the groove, exactly. Right. I feel like I'm in the groove. I'm sure that'll change again. It's kind of like a golf game, Yeah, I was going to say, it feels like sports. When things are going well, you can see the ball just a little bit better, a little sharper.
You wake up and you just have that coordination, and then days when you wake up and you walk into a wall. I get it.
Financial markets feel like that sometimes.
I mean, it's true. It's sort of the days that things are lucid. The idea that the market is smart at sussing something out. I think it is telling, though, that oil stocks are down. And the idea here of what that tells you going forward. about how long this is going to last. When does that pivot, right? I mean, I guess that's the key question.
Mike, it's good to see you. It always is. Thank you, sir. Great calls recently. Mike Wilson there of Morgan Stanley. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The longest partial government shutdown in history is a step closer to coming to an end. The House has approved the first part of a two-part plan to reopen the Department of Homeland Security. Speaker Mike Johnson is now eyeing a separate bill that would finance the parts of the department outside ICE and Border Patrol through September 30th. Shares of Ford lower in pre-market trading. Ford CFO Sherry House telling Bloomberg's Romaine Bostick that rising commodity costs will weigh on earnings.
The forward curves are still holding that this Middle East situation is going to be more on the short-lived side. You know, as a result, at this point in time, we are believing that there's going to be some recovery as we start to exit Q3, as we get through Q3 and Q4.
Ford also boosting its full-year profit outlook, driven by high demand for pickups and SUVs. Amazon is considering a reboot of The Apprentice with Donald Trump Jr. as the host. The Wall Street Journal reporting discussions are in the early stages, and Amazon has not yet approached the Trump family. If the show gets made, it would appear on Amazon's Prime Video service. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. That sounds super early, given that the family's not been approached.
No, but it sounds funny. Would you watch? I think I'd watch an episode.
I think obviously I'd tune in.
Yeah.
You know my taste in TV when I'm not at work. It's the kind of thing I'd probably tune in for.
It's currently happening at the Federal Reserve. I mean, it's still ongoing, so whatever.
Would you watch?
I think this is a marketing play for Amazon.
Bachelorette's
Good
not
job.
on at the moment on ABC.
Oh, yeah, that's what I do. I
Also,
go home, watch
Trump
Bachelorette with the family.
Trump recently went down memory lane and truthed out his high ratings of The Apprentice. So I don't know. I think he would encourage Junior to do this.
Up next on the program, an insult to the Federal Reserve.
It's highly unusual what Chair Powell did. This is a violation of all Federal Reserve norms, and it is an insult to Kevin Warsh.
Up next, we'll catch up with the former Boston Fed President Eric Rosengren, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Overnight, things weren't looking great. You had crude pushing 120. You'd just seen the 10 and 30-year yield stateside close at the highs of the year. And the tech story was mixed. It was pretty mixed, with the likes of Meta getting slammed pretty hard. But since then, things have recovered somewhat. Equities are up by 0.4%. The Nasdaq's higher by 0.5%. In the commodity market, despite some, let's just say, not encouraging headlines coming from the Middle East, Brent is lower, not higher, down by 4%, following 8 consecutive days of gains for Brent crude. We're down to 113.58. And when you take that picture and plug it in and fold it over to what's happening right now in the bond market, yields are lower and not higher. They're down 5 or 6 basis points at the front end of the curve and down 3 looking further out on 10s.
I wonder if there's a regional bias. It seems like when trading is open in Asia and Europe, which is being much more significantly affected by some of the shortages, people feel a lot worse. And then when they come to the United States, based on all the guests that we've had, things are great. CapEx is booming. AI is going to save the world. And it feels like there's just such a different tone with the focus on earnings that people kind of look at all of the bright sides rather than everything else.
It's a pretty impressive stimulus program coming from 4 of the biggest companies on the planet, isn't it?
100%. You've got corporate stimulus instead of fiscal stimulus. So you've got both, frankly. So that's the reason why there's strength.
Yields down this morning, down 5 on 2s. The 2-year, 3.89. Under surveillance this morning, an insult to the Federal Reserve.
It's highly unusual what Chair Powell did. This is a violation of all Federal Reserve norms, and it is an insult to Kevin Warsh, Mickey Bowman, and Chris Waller to think that these other Republican nominees do not care about the institution of the Fed, and that he alone can maintain the integrity of the Fed.
So here's the latest this morning. President Trump criticizing Jay Powell's decision to remain at the central bank after his term as chair ends, claiming he wants to stay, quote, because he can't get a job anywhere else. The former Boston Fed President Eric Rosengren writing, Powell views the legal actions against himself and others are intended to influence the vote on monetary policy. Eric joins us now for more. Eric, welcome to the programme. You, of course, sir, are entitled to your opinion. Do you believe this is an insult to other members of the Federal Reserve?
I do not. I think it is a reflection of the legal attacks on both the chair and one of the other governors. And as a result, it was intended to influence monetary policy, and he's standing up for the institution. So I think it's probably not what he wanted to do. My guess is he did want to retire. I'm sure his family would like to start seeing him again. He's been working very hard for 8 years, but I think he's doing it for the institution.
Eric, with that in mind, what kind of institution do you think Kevin Warsh is inheriting here?
I think from the new chair's perspective, it's a challenging environment. First of all, we've had a bad inflationary shock with the war in Iran, and we're about to get PCE core inflation, but I expect both the total and core to be up a fair bit. It's going to be over 3% for the core PCE inflation, and that's very high relative to a 2% inflation target. So a new chair who may have been hoping to lower rates, I think is going to face a committee that clearly is not as interested in lowering rates at this time because of the inflationary shock that we've had and the fact that the Fed's missed its inflation target for the last 5 years. So I think there are a number of members that are quite concerned about what's been happening with inflation. There were 3 dissents of presidents for the language that is viewed as a bias towards easing. There was one governor, Governor Myron, who would have preferred to ease, but he's wanted to ease at every single meeting. So I think it's a very split committee, and I think that's challenging because Kevin Warsh needs to get a majority to get whatever policy he wants through, and I think there's an unusual level of dissent at this time.
Eric, were you surprised that 3 members dissented in order to move to a different type of language, symmetric risk of a rate hike or a rate cut at another meeting in the future? Or are you surprised that more people didn't get on board with a similar type of move?
A lot of people don't view dissents as being used on leaving language unchanged, since it's the language that if they found acceptable 6 weeks ago, you have to think there's a pretty significant change to dissent over not changing the language. That being said, the 3 dissents against the language, I think, have all highlighted in their speeches their concern for inflation. And I think it is significant that it's Chair Powell's last meeting as chair. And as a result, I think they're signaling to the incoming chair that as voting members, they're going to be resistant to a policy that tries to, in their view, ease in a way that isn't consistent with how the economic outcomes have been coming out.
Eric, what does a low-profile Governor Powell look like to you?
I think he comments on data and keeps his views largely to himself, but he's still a voting member. His vote's going to be recorded. I think he's going to vote the way he thinks he should vote. Obviously, it's going to be awkward for Kevin Warsh if he starts dissenting along with a number of other individuals against the policy, or if Kevin actually can't get the votes to do the actions that he wants to take. So I think it is challenging, but I don't think it's something that is that difficult to manage if he has a clear understanding of where the consensus on the committee is. I mean, he leads the committee, but he has to convince people that his views are the appropriate ones.
Eric, I think that's the important point. Can you keep a low profile if you're willing to dissent with the chair?
I mean, I think he's hoping he doesn't have to dissent, that the recommendations are consistent with the policies that the framework document and the committee has long had. But I think if, for example, there was, I don't expect this, but if there was at the first meeting, a move to try to dramatically ease, I think there would be a lot of people that would be opposed to that. And there might not be the votes, including with, former Chair Powell at that point. But I don't expect Kevin to do something that dramatic. And I think he can count the votes. And I think more than likely we'll see that former Chair Powell and the new chair end up voting together in most instances, if not all instances.
We'll see if that's the case. Eric, thank you, sir. Appreciate your opinion this morning. Thank you. The former Boston Fed president, Eric Rosengren, on the future of a low-profile Governor Powell.
Which hopefully means Jay Powell that doesn't have to dissent against.
Hopefully, imagine how awkward that would be.
That would be very difficult. That would be considered highly high profile in a significant way. At what point, though, we were talking about this yesterday, does Jay Powell sticking around give Kevin Warsh some cover in some ways, some credibility?
At least for now. At least for now. We'll see how this breaks. Up next, we'll catch up with Mira Pandit of JP Morgan Asset Management, Pooja Kamra of TD Securities, Jonathan Pingle of UBS. The ECB rate decision in the next hour. The third hour of Bloomberg Surveillance just around the corner.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And
I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
It's all about the tech sector within the equity market.
We might be a little bit overbought here. You have very strong sort of earnings fundamentals underpinning things.
Everyone is looking to make sure that this growth is still as strong as it has been.
The outlook still is optimistic.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. And your price action scores look like this. Equity futures adding to gains, up by 0.4% on the S&P. Likewise on the Nasdaq. A turnaround in the commodity market. Crude trimming some of this week's gain. We're down by 2% on WTI. Brent crude down by 3.4%. Heading into this in just a moment, an ECB rate decision some 15 minutes away after that economic data, jobless claims at 8:30 Eastern Time.
We'll see the division between Europe and the U.S. in some of the data that's coming out, as well as some of the rhetoric from the central banks. Right now, you've got European central banks that are facing off with much more of a challenge to a mandate that is singular. It isn't a dual mandate like in the United States. On one hand, they are seeing the weakness come through their economy. At the same time, inflation is that much higher as a result of oil prices. Can they hike into a situation like this, given the fact their one mandate is inflation, but if they had a dual mandate, it would be screaming something perhaps a bit different.
It's the communication dance. You want to anchor inflation expectations, but you really don't want to hike interest rates. And I get the sense from all these central banks, particularly in Europe, the ECB and the Bank of England, that that's the situation, that's the tension that they're currently facing.
At a certain point, if you see your economy deteriorating and unemployment going up, what do you do? How do you respond? Do you change your mandate? Right now, the Bank of England voted 8-1 to hold rates where they were, but they indicated that they could be hiking materially. Does Christine Lagarde say the same thing? I'm looking for the color of her scarf to give some indication.
Is that what people do? We used to do that with Draghi and ties.
I think we need to start a scarf brooches. And brooches,
Scarves and brooches.
Exactly what it is.
OK, now, typically, I wouldn't try and mislead the audience and say, watch the news conference. It's going to be really interesting. the ECB is never really very interesting, particularly the news conference under Lagarde.
But
this one could be slightly different because of the situation they're in and the challenges they face in the Middle East.
how does she message this, given the fact that she has to signal a desire to anchor inflation expectations? But already yields are so high, number one. And number two, the data coming in weaker than expected just this morning, growth coming in weaker than expected, CPI on the margins coming in line, but a little bit higher in certain areas. It gives a sense of their conundrum.
Europe is struggling. First it was Asia, now it's Europe. They're struggling, we know, with jet fuel. Petrol prices are going up. They are more reliant on all of these imports from the Middle East. We spoke to the U.S. Energy Secretary this week, who's in Croatia. They're dubbing them Trump peace pipelines, but what they're talking about is just more LNG going to Europe. Second shock after Russia's invasion of Ukraine. Now they're doing with the Strait of Hormuz being closed.
So that's the schedule for this hour. So at 8:15, we'll get an ECB rate decision. After that news conference wraps up, it starts at 8:45. We're going to catch up with this guy. I think an important conversation on the Federal Reserve and the backdrop, the economic backdrop, given the threats we see in the oil market. Kevin Hassett, NEC Director, 9:30 Eastern Time, an extended edition of Bloomberg Surveillance right here on Bloomberg TV.
With gasoline prices near the highest levels that they've been going back a number of years, and this fear that maybe this will impede consumer spending, how does he dovetail both an argument for a Federal Reserve that's going to cut rates with an economy that is strong and delivering above average GDP growth? It is an uncomfortable message to deliver.
Looking forward to that conversation in the next hour. This hour, we'll catch up with Mira Pandit of JP Morgan Asset Management, with oil pulling back from wartime highs. Pooja Kumar of TD Securities with a rate decision looming from the ECB, and Jonathan Pingle of UBS breaking down the latest round of economic data. We begin this hour with stocks edging higher on easing oil prices. Mira Pandit of JP Morgan Asset Management writing oil at 110 to 120 for 6 months could have a 4 to 6% hit to EPS, but that would still leave us with double-digit earnings growth. Mira joins us now for more. Mira, good morning.
Good morning.
It's good to see you. Break it down. Where's that earnings growth coming from right now?
Look, if there's a war, nobody told earnings. That is one area of the economy where we haven't seen a significant decay in light of expectations. And even with some of the expectations that you just highlighted from our various equity analysts across JP Morgan, the range is still pointing to potentially double-digit growth. You started off the year with expectations for 15% year-over-year growth. That's gone up to almost 19%, 18.5%. So you've continued to see those upward revisions. Now, some of that is energy. A lot of that is tech, still being very resilient around that secular story. So we have a lot of buffer here when it comes to profits. And I think that's why, even as yields rise, you're not necessarily seeing stocks react.
You alluded to it. If I strip out a couple of energy companies, a couple of tech firms, does it still look as impressive?
It looks slightly less impressive, but nonetheless, I mean, that earnings story is getting very concentrated, so we do need to be mindful of that. But it is still broadened out overall. So if you look at the overall Mag 7, that in and of itself is a concentrated story, a lot of that around semis. You take just one of those Mag 7 companies out for this quarter, and that 22% growth rate falls to about 6.5%. Which is not great news when we think about the diversity of earnings growth within the Mag 7. But if you look at the S&P 493, you're still seeing double digits there. You strip out any other semi from that 493, and you're still just right around that double-digit mark. So you do see some broader contributors here and some other different sectors that are participating. A lot of them still linked to AI, but at least now it's not AI in one or two companies. It's AI kind of permeating through the system.
Is this backward looking? Is this ignoring the oil prices that we see now, should they persist for another couple of months?
Well, a lot of those estimates that we cited are assuming that oil prices stay at these elevated levels for 6 months' time. So it does assume a more extreme scenario. And again, even if we add a few percentage points to that, the buffer is so strong. And again, this secular growth around AI is so strong and broadening out that it will take more of a shock. And I think what's been interesting is this rolling 4 to 6 week timeline where it seemed like in the beginning, if we get to April, mid-April, and the Strait of Hormuz is still closed, we're going to be in big trouble. And that timeline keeps getting pushed out. So clearly the economy, the markets, earnings overall are a lot more resilient to oil shocks than perhaps we originally expected.
I love this comment. You know, just it needs a different kind of shock. What other shock do you need? You have your inflation shock, you've got your geopolitical crisis, and now you've got a potential rate shock. Could some of the moves that we're seeing in the bond market serve as perhaps a trigger to change this picture?
If we see rates move a little bit higher, and if that's because of some changes around Fed expectations, that's typically what we do see unseat the market. If all of a sudden a hike becomes a very real probability, then that is going to be very much a troubling signal for the markets, not necessarily just where yields are, but what that signals about monetary policy. But I do still believe that from a Fed perspective, the next move is more likely to be a cut than a hike. We're in a very different situation than we were in 2022. Obviously, the starting point from inflation and the direction of travel is likely different than it was in terms of intensity back then. But you also have a consumer that's a lot weaker. The excess savings has dried up. The savings rate itself is depressed. You have a labor market that's not particularly strong, wage growth that's moderated. And when you look at expectations around inflation, the fear here is, does headline feed into some of these inflation expectation measures? But you look at five-year forwards, you look at five-year break-evens, they've increased about 15, 20 basis points since the war broke out. So a little bit of pressure there, but nothing that's running away here. And I think ultimately what might happen, not only here in the U.S., but probably overseas if we think about Europe, is that higher headline inflation, because people are spending more on gas and food, starts to feed into core, and that actually keeps a bit of a lid on core because people are cutting from other areas.
But you say it could peak around 4% this summer, inflation. So how can they cut in that environment?
Well, I don't think the cut is on the table necessarily for this year. Maybe at best December, depending on how things play out, probably pushed out into 2027. But if we think about how we get to 4% back to the twos by the end of the year, probably the upper twos, well, we have a couple of different factors here. You have a bit of the flip side of energy prices that we do think will subside, maybe not all the way back down to where we started the year, but make some progress there. We're seeing that the tariffs will likely start to see a bit of that draining out further, the flip side there. We've had less immigration, so less demand to the overall economy. You continue to see rents soften, so we could very well be in a position where that inflation rate starts to come back into the 2% range, which means the Fed still has to wait and see, but it puts them in a better position by the end of the year to think about cuts for next year.
We spoke to Eric Rosengren moments ago, former Boston Fed president, about Chairman Powell staying on as a governor. What kind of institution is Kevin Warsh inheriting here when he takes over in June?
When you have Chair Powell staying on, he's certainly very much emphasized the point about the legal actions against the Fed and wanting to maintain the sanctity of that institution. I think the role he'll actually play on a day-to-day basis is a little bit more moving from your high school principal to your guidance counselor here, where he's going to try to help build some consensus and, certainly really try to protect the institution. But I do think that, look, the consensus building is an important aspect of the Fed, but maybe we had a little bit too much consensus building in the earlier part of this decade that could have helped prevent a policy error had there been a little bit more debate. So I do think that the debate element that Warsh will infuse into this committee is probably going to be a good thing when we think about the two-sided risks here.
Mira, it's good to see you. Thanks for breaking it down. Great summary. Mira Pandit there of JP Morgan Asset Management. I welcome it. We've complained about it for ages. The groupthink of the Federal Reserve, the lack of groupthink in the last 24 hours was pretty welcome.
Yeah, I mean, look, this was exactly what Kevin Warsh said he wanted. Can we give a victory lap to Mira Pandit? Moving from principal to the guidance counselor.
Yeah.
That is an analogy that has so many wonderful ways to play it that I plan on really
Who do you think
spending
spends more time in that office of the Federal Reserve? Got any thoughts? Don't know answer right now.
What, me?
Yeah, who would spend more time in that office seeing the guidance counselor?
Oh, among
the FOMC members.
Oh, yeah, I can. Oh,
yeah.
Yeah.
Yeah, exactly.
Okay.
All right, let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Stellantis shares sliding as investors look past a return to profit, questioning the sustainability of an apparent turnaround. Despite improved sales, analysts warn the numbers were padded by price cuts and a one-time €400 million tariff refund. The U.S. war in Iran has cost $25 billion so far, according to a senior Pentagon official. The cost includes spending on Operation Epic Fury, with most of it going to munitions, as well as operations, maintenance and equipment replacement. The White House expressing opposition to a plan by Anthropic to expand access to its Mythos AI model to about 70 companies and organizations. Sources telling us here at Bloomberg, officials are concerned the company lacks the compute power to guarantee security. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie a little bit later. Up next, the morning calls, plus the latest rate decision from the ECB. We'll break it down with Ollie Crook over in Frankfurt. We'll catch up with Pooja Kamrat of TD Securities in just a moment. From New York City this morning, good morning.
going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Equities doing better and better. Near session highs up by 0.5% on the S&P. The Nasdaq higher by 0.6. That's the price action. Here's your morning calls. First up, JP Morgan downgrading Meta to neutral, citing concerns about the company's massive AI spending plans. That name's down by 9%. Your second call from TD Cowen raising its price target on Alphabet to $450, seeing an inflection point in its monster cloud results. That stock is up 8%. And finally, Bank of America raising its price target on Amazon, anticipating more optimism on AWS capacity returns. That stock is up by 3.5.
Yeah, just important to note that Amazon's actually the biggest winner so far this year, up 14%, as it turns to more chip manufacturing and building out some of its cloud. I remember last earnings season, we were really skeptical of Amazon because they were announcing this huge CapEx spend and they were behind, and people were saying, they're behind, they're never going to catch up. Well, guess what? They're catching up, and they're catching up fast, and they're being rewarded for it.
This is what's insulating this equity market from some of the drama elsewhere. Let's get to some of the drama elsewhere. Another central bank decision, this time from the ECB, the European Central Bank, keeping interest rates unchanged, but some nuance here and some headlines we need to work through. So let's head over to Frankfurt at the ECB and catch up with Bloomberg's Ollie Crook for more. Good morning, Ollie.
Yeah, good morning, Jonathan. We're getting, as expected, the rate decision from the European Central Bank, leaving rates unchanged. This was never really regarded as being a live meeting for the European Central Bank. But what we're getting here from the statement, really saying that downside risks to growth have intensified, upside risks to inflation have intensified, and then they're not pre-committing to any particular rate path. That is the ECB using very, very cautious language ahead of a meeting where it's very hard to predict where inflation is going for the ECB. For the ECB, what they have done is they have said structurally here, we're looking at three basic scenarios. There's the good, there's the bad, and there's the ugly. And initially, last week, we heard from Christine Lagarde. She said that the situation in terms of inflation, where they think it's going, is between good and bad. From the data we've seen over the last couple of hours, John, we've got GDP data out of the Eurozone, a number of different countries, in addition to CPI data. Just look at what happened in France. France was supposed to grow in the first quarter by about 20 basis points. That came in absolutely flat. They were supposed to get inflation of 2.3%. We got 2.5%. That is the kind of stagflationary dynamic within some of these European economies that the ECB is going to be very, very cautious about. And we should say they're coming at this basically in real time. I mean, we woke up this morning on the day of the ECB rate decision with Brent at $126 a barrel. So what we're going to be watching very closely a little bit later is that press conference with Christine Lagarde. I suspect she knows what all the questions are going to be to her. I doubt that she's got all the answers.
Ollie Crook, thank you. Over in Frankfurt, Ollie's going to get in that news conference for you. That news conference with President Lagarde starts in just under 30 minutes' time. This is the central bank dilemma. You can't offer much guidance. You have to take a meeting-by-meeting approach because you've got absolutely no idea what's going to happen in the Middle East, how embedded price increases might become, or how to respond when this happens. Upside risk to inflation, downside risk to growth, and on both sides, they've intensified.
And we already are seeing it in the data. Earlier this morning, we got GDP data coming out of Europe. It came in weaker than expected. We had CPI, 3% year over year, increasing steadily, given the energy shock that you're experiencing. So what I'm curious, how much did you have some sense of what instruments they're planning to use? They said they stand by ready to adjust all instruments. Are they going to start to adjust some of their language to reflect the weakness that potentially could arise?
Let's get to this conversation with Pooja Kumar of TD Securities, joining us now from London. Pooja, welcome to the programme. The ECB and the Governing Council believes they're well positioned to navigate the uncertainty. Do you think they are?
I don't think any central bank is right now.
ECB did give us a proper model with 3 scenarios on how they are supposed to react. And as we previously mentioned, we are sitting closer to the adverse scenario, which means that there are small second-round impacts. But I think at this stage, the market is so delicate that even if ECB wants to hike rates, like even a 25 basis points means that markets move 100 basis points. So I think how she communicates is going to be very tough this time.
We've seen it in recent data, Pooja. You can see that consumer expectations over the short term for inflation have risen. The ECB is acknowledging that right now. To anchor inflation at 2% over the medium term, Pooja, do you think that will require interest rate hikes?
So, as we said, that ECB is working on a model, and whatever they told us in terms of the surveys, which is the inflation surveys as well as the PMIs, they are giving us indicators that there might be second-round impacts that they cannot actually shy away from. I think for me, it's still that they would try to make. They need more data, right? We don't want to act much in terms of just one data price. I think that will be the language. But for us, it's very clear from whatever we've heard from ECB so far is that inflation is still primary. They are ready to actually keep growth secondary right now. I think they've all suffered in 2022, so they don't really want to take the risk.
Pooja, are you surprised that long-term yields keep going higher, even amid concerns about some sort of suppression to growth?
No, definitely it is something that we are really closely watching, and I think that's why if you see after the March central bank meetings, most of the central banks try to take a step back and try to actually soothe the market a bit. But if you just put the oil chart and a rates chart, they're actually moving just with 100% correlation right now, and that's the key thing. If you do not put a lid to oil prices, it's very hard to put that lid on the rates unless we get something more decisive from central banks that they are able, that they are able to say that this is just a supply shock and the prescription is not just to hike rates. It's not a demand-driven inflation right now.
Right now, we are seeing a bit of a bid into bonds, in particular German bonds. You are seeing prices go up, yields come in after rising to some of the highest levels that we've seen going back to 2011. Pooja, is this enough coming from the ECB? Just the suggestion of the dual risks coming up, even without moving. Is this enough for them to just kind of maintain that optionality for the foreseeable future?
I don't think that will be the case. I think as far as we know, Lagarde is concerned, she will still try to say that they are still waiting for data points. But for me, the key risk is that, yes, we have lots of data points coming into the June meeting, which is one more consumer survey, one more PMI report, and one more CPI report. And also the fact that this is the time that hawks have become much more vocal, right? So even if today's conference is kept a bit more neutral and data dependent, we'll all be conscious as to how different groups of the central bank come in next week, just given the fact that we know that this crisis is not ending anytime soon.
Pooja, what can we learn from the ECB and how they dealt with the other energy shock with Russia's invasion of Ukraine?
I think at that stage, what we learned from that time was that they managed to anchor inflation primarily because the demand shock wasn't a case in Europe. So, they just had to tackle the supply part of it. I think the situation is exactly the same when it comes to Europe right now. We did have a big German fiscal spending last year, but we can see the demand has still not moved at all. So I think in Europe, the lower wage growth, the lower growth, the lower productivity potential as compared to US and UK does suggest that that spiral effect is not going to be there in Europe. But we also know ECB is laser focused on inflation right now. So they will be possibly the first to act, but they might have to reverse it just because the real economy is not exactly the same as compared to 2022.
Pooja, good to hear from you. Thanks for the reaction to the ECB decision. Pooja Kamran there of TD Securities. Yields are lower today across the curve worldwide, not just the US, but Europe as well. Crude is helping to encourage that move. Crude is pulling back from wartime highs that we hit a little bit earlier on this morning. But also I'd say this as well, it's always relative to expectations. It's difficult to out-hawk pretty hawkish pricing for the ECB and the Bank of England coming into these two decisions.
Yeah, buy the rumor, sell the news. At what point are we talking about that type of reaction? That said, I do think it's notable that this is enough to calm market expectations of longer-term inflation, at least in the margins. And you could say we're getting no signal whatsoever because it's all driven by oil prices. So what are we even talking about here with central banks? Ultimately, they've lost control. And they're saying, as we've lost control over this situation, we're going to step back and we're in a position to do so. And right now, you're not seeing inflation expectations run away over the long term. For now, at what point does that change, given the fact that in some places the strength in the economy is enough to keep some of the inflationary pressure?
I think we've said it 1,000 different ways already this morning. First and foremost, they want to anchor inflation expectations. That's their job. But you can sense the reluctance to actually hike interest rates at these institutions. As for the other headlines, I've got to get to this from Meta. Meta's spending a lot of money. That's not news. You know that. This is the news. 6-part bond offering from Meta. They're kicking that debt sale off this morning. And we know what they're looking to raise. They're looking to raise as much as $25 billion from that bond sale. They are not alone.
And this is why people have said you can throw anything at this market and it will just take it. I'm looking right now at investment-grade bond spreads, the extra yield over benchmark rates that people demand to own investment-grade debt. It is 80 basis points. It is less than 1%. It has gone down through this, even with the bonanza of debt sales, not only from corporates, but also from governments, and even amid all the concerns with respect to oil prices. So you look at this and you start wondering, is there going to start being pushback by investors to CapEx plans that are filling the holes that are made by inflation and potentially concerns about what the business model really looks like going forward?
Which market, which investors? Because right now, in the bond market, to your point, we've seen great demand for these debt offerings whenever they come from these big companies. For the equity market, not impressed this morning. Meta down by close to 9%, the smallest bounce off the low this morning.
Yeah, and not necessarily impressed with the fact that they're increasing CapEx without a real plan of exactly how they're going to use it. At this point, does this continue to be a repeat of what we saw late last year, although just for Meta, while the likes of Alphabet continue to do really well?
And geopolitics really hitting Meta on two fronts. The components you talked about earlier, but also the fact that some of their subscriber growth and advertisement has been hit what's going on when it comes to Russia and Iran they talked about yesterday. So, tough spot.
Economic data just around the corner. That data drops in about 5 minutes' time. The news conference with ECB President Christine Lagarde coming up in about 20 minutes' time. Then 1 hour from now, got to repeat this programming note, NEC Director Kevin Hassett joining us on an extended edition of Bloomberg Surveillance to accommodate that conversation following quite the announcement from Chairman Powell yesterday in the news conference. The chairman is heading to the exit. As the chairman, he's sticking around as a governor. Controversial move from the Fed chair. We'll get the reaction from the White House a little bit later this morning. Up next, the data and reaction with Jonathan Pingle of UBS.
ओके गाइस इंपॉर्टेंट डेटा आने वाला है यूएस का जीडीपी का डेटा अनएम्प्लॉयमेंट क्लेम्स एडवांस जीडीपी और कोर पीसी प्राइस इंडेक्स का डेटा फिर सीधा आपका अनएम्प्लॉयमेंट क्लेम 7 बजे यूएस मार्केट ओपन फिर नेचुरल गैस की इन्वेंट्री नेचुरल गैस में कुछ खास है नहीं ऐसा ने बताया कुछ खास बन नहीं रहा करने के लिए हो सकता है गिरता रहे कोई नया सपोर्ट बनता है तो देखते हैं नहीं तो हो सकता है वापस 237 वापस आ जाए बस के सिनेरियो अगर यहाँ कोई नया सपोर्ट क्रिएट कर दे 15 मिनट डेटा इंपॉर्टेंट है, ध्यान रखना। कि 2 मिनट रह गए हैं। कि 10 सेकेंड्स डेटा जस्ट रिलीज ही होने वाला है। क्रूड ऑयल को भी इम्पैक्ट कर सकता है, ध्यान रखना। ओके, डेटा इज आउट। क्रूड ऑयल फ्लैट ओपन हुआ है। फोरकास्ट जितना था एक बार चेक कर लेते हैं। लेट्स सी द डेटा।
Seconds away, the price action shaping up as follows. 60 minutes away from the opening bell. The cash open just around the corner. Equity futures near session highs up by 0.6% on the S&P. On the Nasdaq 100 up by 0.8. Crude pulling back by 3% on Brent to 114, unlocking this move in the bond market. Yields down by 5 basis points on twos, 389. All of that just on the margin, helping to support risk appetite when things were getting a little bit shaky earlier on this morning. Economic data just crossing the Bloomberg. Let's break it down and cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. It's dropping in fits and starts, but we've got a lot of numbers to talk about. Let's start with the inflation outlook, the inflation side of the Fed's mandate, and that is the PCE price index for the month of March, up 0.7%. That is almost double the 0.4 the months before, and it is what was expected. The core on a month-over-month basis up 0.3 as expected, down just a little bit. But that puts our numbers exactly where Jay Powell said they would be. Index for prices year over year, 3.5%, and for the core, 3.2%, significantly far away from the Fed's 2% target. Now, as part of that report, we also get income and spending. Income's up 0.6%. I'll get the breakdown where that comes from for you a little bit later. Personal spending up 0.9 as expected. Consumers hanging in there a little bit. All of this feeds into the GDP report. GDP for the first quarter, this is the first report for the first quarter, up 2%. It was a 0.5% gain in the fourth quarter of last year. The 2% comes in lower than the 2.3% that had been expected. Personal consumption stronger, though, 1.6%, 1.4% was expected. The employment cost index is a little stronger, up 0.9% compared to 0.7 the prior quarter and 0.8 for the expectation. We'll get a breakdown on that for you in just a second, whether that's wages or the sort of benefits and insurance. And then finally, we'll go to the employment side of the Fed's mandate. 189,000 is the jobless claims number. It's sort of ridiculously low here. 215,000 was the number for the prior week. On a continuing basis, 1,785,000, down from 1,808,000. So a lot of numbers out there to digest. I'll look at some of the details of those, John, but we'll see what the markets think of all of this together.
You take some time, Mike. I'll come back to you in just a moment. Equity futures, just your update, was near session highs, just off those levels, still positive by 0.5%. Yields give up some of the move this morning, down by 5 to 6 basis points at the front end of the curve, now down by 4 to 5. Let's break this up and start with the labour market data. The argument that we've heard repeatedly about why you won't see price pressure take off in this economy is that the labour market simply isn't strong enough. Now, that's the consensus view on Wall Street. Does the data stand up to that argument pretty well this morning or not?
The ECI came in hotter than expected. Initial jobless claims, and maybe I'm looking at something wrong, came in at the lowest level going back to the late 60s. I'm going to go double check that, but this is how low the levels are that we're seeing in terms of initial jobless claims. So if you're looking at the fact that the labor market data on the margins is coming in hotter than expected, and the fact that jobless claims came in at, to quote Michael McKee, a ridiculously low rate, this does suggest the heat that Neil Richardson was talking about. She said this is a market that is actually re-accelerating on the heels of some of this CapEx.
Let's get to Jonathan Pingle of UBS. He's been tracking the numbers as well. Jonathan, good morning.
Morning. Thanks for having me.
I got an email earlier on this week, and it said, love the show, but I was like, oh, here we go. And then it said, Thursday mornings, 8:30, every single time I cringe, because you all get excited about how low jobless claims are. And then there were all these questions and marks about how valid that data actually was. Is that the real deal, 189? Does that tell you much about this labour market and what's actually happening in this economy?
Yeah, I mean, initially, I mean, I'm not quite sure how to what the witty retort to that is.
Has something changed
they're
with
low, and I think
employment
it's
insurance that makes it difficult to actually get a read on whether the economy and the labour market is weak or not, based on weekly jobless claims?
Well, I mean, it is only sort of one side of the. It really is only one side of the equation. I mean, you know, if you think about if you smooth through some of the week-to-week volatility, initial claims are certainly low. They're running about 205. I'm gonna guess that's the 4-week moving average with this number, and maybe it's closer to 200. But that's basically been bouncing around there since January. And if you think about it, we have had basically pretty stable, low level of layoffs. This isn't that much different than 2018, 2019 layoffs. But the question for the Fed is, hiring has come way down. I think, though, if we think about continuing claims coming in, that's a sign that, maybe hiring is kind of fine, and we're still treading water there as well. But, I think looking at the swath of this morning's data and thinking about yesterday, thinking about the overnight news about CapEx, I mean, that really is what the really big driver, overarching theme is right now. Because, as much as, real consumption came in at 1.6, a tiny bit ahead, that has slowed. I mean, if you look at the last few quarters, real spending has definitely cooled. Real disposable income has come in. Even with this ECI reading, we're still going to have, year-over-year gains in nominal wage growth around 3.5%. So, overall, that's still a story of we have seen the slowdown in the labor market. It's spilled over into slower income growth. But, man, the CapEx is off the charts.
It's incredible, isn't it?
Strong.
It's incredible, the stimulus program coming from these 4 tech companies overnight, as we've referred to it as.
Yeah, although we keep saying, okay, it's these companies and these companies alone. This paints a very different picture. The fact that personal income came in at 0.6% versus 0.3% was revised up for the prior month. The same thing goes for personal spending, 0.9%. It was revised up from 0.5% the previous month. Every single indicator here, with the one exception, a very interesting exception of GDP, coming in better than expected at a time when it's not just the hyperscalers and their CapEx. So what's behind it, and how resilient can that be in the face of a consumer shock?
Jonathan, the bar for hiking got a little bit lower. Certainly not the consensus view that that's the base case for the year ahead, but the bar for hiking got a little bit lower. Do you think we're still underappreciating the potential for broad-based price pressure in this economy and the ability of this labour market to support it?
Well, I think the economists like me might be, but I think the market looks like it's pretty. It's pretty ready to price in hikes. I mean, when we saw the initial reaction to the oil price shock back in early March, I mean, market was pretty quick to price in like near-term hikes, which would be a remarkably fast pivot for the Fed. And yesterday, if you step back and you think about the information we got, I mean, 9 FOMC participants voted for an easing bias. One of the 9 voted for actually easing, even though they knew core inflation was 3.2% and there's upside risk from.
ओके क्रूड ऑयल में देखो ये ऊपर आता है तो इसमें एक वापस सेलिंग का प्लान कर सकते हैं, ठीक है। ऑलरेडी प्राइस 10,270 के नीचे है। जब तक 10,270 के नीचे है तब तक सेलिंग का प्रेशर है। 10,270 के 10,370 के जब तक नीचे है तब तक कोई इशू नहीं है। 10,370 के ऊपर अगर कहीं ट्रेड करना शुरू कर दिया तब थोड़ा सा इशू आ सकता है। तो ऊपर आपका रेजिस्टेंस जोन ही है कंप्लीट। मॉर्निंग पे थोड़ा सा अपसाइड पे उड़ा था, गैप अप की वजह से था रेजिस्टेंस जोन पर ही, बट कंफर्मेशन के लिए 10,270 के नीचे तभी क्वांटिटी ऐड कर सकते हैं। तो एक पुल बैक एक्सपेक्टेड ही आना ही है वो, जब तक अब प्राइस वापस 10,700 के ऊपर क्लोज नहीं करता है, फिर कोई नया सपोर्ट क्रिएट नहीं करता। नीचे 9,240 का सपोर्ट है और 9,280 टू 90 के अराउंड विल सी वहाँ पर प्राइस एक्शन कैसा बिल्डअप हो रहा है। मार्केट क्लोज है, ध्यान रखना टुमारो मार्केट इज क्लोज्ड। एनएससी बीएससी क्लोज है, महाराष्ट्र डे है, बुद्ध पूर्णिमा भी है शायद, सो मार्केट इज क्लोज, एनएससी बीएससी इज क्लोज। एमसीएक्स मॉर्निंग सेशन क्लोज है, इवनिंग सेशन ओपन रहेगा शायद, विल सी इफ अगर लाइव करेंगे तो। बाकी क्रूड ऑयल नीचे आता है तो 10,250 240 विल बी अ गुड सपोर्ट। एक बार ऐसे टेस्ट हो गया तो देखते हैं फिर से टेस्ट होता है या नहीं, क्योंकि उसके नीचे गया तो फिर या तो नया रेजिस्टेंस सपोर्ट बनेगा, नहीं तो नेक्स्ट सपोर्ट विल बी सॉरी 10,000 9,230 नॉट 10,000। अच्छा एक्सपायरी थी सेंसेक्स की, मज़ा आया, काफ़ी वॉलेटाइल मार्केट था। ऑप्शन सेलर के लिए तो मज़ेदार था, ऑप्शन बायर को ही मज़ा आया होगा, बिकॉज प्रीमियम जिस तरह से सूट अप हो रहे थे, मार्केट गैप डाउन ओपन हुआ, सेल ऑफ आया, फिर लोअर लेवल से वापस रिकवरी, डे हाई के ऊपर वापस, डे ओपनिंग के ऊपर वापस क्लोज। 400-500 के जो प्रीमियम थे वो जीरो हो गए ऑलमोस्ट, पुट साइड के वो भी इन सेम सिनेरियो कॉल साइड के प्रीमियम का भी हुआ था मॉर्निंग पे। ठीक है, नेचुरल गैस रिवर्स आया है पिवट पॉइंट से, कुछ खास मेरे अकॉर्डिंग कुछ लेवल बन नहीं रहे, तो पिवट पॉइंट को फॉलो कर सकते हो, मेरे अकॉर्डिंग सपोर्ट रेजिस्टेंस काफ़ी दूर है ये, तो मुझे नहीं लग रहा वहाँ आएगा आज के दिन। तो फिलहाल के लिए पिवट पॉइंट्स ही हैं जिनको यूज़ करके थोड़ा बहुत प्लान कर सकते हैं स्कैल्पिंग वगैरह। रेंज भी 250 के आसपास है तो इतना मूव नहीं है। These are the pivot points right now I'm using in natural gas. ठीक है, exact support and resistance which I am using, it is not here, हैं बट काफ़ी दूर हैं। कि गोल्ड ऑप्शन की एक्सपायरी है आज, ध्यान रखना। कल जो सेल ऑफ आया था आज रिकवरी करी है काफ़ी ठीक ठाक। यूएस डॉलर इंडेक्स थोड़ा सा सेलिंग प्रेशर बना हुआ है, देखेंगे, मुझे लग रहा है शायद कल परसों में कुछ न्यूज आएगी रिगार्डिंग द यूएस की क्या और मिलिट्री प्लानिंग करता है, क्योंकि याद रखना यूएस में एक लॉ है वॉर पावर रेजोल्यूशन, उसके अकॉर्डिंग यूएस प्रेसिडेंट बिना यूएस कांग्रेस की ऑथराइजेशन के बिना लगभग 60 डेज तक किसी भी कंट्री पर वॉर कर सकते हैं, या फिर मतलब वॉर चला सकते हैं, उनको ऑथराइजेशन की जरूरत नहीं है। एक्सट्रीम केसेस में उसको 30 डेज और बढ़ाया जा सकता है, उसके बाद उस वॉर को रोकना ही पड़ता है, या फिर कांग्रेस से, वहाँ की जो कांग्रेस है असेंबली, वहाँ से अप्रूवल लेना पड़ता है, तो वहाँ पर भी वोटिंग हो सकती है। दैट विल ऑल्सो इम्पैक्ट द वॉर। डेटा जो आया था दैट इज गुड कह सकते हो फॉर यूएस इकोनॉमी। एक जीडीपी का डेटा अगर मैं छोड़ दूं उसके अलावा ऑल अदर डेटा इज वेरी गुड फॉर ओवरऑल यूएस इकोनॉमी। अगर चेकआउट करोगे जीडीपी का, यूएस का जीडीपी का डेटा था क्वार्टर ऑन क्वार्टर बेसिस पे, जो फोरकास्ट थी 2.2% के आसपास आएगा, 2% आया है, 0.2% कम है, विच इज़ नॉट गुड फॉर यूएस मार्केट, फॉर यूएस इकोनॉमी एज वेल। बाकी के सारे डेटा अच्छे ही हैं। प्राइस इंडेक्स का डेटा देखोगे न्यूट्रल है, फोरकास्ट जितना था उतना ही आया है, 0.3 0.3। employment cost index quarter on quarter basis, that is also positive for dollar, negative for gold and silver. And जीडीपी का मैंने आपको बता ही दिया. अनएम्प्लॉयमेंट क्लेम्स वेरी इंपॉर्टेंट डेटा फॉर यूएस इकोनॉमी. कितने लोगों ने यूएस में अनएम्प्लॉयमेंट्स के लिए फाइल किया है लास्ट मंथ. तो फोरकास्ट ज़्यादा था, 213,000 लोगों ने शायद फाइल किया होगा अनएम्प्लॉयमेंट क्लेम्स का, ऐसा सर्वे में कहा गया था. एक्चुअल में बहुत कम आया है डेटा, विच इज़ 189,000. जिस तरह का इवन जो सिनेरियो चल रहा है यूएस में, इसका मतलब ये समझा जाएगा कि यूएस की इकोनॉमी बहुत अच्छा कर रही है, वहाँ पर काफ़ी लोगों को जॉब मिल रही है, या फिर काफ़ी कम लोग जॉब के लिए अप्लाई कर रहे हैं. तो उसके दो ही मतलब हो सकते हैं, तो लोगों के पास जॉब है और कोई ऑप्शन नहीं हो सकता. ठीक है. एक और डेटा आता है, शायद वो फ्राइडे को आता है, देखना पड़ेगा. दैट इज अनएम्प्लॉयमेंट क्लेम्स कितने लोगों ने फाइल किया है, कल आएगा शायद, मुझे लगता है. वो नहीं, अनएम्प्लॉयमेंट, एक अनएम्प्लॉयमेंट क्लेम्स का डेटा भी आता है, वो देखना पड़ेगा. हाँ यही है ना, अनएम्प्लॉयमेंट क्लेम्स का डेटा ही तो ये. ओके, 30 अप्रैल है ना ये तो. ठीक है. अनएम्प्लॉयमेंट क्लेम्स का डेटा, ये कितने लोगों ने अनएम्प्लॉयमेंट के लिए फाइल किया था, कितने लोग अनएम्प्लॉयमेंट हो गए थे. तो ये काफ़ी अच्छा आया है, काफ़ी कम लोगों ने अनएम्प्लॉयमेंट के लिए फाइल किया है, विच इज़ गुड फॉर द यूएस इकोनॉमी ओवरऑल. Okay, natural gas also giving a good move upper. पॉइंट ऑफ इंटरेस्ट पे पहुंच चुका है, टेस्ट हो चुका है, ध्यान रखना ये। थोड़ी देर पहले मार्केट 253 के ऊपर था, नीचे आया, रिटेस्ट करके ऑलरेडी सेलिंग में आ गया है। थोड़ा रिजेक्शन मिल सकता है, मुझे लग रहा है शायद ये एक प्राइस एक्शन बनता है तो और ऊपर जाने के चांसेस हैं। टेस्ट हो चुका है तो मुझे इसकी स्ट्रेंथ पे थोड़ा सा डाउट है। ब्रेक अगर सस्टेन किया ऊपर तो इजीली 256 तक तो जाना चाहिए। दैट इज़ अ सेकेंड रेजिस्टेंस जोन, दैट इज़ अ पिवट, रिमेंबर ये पिवट है आपका, सेंट्रल पिवट। नीचे पहला सपोर्ट था, दैट इज ऑलरेडी टेकन। गैप फिल अभी हुआ नहीं है ना शायद। Commanders to brief Trump on new Iran military option on Thursday. Thursday आज ही है ना Thursday. Let's see कल कुछ तो impact पड़ेगा इसका crude oil natural gas पे. Expected pivot के ऊपर निकल चुका है, देखते हैं रेजिस्टेंस 1 तक जाता है, मोस्ट प्रॉब्ली डायरेक्टली चला जाए तो बढ़िया, अदरवाइज प्राइस एक्शन दे सकता है. रैली एक आ चुकी है, थोड़ा सा पॉज देन अपसाइड. सेल मत करना इसमें, कुछ भी हो जाए. पुल बैक में इतनी बड़ी कैंडल बनी है, नॉट फॉर सेलिंग.
yet insufficient information. So why do I say it's an informed decision? It's because we debated at length and in depth various options. We debated the decision that we have unanimously taken today, but we also debated at length and in depth a decision to possibly hike. So that was debated amongst all governors. And I'm sure that you will meet some governors who will argue both sides, or maybe one side, of both proposals. So it was really a deeply discussed monetary policy stance, of which the outcome was a unanimous decision to leave the 3 interest rates unchanged. And I'm saying that it's an informed decision based on insufficient information. It is caused by the fact that while the hard data is broadly in line with our projection and what we discussed here back in March, but there is such uncertainty that we need to understand and revisit all of that at our next monetary policy meeting. And we believe that given the position we are in, we are saying in the monetary policy statement that we started from a good position, we were well positioned to navigate. So given that position, we believe that these 6 weeks will be the right time to assess the development, to understand in particular the outcome, possibly, of the conflict, or if there is no outcome, that in and of itself will be informative, in order to make an informed decision on verified and revisited information that we will receive in the next 6 months. That's the clearest way, I hope it was clear, that I can describe for the really good discussions that we had both yesterday and today.
Next question to Annette Weisbach of CNBC. Annette, please.
President Lagarde, thank you for taking my questions. I have a question on whether you have also discussed that the risk of a stagflationary scenario in the euro area and how that discussion went. And also in the US, they are starting to also think about shrinking the balance sheet instead of using interest rate as a monetary policy instrument. Do you look into using other instruments as well instead of just hiking to alleviate the pressure from the price pressure and also help perhaps the economy? Thank you.
Well, thank you for your 2 questions. On the first one, we take the view that the word, I mean, it's quite popular to talk about stagflation, and it flags a lot of anxiety and all the rest of it. I think we have determined that stagflation is the right characterization of what happened in the 70s. But from our perspective, we think that it's better to park it in the 70s, given the facts that we have at the moment. It's a completely different situation. In the 70s, you had inflation continuing at a sort of sustainable and solid pace. You had very high unemployment. You had a monetary and fiscal framework that had nothing to do with what we have at the moment. So we don't apply stagflation, that flashy term, to the circumstances that we have, because we really think that it's associated with the 70s situation. On the tools, we have a whole series of tools in our toolbox. But certainly from our perspective, and given the data that we have and the kind of shock that we're facing, we believe that the interest rates is still the best tool that we can use and that we have debated in the course of yesterday and today. Thank you.
Francesco Canepa of Reuters. Francesco, please.
Thank you very much. So First question about your reaction function. Could you unpack a little the relative weight that you attach to growth and inflation in your reaction function? And second, about the scenarios. Did you update them? And if so, what do they look like now? And why, if I may, do you not think it relevant to say where we are now compared to the baseline in the two scenarios? Thanks.
I'm so pleased that you mentioned the reaction function. Because it's, we spend quite a lot of time working it out, finding consensus around the reaction function. And as you know, because you're a frequent reader and observers of what we do, the reaction function has been very clearly spelled out in our strategy review that we published in 25, and that I have tried to elaborate on and that I have tried to apply to the current circumstances in both my speech to the watchers and my speech in Berlin last week. So I think for me, there are sort of three. We love to work with three because it's pillars. But I have for myself three anchors of what our reaction function is. Two, symmetric reaction function is. So first of all, to remind you, target is 2% medium term, number one. Number two, symmetry. We discussed that today, and we reaffirmed it. Number three, our reaction will depend on the type of deviation from target that we observe. Is it large and sustainable? In that case, obviously, we have calibrated in our strategy review and in those two speeches that I have committed in the last few days. In that case, we have a forceful or persistent reaction to return inflation to our target of 2% medium term. That's our reaction function. And the data and the process that we use in order to deliver on that reaction function is what you see, monetary policy statement after monetary policy statement, which is the inflation outlook with the risks associated to it. And as you will have seen in the MPS, we have a strong chapter on both risks to growth and risk to inflation. That's how we bring in the risk to growth, to your point. We also look at underlying inflation, and we look at the dynamics of monetary policy transmission. So the reaction function, the process and the tools that we use in order to apply that reaction function. And of course, we look at the specificity of what we are going through. And that's where you will find more details in both my speech to the watchers, you are one of them, I'm sure, and my speech in Berlin to the bankers. And I think I tried in that, in those two documents, particularly the latter, to really apply the reaction function and the tools to the circumstances through which we're going, in particular a supply shock, a strong supply shock, negative one, of course, and to see whether we are going to use one or the other approach in order to deliver on our target of 2% medium term. And one is see-through. Anyway, I don't need to repeat my Berlin speech. It's some of you have read it. The scenarios. Oh yeah, you asked me about the scenarios. So we constantly monitor. We constantly take in new data, hard data, soft data, survey results from all sorts of perspectives, and we verify, and we adjust, and we take stock of all that. In June, 6 weeks from now, you will be receiving not only the projections that our staff will produce, but you will also see the scenarios as revised and as updated as a result of the circumstances.
Turning now to the participants via video link, I'd like to give the floor to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. I have two questions on liquidity, which is key to the implementation of monetary policy, but also crucial for financial stability in times of crisis like we have now. So, President Lagarde, euro area central bank reserves have almost halved from the peak in 2022 to 2.6 trillion in early 2026. And in the last bank lending survey, we found out that the bank access to money market funding has deteriorated. So has the Governing Council been looking at the design of new liquidity tools, as you had a question before on your toolbox, new liquidity tools in the operational framework, for example, new structural longer-term credit operations or structural portfolio of securities? And my second question is for Vice President Luis de Guindos. At the end of your 8-year mandate and 8 years of multiple crises, what is your assessment of the resilience of the banking systems in terms of liquidity? And what about private credit players that do not have access to the ECB liquidity? Is all this enough? Thank you.
Well, thank you so much. We miss you here, but it's nice to see you. So I'll take the first question, and then I'll give the floor to the Vice President. We still have abundance of liquidity. You mentioned 2.6. I think it's a little down from that number, but it's a significant amount of excess liquidity in the system. So there is no shortage of liquidity. And as you know, we have a mechanism that works on the basis of access to liquidity. You know, it's a fixed interest rate, full allotment, good collaterals. It's working well, and we're not seeing any tension in that respect. Did we discuss new tools? The answer is no, because what we discussed, and it was on the agenda yesterday, we discussed the timetable and the methodology that will be adopted in-house by staff, as well as within the Eurosystem, bringing all the committees in the loop to calibrate our operational framework to make sure that it is fit for purpose and that it is good from a financial stability point of view, as well as from a proper functioning of the providing of liquidity, which is obviously one of the missions that we have. With that, I'll turn the floor over to you, my dear Luis.
Thank you very much, President. Good afternoon to everyone. Well, we have not doubts about the liquidity position and the capital position of the European banks. The European banks are resilient, and we do not believe that liquidity or capital is any sort of limitation for lending. And this is something that we have analyzed quite in detail. So I would say that we are confident that they have enough liquidity, that they have enough capital, and that they are meeting, the purpose of that we wanted to deliver. That is that banks meet the needs and the financial needs of families, households, and corporates. You referred to private credit. Well, we are going to dedicate a full chapter of our financial stability review to private credit. Is something that is catching the eye of markets because of some liquidity issues. Private credit is a totally different animal in comparison with the banks in terms of oversight, in terms of the way that they function. And we are going to analyze, interlinkages between private credit and other players, as insurance companies, as the banks, and with private equity. And I think that you will have, a full explanation of our approach and our assessment of the potential financial stability risks posed by the private credit in our financial stability review that is going to be published in 3 weeks.
Next question. Sorry. Next question goes to Olaf Storbeck of the Financial Times. Olaf, please.
Thanks for taking my questions. My first question is on a scenario that some economists discuss at the moment, which is basically a return to the 2011 scenario, where the ECB hiked relatively early on, then had to reverse after finding out that it basically pushed the economy further into stagnation. Is this a scenario which is on the top of the Governing Council's mind, and has it been discussed? What are your thoughts on that? And my second question is also to the Vice President on cross-border banking mergers in the euro area, which has been, I think, kind of a favorite topic of the ECB in recent years. We now have a situation where the German government is quite openly opposing a potential merger. Do you have any views on those kind of actions of the German government, or what, at least the position? Thanks.
Well, thank you for your first question. You know, we, around the table of the Governing Council and the staff of the ECB and the Eurosystem, is very attentive to our history. We don't have a long history, but we are paying attention to what has been done in the past. And you might argue that we, learning from history, will want to stay away from the risk of being too early, that's your reference to 2011, and the risk of being a little bit too late, and that's what some of you would characterize for 2022. I would like to debate that forever, of course, but that's where we are. And we are going to be very attentive to the data, very attentive to the inflation expectations, very attentive to the supply chain disruptions, very looking into the depth of the wage agreements and the collective agreements that will be negotiated in the near future, attentive to selling prices. I mean, there is a whole range of data that we will be paying attention to in the next few weeks, and there will be plenty of it coming in the next few weeks, to be certain that from the good position we are in, we make the right decision, because our determination is to bring inflation to 2% medium term. And that, you know, there is an ocean of uncertainty. Things might change for the good or for the bad. But one thing is certain, we are determined to return inflation to 2% medium term. My dear Vice President.
Thank you, President. If you look at our reply, the reply of the Eurosystem to the consultation process that was launched by the European Commission a couple of weeks ago, that we published a couple of weeks ago, you will realize that the main message that is embedded in that report is that we are in favor of a single jurisdiction for the European banks with free flow of capital and liquidity. And I think that, well, you know, referring to the deal that you have indicated, that you have alluded. Well, I think that you know, this principle applies very clearly.
Next question now goes to Jean-Philippe Lacour of Agence France-Presse, AFP. Jean-Philippe, please.
Thank you, Wolfgang. Bonjour, Madame la Présidente.
Bonjour.
I'm wondering why in the statement there is this sentence, the Governing Council will closely monitor the situation. We were speaking about history. I remember the Trichet times when he said we are looking very closely at the situation. It was a pre-signal for a soon rate step. So I'm wondering why the need to add this in the communique. What was the rationale behind this today? And on the other side, on my second question, there is a stagnation in the or quite a stagnation of the Eurozone economy. If the ECB were to raise its rate again, are you not in a dilemma then to change the situation from stagnation maybe to recession, because an aggressive rate hike could hamper the economy? So is it here the dilemma you have to solve? Thank you.
Well, thank you very much for your two questions. I think with all due respect to my predecessors, including my dear friend Jean-Claude, I try not to be exceedingly coded. So it's not because I add one adverb or one adjective here or there that is going to mean necessarily this or that. But, you know, on the basis of, number one, the hard data that we're getting, on the basis of the worsening of our risk assessment, you will have noted that the nice word tilted has been removed, and that we are not saying long-term versus short-term. We are looking throughout the period and consider that risk is to the downside for growth and to the upside for inflation. So on the basis of that, and in view of the uncertainty that we have around, we are bound to revisit the situation on the basis of the data, the projection, the sensitivity analysis, the updated scenarios, and then we will take a decision. I think directionally I know where we're heading, okay? But we shall see. There might be massive changes taking place. There's one element that is going to have a real impact, and that is the duration of the conflict. So I'm not suggesting that because the conflict stops tomorrow, there will be no negative supply shock and consequences. There will be, we know that, because of the infrastructure, because of the logistics, because of the time lag and all that. But it would certainly have a significant impact, in particular on the oil futures, for instance. So we are watching, okay? And we are watching out the development on the on our economy and the impact that this negative supply shock has on inflation and on the activity. We will be looking at both. I think I dealt with the stagflation because that's really something that I park in the 70s. And given the projection that we have for March, you know, 0.8% growth, followed by 1.2, followed by 1.3. I wouldn't call that stagnation, sorry. It's lower growth, granted, in 26, but we're not in stagnation, let alone recession. Now, you can imagine scenarios where we're heading towards those situations, but this is not what we are seeing for the moment. Thank you.
And now Andres Stumpf of L'Expansion. Andres, please.
Thank you. Madame Lagarde, with the risk of boring you again.
You never bore me.
I'll have to ask again of today's decision, because I don't really get if the decision is taken in, and we are just waiting to see whether we are in the bad scenario or in the worst scenario, and even the baseline one that is bad by itself contemplates or has embedded 2 interest rate hikes. I don't really get what could the ECB be waiting for.
You've been tracking the ECB news conference in Frankfurt, Germany, with Christine Lagarde, the ECB president, going through a range of issues right now in this economy. Downside risk to growth, upside risk to inflation, and clearly drifting away from the baseline. Open to a range of options, a discussion about potential rate hikes. We need to talk about 2 things here. On the one side, we need to talk about rate pricing. The pricing in the market already, which of course is always paramount. This market was priced pretty aggressively for rate hikes through this year for both the ECB and the Bank of England. Difficult to really meet those expectations at today's meeting. But in isolation, you've got central banks that are far more open to raising interest rates now, both across the Federal Reserve, the Bank of England, and at the European Central Bank, compared to where they were only several months ago. We're also getting some signs of intervention as well, which we need to talk about, over at the Bank of Japan. This headline crossing just moments ago that Japan, according to Nikkei, conducted a yen buying operation. You will have seen the headlines from the Finance Ministry overnight saying that we were close, threatening to make such a move. A final warning, if you will, to the FX market, pretty much in their own words. Confirmation from Nikkei just moments ago that Japan did conduct a yen buying operation.
This came after the yen reached its weakest point versus the dollar going back to late last year, and comes along mounting pressure of how they're going to support the economy given the dual pressures of both higher oil prices and inflation, but also potentially weaker growth.
If you're just tuning in, welcome to the programme. The opening bell is just seconds away. This is a special extended edition of Bloomberg Surveillance going into the cash open. Haven't done this for a while. This is nice. Equity futures firmer on the S&P 500 by 0.5%, on the Nasdaq higher by 0.7%. A little bounce on the Russell up by 1/10%. Encouraged by this move in crude. Brent and WTI backing away from wartime highs. 113 on Brent, 104 on WTI. And check out what this does to the bond market. Just helps to unlock this move in fixed income. Yields lower across the curve. 2's down by 6 basis points. 10's Bramo down by 5.
This comes after we saw the highest levels, particularly at the 30-year yield that we've seen in a long time at the 5% level. At what point does that act as a constraint? And this has been the conundrum. On one hand, you could say oil prices act as a constraint. On the other hand, we see the CapEx plans and we see better than expected U.S. economic data. And it points to the resilience in the underlying economy that can allow some of this inflation to persist. At what point does the Fed respond? We've seen the Fed get more hawkish as the ECB potentially backs away from some of the rate hikes priced in.
Let's talk about this economy. U.S. economic growth accelerating at the start of the year, fueled by solid business and consumer demand, insulating this economy from heightened geopolitical risk as the Fed remains very much on the sidelines. Joining us now to discuss is the National Economic Council Director, Kevin Hassett. Kevin, welcome back to the programme, sir. Always good to catch up. We'll talk about this economy in just a moment. I think we need to follow on from the Federal Reserve and the news conference with Chairman Powell just yesterday. Stepping aside as the Fed chair, but staying on as a governor. Kevin, was anyone in the administration given a heads up ahead of time before you heard that announcement?
You know, communications with the Federal Reserve and the administration are still open when there are policy concerns, but I can't really discuss that. I could say that I'm disappointed in what Jay said, but I'm going to sort of stay out of it as we await just a couple weeks Kevin Warsh's confirmation. I think when Kevin gets in there, it's going to really be a sea change at the Fed that we're all looking forward to.
Kevin, in the meantime, the president has articulated his disappointment like you just have. Previously, the president suggested that if the chairman stayed on beyond his time, not sure what he meant specifically by beyond his time, that he would fire him. Is the president intervening certain options to intervene?
You know, I think that in the end, our hope is that Chairman Powell understands that the Justice Department has stood down. They've just asked the Inspector General at the Fed to look into this, which is something the Inspector General is probably doing anyway. And so that I think that it's time to de-escalate and move on.
Kevin, do you think the president has sufficiently de-escalated to allow him to move on?
Well, he doesn't think so. And I think that in the end, he'll study the matter, and we hope he comes around.
The Treasury Secretary says it's an insult to the other Republican nominees on the board, the likes of Governor Waller, Mickey Bowman, people that you and I know fairly well. Do you believe it's also an insult, and does it complicate the way this particular institution will operate in the months and meetings to come?
Again, I don't want to start getting too much into having the White House argue with the Fed right now while we're waiting Kevin Warsh's confirmation, which looks like it's a lock to me. The bottom line is that Kevin Warsh is going to go in there. He's going to be new leadership. He's going to be fresh leadership. And we fully expect that that's going to help everybody see how important the independence of the Fed is. Now, as a logical matter, if you just sort of say, hey, we'd like the IG to look into something, the IG is the Federal Reserve's Inspector General. And so it's completely respectful of the independence of the Fed. We do respect the independence of the Fed. And I think that the best way to show that it's not a partisan organization is to move on.
There has been a pretty aggressive push to reduce interest rates. At the same time, this Federal Reserve is shifting towards articulating a more symmetrical reaction function. Not there yet, but getting closer to it, Kevin. Supporting that is the economic data from earlier on this morning. Do you think there is space just to wait, to see, to work out how things turn out before thinking about reducing interest rates?
Right. Well, first of all, let's talk about the economic data for a second, because it was just kind of a whole bunch of blockbuster numbers. The 2% number, actually, you know, for me, being capital spending guy, I used to be the capital spending guy at the Fed when I was a young economist, that the thing that was amazing, as you know, is, and you highlighted, the capital spending boom. And one of the things that sort of dragged it down from a really high number was that the quality of the imports has skyrocketed. And so almost half of the imports were capital goods, which were coming in to build factories in the U.S. Typically in the past, you know, our imports are things like consumer goods that are perishable. And so the bottom line is that it's really really strong data. We got initial claims the lowest they've been since the 1960s. We got government employment the lowest it's been since the Second World War. We've got all these positive movements in terms of fiscal responsibility and economic growth moving forward. And so then, but we do have this temporary disruption with energy markets, which is very serious. As you mentioned, the energy prices are high, gasoline prices are high. But, my read of the academic literature on what you do when you have an oil shock like this is not that you raise rates into it, especially given how I think we're highly confident that this is going to be a temporary disruption. Futures markets agree with that as well. And so I think it would be a policy error for, this ECB or the Fed to hike rates into a temporary spike in energy prices. And their own economic studies sort of suggest this is true, because if you look at it, what they want to do is make sure that future inflation goes back towards the target. The best forecast of future inflation is not top-line inflation, but core inflation. And core inflation in the last CPI number was fine. The PC's kind of crept up a little bit, but it doesn't tell the story of the top line. And the top line is the kind of thing that I think someone could overreact to.
It might not be appropriate, Kevin, to have a rate hike at this point, but do you agree with your colleague, Treasury Secretary Scott Bessent, who came out and said it might be appropriate to stay on hold for a while as this does progress and works itself out?
Again, I am highly confident that the productivity boom is going to keep core prices under control. And my old friend Alan Greenspan in the 90s saw that because of the computer revolution that we could have high growth and there wasn't a Phillips curve kind of thing that you needed to respond to, as he let us have 4 or 5 of the best economic years that we've seen in my lifetime. And I think that we have that opportunity again, and it would be a shame if we squandered it.
So you think that it is appropriate to currently cut rates, despite the increasing concern by some of the Fed members that we are entering a potentially inflationary moment? Do you think it's inappropriate to go to something more of a symmetric type of approach?
Well, they've been sort of saying we're leaning towards cutting, and then there was some dispute about what's going to happen at the next meeting. But I think that getting interest rates down could really supercharge the economy from where we are, but not be super inflationary. So you saw that the weak spot in the GDP report was residential investment, which was down 8%. Residential investment is kind of the most interest-sensitive thing there is, and I think that Fed policy has a chance of moving the yield curve in a way that could really help home buyers. And one of the things that I remember from the 90s is that when we want to have sort of low inflation, high growth, then one of the things that happens is you get a lot of construction, residential construction. And when you have residential construction, it has a big positive effect on GDP because you have like an empty house that has to get filled with a washer, dryer, and a TV, and carpet, and furniture, and everything else. And that's much different than if you have like an old house where you're moving from one old house to another. And so new construction is really the thing that could lift this to 4 or 5% growth, and it's being held back by high interest rates.
What's the pathway to get there, given the fact that the longer-term yield curve is seeing some of the highest rates that it has this cycle, 5% in the 30-year yesterday for the first time in a while. And frankly, a lot of people in the market think that if the interest rate were cut at the front end, that would only exacerbate the creep higher in yields at the long end. How do you see that?
Yeah, I mean, there are times when that's true, but not at a time when we're in the middle of a huge positive supply shock. And so I think a little bit of movement, and Kevin Warsh, hopefully soon to be Chairman Warsh, has described how one can do that and maybe play with the balance sheet a little bit at the same time and move things in a direction that helps America's homeowners. And I think that if we could get that last little bit of the economy going on all cylinders, then we'd really be back very close to talking about the golden days.
Kevin, we have triple-digit crude this morning, WTI, much higher. And actually what you're seeing across America, especially in a place like California, they've actually breached $6 a gallon when it comes to gasoline. I know the White House has some measures. They've extended the Jones Act waiver. But what else are you thinking about?
Well, we've already done a whole bunch of things, including, basically opening up the drilling that was offshore drilling in California that was shut down by the state, and that's actually alive and pumping out barrels. The bottom line is that we're very convinced that this is, a suicidal Iranian regime that was set on really big disruptive things in the region that would be perhaps permanently harmful. And that when we had, them signal in their negotiations that they were just about ready to have 11 nuclear bombs, then the president decided to take action to defend the entire Earth, for goodness sake. And so right now, the thing that I look at as in terms of the economic effects of the war is how difficult it is for Iranians right now. As if the government doesn't care about them at all. And so they're having a hyperinflation, they're running out of food, they don't have any distilled product to drive around in their cars, they're shutting down businesses, even the Persian rug dealers are shutting down. It's time for that government to just see that they shouldn't aspire to have a nuclear weapon, and if they just give that up, then we can go back to having normal relations, one could hope.
Right, but what could this government do to shield Americans from higher gasoline prices? Are things like an export ban on the table?
No, what we've done is we've, as you know, we've done the Jones Act. We've opened up drilling in California. We've, pursued changing the ethanol standards so that the corn ethanol can be used more in the summer. We've taken every single step that we can, and we understand that it would have been a lot worse if we hadn't done that. But the fact is that our expectation is that things are going to get better very, very quickly if we could just get the Iranians to finish the negotiations and realize that it's in the interest of their own people to stop things that could turn into serious hunger events and so on.
Kevin, unfortunately, and you and I are probably in agreement here, unfortunately they've got a track record of doing a lot of things that aren't in the interest of their own people. In the meantime, there seems to be a preference to maintain the blockade and put the squeeze on them. How close are we to them breaching storage capacity, so to speak? What's our understanding of that? Do we have a decent gauge of where things are at inside the country?
It's a well-to-well thing. But the basic idea is that if you shut down a well, then the pressure can build, and then the oil can kind of squirt everywhere, and then when you open the well up again, you get a lot less oil out of the well. That's the sort of theory of what could happen. And it's certainly possible, because they're running out of storage, that they're going to have to shut in wells. The one thing I can say is that their production went from 5 million barrels a day to 1 million barrels a day because of President Trump's policies in the previous term, when he really put in tough sanctions on Iran to try to stop the nuclear program. And after Joe Biden came in, he just stopped the sanctions, and the energy production went back up to 5 million barrels a day over a couple of years. And so the Iranians, it took them a couple of years to get things fixed, probably with new wells and so on, because it can harm wells. But we have an experience of them being shut almost down to nothing and then getting back up.
Kevin, are partners stepping up to help? We're just hearing from the president here out on social media, so I'm sure this is the first time you're hearing of it. I'll read it for you. The Chancellor of Germany should spend more time on ending the war with Russia and Ukraine and fixing its broken country, especially immigration and energy, and less time on interfering with those that are getting rid of the Iranian nuclear threat, thereby making the world, including Germany, a safer place. I believe the German Chancellor earlier this week suggested that the president was being humiliated by the Iranians. Just what is the relationship like, Kevin, with our European partners at the moment?
I think that the European partners are feeling stress because their very unwise energy policies have exposed them much more to energy shocks from the Middle East. And it looks like the German Chancellor is losing his cool a little bit. And I would suggest that you take a deep breath and recognize that the best way for Europe to get its economy back on track is to, help us resolve this problem, and then also examine their own policies, which are so anti-free market that their economies are, happy when they get 1% growth. I think Germany's a great country. I lived there for a time, and I think there's a heck of a lot of potential for that country, but they sure aren't achieving it right now, and it's not just because of oil.
Kevin Hassett, we appreciate your time, sir. Thanks for making time for us this morning. Thank you very much, as always. The NEC Director, Kevin Hassett, there on the economy and the situation with the Federal Reserve. Just a note on the Federal Reserve. Resisting the temptation to turn up the heat and have a back and forth with the chairman of the Federal Reserve, Jay Powell. They clearly want to open the door for him to head to the exit.
They also want confirmation, a clean confirmation of Kevin Warsh to get him in before anything else. So right now, the White House is putting a clamp down on any kind of heating tit for tat between them and Jerome Powell, hoping that it will resolve itself in the intermediary. Really interesting, though. That is the time frame. They want the confirmation first, and then maybe the gloves come off.
Interesting note to finish the conversation on the difference between Europe and the United States right now. Of course, they feel the squeeze over in Europe. Of course, they're stressed. They have GDP running close to zero, and it could be zero if this continues. You can see the stress and the tension in the ECB news conference over the last 60 minutes or so. There is a capex boom driving this equity market and insulating this economy stateside that others just don't have. Europe just doesn't have.
Well, if you think about Europe versus the U.S., and this is a reason why you're seeing better economic performance and surprises in the U.S. than Europe, not only does it have the capex boom of technology, it's also an oil producer and actually almost a net oil exporter for the first time. Well, Europe has neither, right? It doesn't have the tech boom and it doesn't have the energy reserves in its own place. So how do you then get yourself above this? This is what we heard Christine Lagarde dealing with, and this is the reason why you're seeing the economic data diverge.
Europe is struggling, which is why the president also wants Europe to step up to join them when it comes to trying to reopen the Strait of Hormuz. The Wall Street Journal overnight was talking about how a diplomatic cable was sent from the State Department to embassies telling their officials to press these foreign governments to help them in a maritime freedom construct to try to reopen up the Strait of Hormuz. But to Lisa's point, we are a net energy exporter. We will feel some of it, but we're much more insulated. Europe is not.
Fun morning. I'm not suggesting we do this every morning, but fun morning, right?
Oh, I think it was great. I mean, honestly, it's been such an active, interesting week. I could just stay here the rest of the day.
One more day to go, Bramo. One more day. Keep it together, OK?
Oh, I am. I'm doing great.
Coming up tomorrow, Ajay Rajajaksha of Barclays, Tom Forday of Maxim Group, Victoria Fernandez of Crossmark, and the NASA administrator, Jared Isaacman. Looking forward to that conversation from New York City. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East Fierce tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Hello from Bloomberg House. This is a special edition of Open Interest. I'm Danny Berger. We are in the heart of the Miami Design District as Formula One takes over the city. Matt Miller, he's close by, but currently preparing to kick off the day of high-profile interviews that will include the CEO of the Audi Revolut F1 team, and I'll also be sitting down with Thoma Bravo managing partner Orlando Bravo, and in just minutes from now, Scott Rubner from Citadel Securities. But first, let's check on stocks after a day of heavy news flow, including the mega earnings session. Meta and Alphabet are each adding $10 billion to their AI spend. Amazon and Microsoft are seeing major growth in cloud sales. Mag 7 AI CapEx in 2026 is on pace to top $700 billion. Only Alphabet, though, gaining. Meta down as much as 9%. At one point was down 10% at the open. Let's also look across assets, though, because oil has touched its wartime high. Iran's supreme leader vowed to dismantle the U.S. presence in the Strait of Hormuz and guard its nuclear capabilities like its border. Also reports coming from Axios that Trump is maybe considering other military actions. And add on top of all of that, a Fed rate decision yesterday where you did have some dissent towards the hawkish direction. But still, it's a market dominated by the Mag 7 earnings late yesterday. Joining me here to discuss that and much more, I'm pleased to say it's Citadel Securities Head of Equity and Equity Derivatives Strategy, Scott Rubner. Scott, thank you so much for joining.
Good morning.
Lovely to be in your town, beautiful, sunny Miami.
Thank you.
So, okay, first of all, I know you called this the Super Bowl of earnings week, and that it was. I feel like it was like a giant middle finger to traders for all of these companies' earnings coming from these companies that are uplifting CapEx and kind of the entire economy of the United States.
Yeah, so we are not seeing any decline in spend and demand for AI. As we mentioned, it was the Super Bowl of earnings last night. By the end of the week, 66% of the market cap of S&P will have reported Q1 earnings. And from us, it's a very positive sign on the tech industry. And the way that you invest in the U.S. equity market is one of high quality, high demand, high free cash flow, and it's unlike any world in the globe.
So if these are so attractive, why do we see swings like Meta down 9.5% on the day after it reports?
Yeah, so I would say that if I look at the run up into earnings and I take the semiconductor index, it rallied 19% over 19 days. And I think we're not seeing any real pullback in these names, despite the move in Meta. But I would just say when I look at equity futures today hitting a new all-time high, there's a big shift from what was a technical driver in March to one that is a fundamental driver in April.
How do you distinguish that? Because I could, for example, look at that OpenAI news on the Wall Street Journal that perhaps are not hitting their internal targets, and you get tech that sells off. And it wasn't just tech, it was like a momentum basket does really poorly. So on days like that when it's selling, how much of that is fundamentals in the driver's seat and how much of that is just taking some of the air out of the momentum trade?
I think the article happened to hit at an all-time high point in the momentum factor. I think that baskets are trading in the market more than ever before. So it was orderly to me. It was a buying opportunity. It was one that was factor driven, but it didn't change any views on the fundamental side.
Is it fair to say, though, that a lot of these pullbacks are just buying opportunities, especially for these quality big cap tech companies?
From our retail clients, we're really seeing that dynamic. So if I look at on Monday, we had our retail demand in the 94th percentile over the last 5 years. So I think when there is a sell-off, right now, it's a buying opportunity, especially in the U.S. mega cap tech stocks.
Has that been the case through this volatility, through the war in Iran? Are we seeing retail still buying the dip?
So I think that's a great question. Where you had retail really playing defense around tax day. April 15th was a big day where they were playing more defense and less offense. We've seen this completely change. So retail had a very good trading year in 2025. We execute between 35 and 40% of all retail flow, so we see this with data-driven insights. But now retail moved back into the driver's seat after especially One Big Beautiful Bill Act and tax refund checks hitting the accounts. I think we're seeing a return from retail. It's no longer meme stock trading, but it's one that is, they're driving the price action.
What does that mean for supply demand? And you're always really brilliant here, because if you have retail buybacks coming back, hedge funds still participating, is there a real imbalance that could push stocks higher?
There's a supply and demand mismatch right now, Danny. So when I look at corporate earnings, given that you mentioned it, so next week starts the start of the buyback window for corporates. If I look at U.S. corporates, they authorized $544 billion year to date, over $1 trillion worth of repurchases this year. It'll be the largest year on record. So stock certificates are now a rare commodity again. And, by my calculation, I see about $5 billion worth of corporate demand every day during the open window, which negates some sort of the selling pressure. So U.S. corporates, again, are the biggest buyer of the stock market, and U.S. corporate CEOs are showing strength in their views on the market.
If I just took everything you just said, it's very easy to be incredibly bullish on this market, and it's indeed not just easy, but logical. But then another part of my brain, Scott, goes to oil trading at 4-year highs, yields moving higher, 30-year yields surpassing 5%, and at the same time, the VIX is 18. It does feel like a bit of a disconnect. Is that fair? Is there some irrational exuberance in markets that other macro cross assets aren't really reflecting as well?
Yeah, so the way that I view both cross asset volatility and oil prices, you mentioned the 30-year bond hitting 5%. So there's a lot of reasons to run this wall of worry, especially on the software side and private credit. But when I look at the participation of who is trading the equity market, it's almost a macroeconomic indicator. When I think about the bottom 50 percentile of wealth demographics, we've seen equity exposure ramp by 300% since 2022. So it's almost a resilient consumer, one that grew up on the trading apps, trading all of the exchanges and after hours type of volumes, that to me is, as long as there's no displacements from AI in the jobs world, it's something that we're really bullish on.
Can I tell you why I love that? Because we look at a lot of things like University of Michigan, and sentiment looks really poor.
Yep.
So I feel like this is a better way to kind of gauge, because it's a consumer that keeps spending and clearly continues to buy stocks too.
We actually have our own sentiment indicator that we started publishing. Citadel Securities executes between around 24% of the U.S. exchange on a daily basis. And what I find with our indicators is we're actually real-time back testing this on data. And our indicators are a lot more euphoric than what the sentiment indicators that we've seen.
Did they take any hit with higher oil prices and the war in Iran?
I would say that it was a quick mechanical-led sell-off in March. It was very robotic on degrossing portfolios among institutional investors, but our retail clients were actually, slowly entering into the market, and, we've rallied pretty aggressively since then.
By the way, since degrossing, have institutions regrossed up? Where do they stand in exposure?
Yeah, that's a good question. So hedge funds, gross exposure, which is basically longs plus shorts, if I look at back to March, was at an all-time.
Guys, natural gas almost पहुंच गया as expected. एक inverted head and shoulder जैसा लग रहा था, बिल्कुल वही बना. Expected था थोड़ा नीचे आएगा, फिर ऊपर जाएगा. ये first resistance है, pivot के ऊपर निकला है 256. I think 256 is the first resistance. यहाँ पर भी expected रहेगा, थोड़ा बहुत ये rejection ले और फिर ऊपर जाए, और अगर गिरना है तो फिर कुछ इस तरह का formation. Otherwise same scenario रहेगा. अगर direct breakout होता है तो फिर कुछ इस तरह के फॉर्मेशन में जाना चाहिए. अगर थोड़ा सा भी रिजेक्शन ले लिया यहाँ से तो फिर ज़्यादा एक्सपेक्टेड नहीं रहेगा कि और ऊपर की ओर जाए. यूएस मार्केट है 256 तक एक्सपेक्ट करते हैं, नेचुरल गैस को वहाँ तक जाना चाहिए. क्रूड भी थोड़ा सेलिंग के बाद अटक गया ऑलमोस्ट। $98 100 स्टिल इंटैक्ट। गोल्ड को देखोगे आज पॉजिटिव है, सिल्वर ही पॉजिटिव है, 72 वापस रिगेन कर दिया गोल्ड, वापस 4500 के ऊपर, करंटली 4600। लेट्स सी कितना और सेलिंग कंटिन्यू करता है या फिर क्या। कैंडल मॉर्निंग पे हल्का सा गैप डाउन जरूर हुई थी, रिकवरी अच्छी आ गई है गोल्ड स्पॉट। बट मुझे कुछ बहुत ज़्यादा बुलिश नहीं लग रहा है गोल्ड, ठीक है, अनटिल अनलेस प्राइस वापस सस्टेन नहीं करता है 4700 के ऊपर। आई एम नॉट इंटरेस्टेड इन बाइंग। मुझे लग रहा है शायद यहाँ से हो सकता है अगर कोई न्यूज़ वगैरह नहीं आती है तो प्राइस वापस सेलिंग प्रेशर शो कर सकता है कंटिन्यूएशन में। के लिए आप कह सकते हो इट इज़ ऑन अ सेलिंग प्रेशर राइट नाउ। लेट्स सी 4700 के जब तक नीचे है, नो बाइंग जोन। 4700 के ऊपर सस्टेन करेगा तब एक बाइंग जोन बन सकता है। कि और ऊपर भी गया तो देयर इज अ मेजर रेजिस्टेंस अराउंड 4900। 5150, those are the major resistance for short term price। फोरकास्ट देखोगे तो लास्ट टाइम से थोड़ा ज़्यादा लास्ट टाइम से कम एक्सपेक्टेड है। फोरकास्ट के अकॉर्डिंग डेटा आया तो इट इज़ बुलिश और नेचुरल गैस प्राइस। और मुझे लगता है ये मूव करेगा, नेचुरल गैस ज़्यादा इन्वेंट्री का वेट करना चाहिए। ओके गाइस, इन्वेंट्री नेचुरल गैस की आ गई है, बुलिस है इन्वेंट्री। कैंडल को देख के लग रहा है ओपन इक्वल टू लो बनी है। इन्वेंट्री इज बुलिस फॉर नेचुरल गैस प्राइस। लास्ट डेटा था अब, और आज कोई डेटा नहीं है, अब सीधा कल देखेंगे कुछ अगर डेटा आता है तो। इन्वेंट्रीज बुलिस, जितना फोरकास्ट था उससे कम एक्सपेक्टेड था, कम ही आई है, सो प्राइस के लिए बुलिस है। लेकिन टारगेट मुझे लग रहा है शायद जाना चाहिए इसको अब 260 तक, वही एक सेकेंड रेजिस्टेंस जोन है। ठीक है, यहाँ पर एज एक्सपेक्टेड बुलिस फॉर नेचुरल गैस प्राइस। क्रूड ऑयल तो ऑलमोस्ट साइडवेज ही लग रहा है मुझे। गोल्ड भी रेजिस्टेंस ले रहा है थोड़ा बहुत, देखते हैं 4640 के ऊपर भी जाता है या फिर नहीं। बाकी अगर इसके ऊपर गया तो एक बार 4930 के आसपास भी जा सकता है, बट बाइंग के लिए मैं कहूँगा वेट ही करना। प्राइस अगर 4670 के ऊपर, कहीं 675 के ऊपर तभी जाएगा, अदरवाइज तो रिजेक्शन जोन ही है। कि अगर नीचे भी ब्रेक डाउन करना है तो 4480 सपोर्ट है स्ट्रॉन्ग। 4480 के नीचे ब्रेक डाउन अगर सक्सेसफुली होता है डेली टाइम फ्रेम पे, तब एक पॉसिबिलिटी और डाउन जाने की बनेगी, तो एक रेंज जैसी लग रही है फिलहाल। ठीक है, इन्वेंट्री बुलिश जरूर आई थी, ओपन इक्वल टू लो भी बनाए, देखना पड़ेगा ब्रेकआउट सक्सेसफुल होता है, डायरेक्टली तो नहीं जाएगा, ऊपर भी जाना, क्योंकि यहाँ से जो रिजेक्शन मिला इट इज़ क्लियर साइन कि यहाँ पर थोड़े बहुत सेलर्स अभी भी पेंडिंग है, तो ऐसा ना हो फेक ब्रेकआउट हो। गोल्ड के चार्ट को साथ देख के लग रहा है अगर नीचे ब्रेकडाउन सक्सेसफुली होता है तो हम वापस 3650 660 तक भी जा सकते हैं शॉर्ट टर्म में। बाकी अपसाइड की बात करें तो 4670 एंड देन 4970। स्विंग के ऊपर मुझे लग रहा है एसएल काफ़ी पड़े होंगे। मुझे लग रहा है मार्केट शायद एक बार लिक्विडिटी लेने यहाँ तक जा सकता है। फिर देखते हैं लाइक 260 262 के आसपास मोस्ट लिक्विडिटी जोन्स वहीं पर होंगे। मोस्ट एसएल्स आर देयर। Republican passes a 215-211 party line budget framework that could allocate around 70 billion for ICE and border patrol. Wow, major news. Kremlin spokesman Peskov says Russia will declare a ceasefire on Victory Day, regardless of Ukraine decision to support it. Only for one day. Expected है natural gas के price upside ही जाना चाहिए.
That day, and Mark Gurman's done an amazing job in reporting this to us. Apple's going to introduce the new Siri, where at least on the Siri, they're going to be using Gemini models at the bottom of it to drive that technology. But it will also allow us as users to basically tap into any of the AI apps that we have downloaded on our phone, and most likely we have a premium package around it. So that integration is extremely important. Paul, one of the things I have been doing a lot while driving is to actually just start Gemini or ChatGPT to discuss anything that I'm doing at that point. Either it's history or travel plans or anything, and the results are absolutely remarkable.
Interesting. You guys have interesting conversations when you're in the car. I'm not interacting with AI in the car, but that's just me. Anurag, very quickly here, when it comes to Apple and spending on Siri, has it already spent what it needs to, or is there going to be a ramp up in spending there?
No, we don't think any ramp up in spending. This is just part of their normal R&D. This is what's really shining bright about Apple. Their capex as a percentage of sale is about 3 to 4%, whereas in Microsoft, we are touching 40 to 45% at this point.
That's a massive difference.
Are we going to hear from the new CEO today?
I actually don't know that. I doubt it, but you know, I have no way of knowing that, frankly.
All right. If I were the board, I mean, like, we made the announcement. Let's go.
Well, he doesn't take the reins until September 1st.
September 1st, yeah.
Yep, that's the point.
I mean, and right now he's a hardware guy, and they do have some hardware releases that are coming up. This foldable phone, I don't know what you think of that. Don't do that when you're in the car, by the way.
No. I'm doing the hands-free. I want to see, I'll go check out, I'm sure we've got on the Bloomberg terminal, what the dude's new compensation package is.
Oh, yeah.
I mean, you got to start that dude on the path to some serious
I'm sure he's covered well.
So I'm sure that's out there in an 8K. We'll go check that out. Anurag Rana, thanks so much. We appreciate it. Anurag Rana, technology analyst at Bloomberg Intelligence. He and Mandeep Singh, they kind of lead our global tech effort, and we are all the better for it. That's for sure. S&P, actually just look at Apple. Apple's up 0.3% today, pre-market, kind of before this. But the stock year to date for Apple's absolutely flat. Over the trailing 12 months, it is up 27%. So it's had some good performance over the last year, and it gives it that market cap, which I just love, $4 trillion.
Ho-hum. I mean, it's actually more expensive than it's been over the last 10 years. The forward earnings is about 30 times.
Yep.
So S&P 30 versus a 10-year average of 23. Oh. Because the growth has been slower than the rest of big tech.
Yep. All right. Interesting. We'll keep an eye on Apple after the close. Carol and Tim Stenavik, they'll bring that to you. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney back in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube. We got some video up for those of you on YouTube. The King and Queen of England, they are back in Washington, D.C. They're at the White House. They're now standing with the President and the First Lady. And I think they've got a little bit of a schedule, some of events in Virginia before they head back to
This is the official farewell. So they're going to take care of that, say goodbye to the president and the first lady, their hosts. And they're going to move on to the diplomatic reception room. That's where they're headed to do just that. And then afterwards, they're going to head over to Virginia, the town of Front Royal, which,
sure that is.
like America, was founded a quarter millennium ago. So the royal couple, the king and the queen, will help the residents of that town. There's about 16,000 people who live there, celebrate their anniversary.
All right, very good. I mean, I would think by all intents and purposes, this has been a very successful trip for the royal couple. What I understand was, very well received speech at Congress, and then the state dinner as well.
The state dinner delighted the president, and I almost called him Prince Charles because I'm a child of the 80s. But, clearly he charmed the president and, kind of smoothed the waters maybe between the U.S. and the U.K. going forward.
I don't know. I've always been, and I think I'll always be, a fan of the royal family. I love the whole monarchy thing. So I know
Did you
some
watch The
people
Crown?
don't. I did. Awesome.
And a fan?
Awesome. Big time fan. But I know some people aren't. But anyway, I kind of dig on
I think
the
the
royal
early
family.
seasons were better than the latter seasons.
True with most shows, probably. You get a little tired there. Speaking of London, let's head over to London. Sam Fazeli, Director of Research for Global Industries, Senior Pharma Analyst. I have no idea where he is. He could be London, could be anywhere in the world. That's how this guy rolls. But he covers all the pharma for Bloomberg Intelligence. Sam, I assume you and your team have been kind of busy here. We've got some earnings coming out of the pharma companies here. Eli Lilly raising its annual sales and profit forecast to high demand for obesity medications. Boy, that's just like perfect for this market, and the stock's up 9% today. What did you hear from Lilly?
Yeah, so Paul, I mean, the interesting thing here is that there's been quite a lot of skepticism, particularly everybody was so focused on this oral drug, the pill that they've got launched in the US.
Yep.
So focused on that and tracking the weekly prescriptions that they forgot actually there's an enormous juggernaut of a business behind it. And what's driven this $2 billion increase from 80 to 82 on the low side of the guidance for 2026 in sales is ex-US sales. So that's actually quite good because a lot of people always just keep thinking that everything is all US based and everything's going to be driven by US. But of course here we've got that increase and that's what's driving it. High quality beat, 9%, 9.1% up this minute.
All right, so good news for those who are investors in Eli Lilly. That's a massive move, 9% up for the company.
Yeah. It had been suffering, Scarlett, because of the issues of people worrying about that pill.
So maybe a little bit of catch up there as well. Merck also reported results and it beat its sales estimates. Demand for newer drugs. Remind me, does Merck have a weight loss drug on the market or is it developing any weight loss drug?
They are developing. They're developing one, yes. I think everybody is they've got one that they've licensed. Pretty much everybody's got their finger in that pie. I can't say absolutely everybody. Most people have got their finger in the pie trying to get something on the market, and Roche, AstraZeneca, and time will tell whether they can compete in this. Clearly, these guys are sewing up the market between themselves and Novo Nordisk. So Merck's results were a little bit more, I would say, meh. And as of share price suggested, 0.6% up. There was a beat, but then, of course, much of that was driven by inventory build, which is not something that the market gets too excited by because it's one-off. And then, of course, one of the reasons I think they've been able to guide to a higher EPS is because they're going to have lower charges associated with an M&A deal they've done, and that's not really, that's not a high-quality beat. So business steady as she goes.
Merck, based in Rahway, New Jersey, Station Stop Rahway. There you go. That's how I know Rahway. Station Stop Rahway. Like, I never get off. That's where Merck is.
Jersey is big pharma land. Let's face it.
It is Jersey. You could just have that's the entire state practically. Merck. So, Sam, for these oral obesity drugs, to what degree do you think that's going to expand the market?
Yeah. So, I think look at analyst expectations. Folks are looking for $1.5 billion from a Lilly's pill this year.
Wow.
And it's only been on the market for a couple of weeks, 2 or 3 weeks, right? So, and that might be a tough number to get to, especially listening to what the management were saying a little bit about the fact that they need to activate a whole bunch of patients, etc. And there is a question that comes to mind. We know that the Wegovy pill, although it's a bit more of a cumbersome thing, you have to take it half an hour before eating breakfast, etc. It gives you a better weight loss in terms of the average weight loss, say 14% versus 12. Let's say that's about the delta between them. And so what are you going to do? Are you going to worry so much about your pre-breakfast? I mean, nobody gets up and eats straight away, right? So they're going to take their jab, potentially shower, get ready, etc. So maybe it's a bit more likely that people will continue on that, and that Lilly will have a tough time gaining momentum with its oral pill, which is an oral pill, literally an oral pill. You just pop it, nothing to do with fasting or anything. And then, of course, you go to 2030, you get to $20 billion. So, look, they have the better obesity injection today in terms of efficacy. Novo has the better pill in terms of efficacy. So it's just going to be, both of them are going to be fighting for that market share. And Novo's kind of corrected quite a lot, right?
All right, Sam. Good stuff as always. Sam bringing it. Sam Fazeli covers all the pharma for Bloomberg Intelligence in London. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concerned about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
This is Bloomberg Intelligence from the Bloomberg Interactive Broker Studio. You are watching live pictures right now of the president and King Charles shaking hands as the royal couple get ready to depart the White House. This was the official goodbye ceremony. They held it in the diplomatic reception room, and it's the end of the 4-day trip that the King and the Queen of the UK have made to the United States.
Spent some time in Washington, D.C., then yesterday spent some time in New York. I think most notably for many New Yorkers that the King and Queen went to Ground Zero Memorial at the 9/11 Memorial downtown, which is just a spectacular memorial. And it's a great, memorial to the folks of 9/11, and they had a ceremony there, which is nice.
And they're going to head over to Arlington Cemetery as well to lay a wreath. But first, they're going to stop by the town of Front Royal in Virginia, which, like the country itself, the United States, was founded a quarter millennium ago, so 250 years ago. So the royal couple will help the residents of that town celebrate their anniversary as they wrap up their 4-day trip to the United States. Of course, the goal of is to celebrate 250 years of U.S. independence, but also, on the backside, maybe smooth over relations that have been ruffled with the United States between the UK and the U.S.
Yeah, and there's a lot of Civil War and Revolutionary War history in that Virginia area.
Yeah,
it's
definitely.
Great stuff.
Maybe they'll go to Colonial Williamsburg. Who knows?
Ah, yes. All right, very good. I think, let's say that. We're going to go down to...
Oh, okay. Let's give you a taste of what's to come in this
good.
hour, because there's a lot going on today. There's a lot of earnings that we have to go through. There's big Apple results. There's a lot of central banks meeting. Christopher Cialino is our senior U.S. machinery analyst. He's going to talk to us about Caterpillar, which is boosting the Dow Industrials average by more than 1%.
Yep.
So big mover there. We're also going to check in with David Havens. He is our senior credit analyst on Blue Owl. Blue Owl has become kind of the poster child for private credit concerns. So we're going to talk a little bit about what's going on at that alternative investment firm. Andrew Graham, managing partner at Jackson Square Capital, will join us to give us his take on the public markets. And we're going to talk to Danielle DiMartino Booth. She's CEO and chief strategist at QI Research. You know her from her time at the Dallas Fed, to give us a recap of what we learned from Jay Powell and the Federal Reserve yesterday, and also to talk a little bit about the GDP data that we got this morning as well. A lot of data
in studio
on the U.S. economy. And Danielle, always a pleasure to have her in studio. First, though, let's go over and get our Bloomberg Business Flash, and we're going to check in right now with Amy Morris in Washington.
All right, thank you, Scarlett. Stocks rebounding on signs of economic resilience and solid corporate earnings. Oil retreated from their 4-year high. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.4%. NASDAQ little changed on the upside. The Dow up 1.1%. The 10-year Treasury yield at 4.38%. The 2-year yield at 3.88%. WTI now closing in on $107 a barrel, and Brent crude has now topped $114 a barrel. I heard you just previewing your interview about Caterpillar coming up. Caterpillar has advanced now 8.5% since the open. It has hit an intraday record high. Economists at Morgan Stanley scrapping their forecast for Fed rate cuts this year after yesterday's hold. The team now says it expects 2 cuts, but those won't be coming until next year. Morgan Stanley chief U.S. equity strategist Mike Wilson says stocks can keep powering through with the rates where they are.
The market is doing a very good job of trying to digest all of these, different variables. But at the end of the day, as we focus on earnings, as always, probably the most important variable, assuming that, the interest rate environment is stable. And I think that's where we are.
Hear our full conversation with Morgan Stanley's Mike Wilson on the Bloomberg Talks podcast. Economic growth in the U.S. accelerated at the start of the year, fueled by solid business and consumer demand. The economy grew at a 2% pace from January to March, recovering from the government shutdown, but the outlook is clouded by the Iran war. And Apple will report quarterly earnings after the close. Investors looking for clues to incoming CEO John Ternus's strategic plans. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Green on the screen, as Amy just reported. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
Everyone's talking about Magnificent Seven. Let's look at Meta, which is seeing a pretty negative reactions after the report. Shares plunged about 10%. Year to date, the drop is pretty bad as well. It's more than 8%. Ticker, of course, is Meta. The company raised its spending outlook yet again. The number everyone is looking at is their full-year capital expenditure, which now they expect to be between 125 billion to 145 billion. This is for the whole year. I'm looking at the chart of how this has changed over time, and it's really a drastic change. Just in 2024, it was less than 40 billion. Now we're talking more than 150 billion. You can see the reaction from investors is obviously not so positive. Zuckerberg has said that his company will spend hundreds of billions of dollars on AI. Now we see memory chip shortage is triggering surging prices. Investors are getting worried. We saw similar thing from Amazon. We saw similar thing from Alphabet, but much more positive reaction. It seems like Meta has been on this strike where they increase capital expenditure. Investors sometimes are excited, but then they get worried that maybe they're behind on AI. And this is what's happening today.
I lost count of how many times you said the word billions because the numbers are so large. Let's talk about Ford.
Ford is also having a pretty rough day. They actually had a strong earnings report. The ticker, of course, is F. But Ford warned of pressure from an unexpected rise in commodity costs. We've seen a similar warning from General Motors. So clearly, this is affecting the whole industry, spooking investors. Despite the relatively strong report, shares fell as much as 6%. Now some of those losses are being recouped, but nevertheless, a negative reaction to the report. The good number was the company now expects to earn as much as 10.5 billion before interest. This is higher than their previous forecast. Ford refrained from raising their full-year profit outlook. They said that the Iran war pushed up an energy and commodity price. So that's the big problem. There were some bright spots. They said their SUVs like Explorer and Expeditions are particularly strong. They're doing well. But in the end, we're all relying on commodity prices, even as some of the models are doing quite well.
All right, let's go. Eli Lilly, LLY is a ticker.
Yeah, weight loss drugs are doing great. Eli Lilly surprised Wall Street by raising its annual sales and profit forecast. There is obviously this rapid competition between Eli Lilly and Novo Nordisk, but now it seems like their fortunes are diverging a little bit. So what we're seeing from Eli Lilly, the stock is up 9%. This comes after demand for obesity medication soared and thousands of patients started taking its new weight loss pills. Of course, prices have been falling down, so there was a lot of tension whether this company will continue to soar to new highs. It's been under a lot of pressure since November. It slid 23%.
Right.
But now there is some new optimism. Yeah, interesting space to watch.
All right, good stuff. Thank you so much, Denitsa Sokovo, our cross-asset reporter with our market movers. And Paul, I don't know if you've heard of this. There's something called Ozempic breath.
Yes, I had not heard of that.
Okay, well, apparently it is spelling opportunity for a company like Hershey's, because what they've said is that GLP-1 drugs are helping to boost sales of mints and gum, including its icebreakers. Retail sales of the icebreakers line grew 8% last quarter.
No kidding.
Yeah, I guess people want to snack,
effect.
right? But they don't want to necessarily eat something, like potato chips. So they're opting for mint or gum. And also Ozempic breath is basically burping because sometimes it's part of the side effects you get, like dry mouth, you get nausea.
Interesting.
It's
All
all
right.
part of the...
Another play there. Very good. All right, let's get back to some of these earnings here. Caterpillar, some really strong numbers here. And when we want to talk all that big machinery stuff, we go to Chris Cialino. He's at Bloomberg Intelligence, follows all those big engineering companies, construction companies. Chris, talk to us about Caterpillar here and their quarter.
Yeah, Cat continues to deliver against pretty lofty expectations with another top and bottom line beat this quarter. Really solid across the board, highlighted by better than expected performance in their construction business and sustained momentum in power and energy. But I think really more importantly here, their record backlog continues to grow significantly quarter over quarter. And management raised their long-term 2030 growth targets. They also announced that they're going to invest in some additional large engine capacity expansion. So the long-term visibility just continues to improve, which we think, should continue to drive this upward earnings cycle revision.
And this is something that Matt Griffin of Bloomberg News has highlighted. He came on to talk to us about how Caterpillar was another way to play the AI boom. How much of this backlog and the growth that Caterpillar is seeing is directly tied to AI build-out?
So it's a large portion, right? It's, now power and energy is approaching, roughly half the size of the business. But I think one of the takeaways I took from this quarter was that the backlog was really up across all businesses. And it's kind of at a unique time for Caterpillar in that not only do we have all these secular tailwinds on the power generation side, but now we're starting to see the cyclical tailwinds start to kick in terms of construction and mining. So all three businesses really starting to contribute to the overall enterprise.
And shares of Caterpillar today are up 8.8%, up 53% this year, up 184% on a trailing 12-month basis.
Wow.
52-week high, an all-time high for the stock. $880 a share. They need a 10-for-1 split badly, I think. So is this, because of the power business, Matt, when I think of, company like Caterpillar, I think of a cyclical business. Is this making this business less cyclical?
It may help mitigate some of the cyclicality. At the end of the day, I don't think it changes the underlying fundamentals of the business. This is still ultimately going to be a cyclical business over time. But you're certainly seeing that, the power and energy business, that backlog just continues to grow. So we have that additional production visibility, which has really helped, provide a little bit of a floor, at least during this downturn, as construction and mining were quite soft over the past few years. So short answer, it helps mitigate it, but longer term, it's going to be a cyclical business.
Okay, I'm still kind of stunned by some of the numbers that Paul just rattled off. Who is Caterpillar's biggest competitor? Who picks up some of the slack that Caterpillar can't get to?
Yeah, I mean, as Paul alluded to, I mean, the numbers are quite staggering, and really, if you look at the valuation, it's quite hard to digest as well. But you know, they continue to deliver and exceed expectations. It seems like quarter in and quarter out. In terms of competition, you know, if you think about some of the more traditional equipment, particularly in the dirt or mining, it's Komatsu. They are the largest competitor to CAT, particularly on some of the equipment businesses. You also have Deere, who's trying to, you know, make bigger inroads into construction equipment. They're launching a whole new excavator lineup. And then there's a number of other regional players, the Hitachis, Volvos of the world. And then on the power gen side, it's pretty diverse. You know, where CAT plays, it still tends to be kind of at the smaller end of the spectrum.
Right.
So think, you know, companies like Cummins, who also have the standby or backup power capacity.
Yep. All right, Chris, thanks so much. Really appreciate it. Chris Cialino covers all the machinery companies, industrial companies for Bloomberg Intelligence. Red headline crossing the Bloomberg terminal here. ECB officials see June hike if energy prices don't ease first. So that's just kind of putting it out there.
Yeah, well, investors and traders had already priced in 2 rate hikes for this year. You know, we're not moving in that direction in the U.S. yet. There's some discomfort among some policymakers that you know, the next move would more likely be a cut. But there you have it, tightening because of rising oil prices. Obviously, Europe much more affected by rising oil prices than the U.S.
Got it. All right, F1. I saw the movie, but that's about my extent of the knowledge of Formula One racing. But it is big business on a global scale. And F1 comes to Miami this weekend, which means we had to send Matt Miller down to Miami because he's our car dude. He's our racing dude. Matt Miller, Open Interest co-host on Bloomberg Television and co-host of the Hot Pursuits podcast. He's down there in Miami. And Matt, just Formula One and Miami seem absolutely perfectly suited to one another. Talk to us about what's happening in Miami.
They are actually really perfect for each other. By the way, did you like the movie? Because I didn't love the film, even though I'm a huge fan of Brad Pitt and a huge fan of racing. I didn't think it was that great.
Well, I liked it because I'm not a fan, so I didn't know what was really accurate and not accurate, so I could see if you were a big fan and you'd say, hey, that's not really how it is. But it was good.
I would say, like, look, we've had 3 races already this year: Melbourne, China, and Japan. And I would say F1 was better than Melbourne, but not as good as China, and definitely not as good as Japan. The racing has gotten better and better and better in each successive venue, and now I expect Miami to be the best of the bunch, mainly because they've made some rule changes for this race. And at the beginning, passes where one guy goes past the other, and then he gets repassed, and then he gets repassed, and he gets repassed, and it felt very much like Mario Kart more than actual wheel-to-wheel, edge-of-your-seat, like nail-biting racing. But they got it back a little bit in China and a lot better in Japan. Really, Ferrari has been the best to watch. Leclerc versus Hamilton have been great battles in the last 2 races. But they're going to reduce that boost to some extent. They're going to reduce the amount of energy that you can or have to harvest with these big electric motors and not such big batteries. And I think that's going to make the racing much better this weekend here in Miami. By the way, 275,000 people will be watching the race, probably more than 3 million people on TV. So it's a huge draw for Formula One, for Miami, a big win.
It's also a great people watching opportunity, Matt. Who is going to be attending the races, and who are you looking to speak with? Who are you looking to, you know, rub elbows with?
I mean, for me, the most important people to watch and talk to will be the team principals and the drivers. So, for example, I just spent about 30 minutes here at Bloomberg House talking to Mattia Binotto. If you follow Formula One, you'll know he's now the team principal of Audi, but he's been with Ferrari for the last, like, 30 years. He started out when Schumi did in 1991 working under John Todt, so he's a legend already. I was hoping to talk to Toto Wolff a little bit later tonight. I think he may have heard my commentary on the regulations, and so that interview is off. But I may get to sit down with Fernando Alonso, who is like a legend legendary driver. He's done 2/3 of the Triple Crown, and he just actually had his first baby last month. So those are the people that I'm most interested in. I know there are famous people at the race. You're going to see probably a Brad Pitt here. You might see
right.
Who else? Keanu Reeves. Maybe Joey from Friends. I know he's big into motorcycle racing, but I'm more interested in the drivers and the mechanics.
All right, Matt. Great stuff. Enjoy it down there. There's nobody better for Bloomberg to be down there covering this than Matt Miller, Open Interest co-host on Bloomberg Television, co-host of the Hot Pursuits podcast with Hannah Elliott. They do some cool stuff, looking at all the cool cars around the world. So that's how he rolls. I'll be at the Jersey Shore.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Signs of economic strength fueled optimism about the outlook for corporate America, driving stocks toward their best month since 2020. We do check those markets for you all day long here at Bloomberg. The S&P 500 up 0.4%. NASDAQ up just about 0.1%. The Dow is up a little more than 1.1%. The 10-year Treasury yield at 4.38%. The 2-year yield at 3.89%. Oil prices starting to cool off a bit now after Brent touched a 4-year high, topping $126 a barrel. WTI now closing in on $105 a barrel. Brent crude now topping $114 a barrel. Applications for U.S. unemployment benefits plunged to the lowest level since 1969. The Labor Department reports initial claims fell to 189,000 for the past week, well below the 212,000 forecast in a Bloomberg survey of economists. Filings have remained subdued despite high-profile companies like Meta and Nike announcing job cuts, signaling the labor market continues to be in a low-firing environment. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Blue Owl Capital. Fee-related earnings and assets increased as the alternative investment firm leaned on other parts of its business amid souring sentiment toward private credit. The market liked it. Stocks up 14% here on those earnings. David Havens joins us, senior credit analyst, Bloomberg Intelligence, in our Bloomberg Interactive Broker Studio. David, talk to us about Blue Owl. Just give us the folks who don't really know what Blue Owl is. What do they do, and what did they tell you with their earnings?
Yeah, so Blue Owl is an alternative asset manager. It's a relatively new kid on the block in alternative credit and in private capital. Primarily focused on credit, but it's got a varied ecosystem. Credit is about half the business. They're also involved in real estate and general partner stakes business. The principals of Blue Owl have been on the street a long time. They're very well known, and the principals have terrific reputations.
They have good reputations, but the company itself has kind of become a poster child for all the private credit concerns that have been hitting this market. How much of that is fair?
Yeah, so I think that there is a buildup of for lack of a better term, fumes in the private credit world. Maybe it started off with a couple of high-profile bankruptcies last year. Jamie Dimon talking about cockroaches in the direct lending private credit world. Which is somewhat ironic because many of these cockroaches happen to be on bank balance sheets rather than alternative asset management balance sheets, but cockroaches nonetheless. And then it just sort of continued to build. Then you had fear over AI's impact on software. Firms like Blue Owl tend to have a significant presence there. And the spark that sort of lit things on fire here was Blue Owl back in January. Was attempting to merge two of its entities together. That deal was scuttled, and in the process, they ended up selling some assets near par that they used to help redeem some of the capital for investors that wanted out, and that just sort of set off a bit of a firestorm.
Doug Ostrover, the co-founder. I know that guy from First Boston back in the day.
Mm-hmm.
Wow, good for him.
Yep.
So what's this company, what's this stock to do? Is this just a company that's just got to put its head down, put up 3 or 4 quarters of solid earnings and then kind of earn its way back into the marketplace?
Yeah, I think it's telling that in the first quarter, despite all the sort of hand-wringing that went on, they managed to draw $11 billion of new capital in to support their funds. They had double-digit growth on a year-over-year basis. And I think that, basically what they need to do is just go about their knitting. They're asset managers, and if they can continue to put up good numbers, which they've been doing, generally double-digit returns in their funds above benchmark levels, then I think that investors will probably stay with them. I think that what we saw in the first quarter is maybe some of the hotter money, some of the investors, particularly in private BDCs, that may not have read their offering circulars.
It's right on the front page.
Or read it and don't care.
Yeah, or were texting while they were, while the risks were being explained. I think that they hit the panic button. By and large, most investors stuck with them.
Who are these investors who were seeking redemptions beyond the 5% that they're allowed to? I mean, what do we know about how sophisticated these investors are? Or were they just putting in the request just to see if they could get it?
Yeah, I think it's probably a fairly wide net. If you sort of think in terms of the gatekeepers here might be the financial advisors. They tend to be a little bit more sober. Some of the investors, which includes an international cadre of holders, I think may have been the first ones to sort of push the eject button here. But it's a wide range of generally high net worth individuals that are investing in non-publicly traded business development companies.
All right, David, thanks so much. Scott, I always feel like when David comes in studio, we're the only thing standing between him and a golf course. Like the first tee. David, thanks so much for joining us. Dave Haven, Senior Credit Analyst for Bloomberg Intelligence. Let's switch gears back to the market. Again, we got green on the screen here for sure, led by the Dow Jones Industrials. Thank you, Caterpillar. Andrew Graham joins us here, managing partner, Jackson Square Capital, based out there in San Francisco. So much like I stereotype people, I guess, from tech.
Qualcomm assets, and the fact that we're present everywhere. Our engagement with the cloud companies right now, they look at our devices at endpoints for AI. And that's also exciting. I think we're talking with all the AI companies about their new and exciting devices.
What's less exciting has been supply chain disruption, but you were really clear with investors and they liked it quickly with 30 seconds. Memory, you see an endpoint, at least in China.
Yeah, the reality is everything needs memory, and AI drives more memory demand. They drove a lot of demand at the data center. It caused a crunch on the consumer electronics. The good thing is we now see the bottom. As I said in the call, we're under shipping market demand. We look at customer activations of devices and sell-through data. We see what the demand is. That's now we can call the bottom. Right. And, there's going to be more supply and more suppliers, and we'll see.
Thank you very much.
All right, that was Cristiano Amon, Qualcomm CEO, speaking with BTech anchors Caroline Hyde and Ed Ludlow. As Ed was just mentioning, Qualcomm stock, the company reported earnings. Market like what it saw. Stock is up about 17% here today, so certainly getting some of those tailwinds from AI that most of these tech companies are searching for. And we're going to have Apple after the close tonight. That's going to be the big one today. Apple earnings after the close. Carol Massar and Tim Stenovec will bring all that. They break that stuff down as it is reported. Picking winners and losers here. Alphabet's Google is seeing a clear payoff from its AI spending with solid growth at its cloud computing unit and a, quote, meaningful acceleration in growth driven by demand for its AI software and infrastructure. That's it right there. And you're seeing that in the stock here. Stock of Alphabet is up 7% here today, 52-week high. On the other side, Meta Platforms is lagging behind, according to Bloomberg News, with its shares tumbling after the company boosted 4-year capital expenditures at it and its customer AI app being slower to take off compared to Google. So Meta stock down 9% today. Again, this is a company with a market cap of $1.55 trillion. So it's just extraordinary how the market's trying to discern winners and losers here. The 4 companies overall, including Amazon and Microsoft, are increasing their spending on AI with a total estimated spending of as much as $725 billion just for 2026. And investors are assessing how their interests are impacted by potential payoff of AI leadership. So there you go, folks. That is the story in tech right now. And it was a busy, busy week. Yesterday with the big 4 tech companies and now with Apple after the close here today. Again, it used to be just buy NVIDIA, buy the chip makers, and that was your AI play. Now investors are broadening out kind of as we get a greater understanding how AI is impacting not just the tech industry, but industries across the board here. And that's kind of what the market is right now. If you look at the market today, the S&P is up 34 points. The Dow Jones is up 730 points. That's due in large part to Caterpillar. They had some great numbers today. They called out artificial intelligence as a big source of their business growth there with the data centers and need for power. So that was interesting. NASDAQ up 41 points. So we get some green across the screen here. Oil still an issue here. We do have Brent crude down $3.95 at about $114. Brent crude last night traded as high as $126 per barrel. So really some concerns about the Strait of Hormuz some strong rhetoric coming out of the leadership of Iran about the Strait, and that caused the oil to spike last night and early this morning. We've come back a little bit, and right now trading down just a little bit. WTI crude oil down about $2.85, right around $104 per barrel, so we'll keep an eye on that. Yields coming in today, 10-year Treasury yields in 3.7 basis points, 4.39% on your 10-year, so coming back a little bit, but again, a little bit higher than we were just a couple of weeks ago. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 122. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. S&P up 34 points, the Dow up 700 points, that's 1.5%, and NASDAQ up 31 points. This is Bloomberg. Good morning.